segment 6 input tax credit. So please take page number 77. Page number 77, input tax credit. So which is a very, very important chapter. And so question number 1, that is a consolidated question, will always be on this input tax credit, and even other places also input tax credit related provisions will be referred. So this input tax credit, there is one new section that has been added, section 41. Section 41 talks about computation of ITC to be availed in GSTR 3B. What does this section 41 says? That whenever supplier files GSTR 1, GSTR 1 is a return to be filed by supplier containing the details of outward supplies. GSTR 1 is what? A return containing the details of outward supplies. And based on GSTR 1 of the supplier, whatever outward supplies that are reported by supplier in GSTR 1 will be made available to recipient in one statement. What is that statement? GSTR 2B. Already I gave you the discussion related to that. So supplier will be filing GSTR 1. Based on the GSTR 1 of the supplier, the data will be reflected to GSTR 2B of the recipient. So based on GSTR 2B of the recipient, so he can take ITC in 3B. Okay. Now here there is one doubt. Many people are having this doubt, that is, if GSTR 1 has been filed, whether they will pay tax at the time of filing GSTR 1? No, they will not pay tax at the time of filing GSTR 1. GSTR 1 is mere document which contains the details of outward supplies, but we will not pay any tax at the time of filing GSTR 1. But when we will pay tax? At the time of filing GSTR 3B. Now you are my recipient, I am your supplier. I filed GSTR 1, but I have not filed GSTR 3B. I just filed only GSTR 1. I have not filed GSTR 3B. So whether this data will be reflected in your 2B or not? Yes, it will be reflected in your 2B. So because 2B is not based on supplier's 3B. 2B of the recipient is based on GSTR 1 of the supplier. So supplier, whenever he files GSTR 1, immediately that ITC will be reflected in GSTR 2B and it will be availed. Now supplier did not file GSTR 3B, means what? Tax paid or tax not paid? Not paid, but reported in GSTR 1, but the tax is not paid. So GSTR 3B not filed by me, which means I reported the liability in GSTR 1, so therefore that got reflected in your GSTR 2B, you availed it as ITC, but I have not yet paid the tax. Now in this case, you should reverse the ITC what you have availed. Why? Because one of the condition for availment of ITC is that supplier should have paid the tax on that supply. Then only recipient can take ITC. There are conditions for availment of ITC, section 16. In that conditions for availment of ITC, one of the condition is that supplier should pay the tax. So therefore, only when I pay tax you will take credit, or whether I pay tax or not you will take credit? No, whether I pay tax or not you will take credit. Okay, but if I am not paying tax you will reverse the credit. Is it clear or not? What is the time limit within which I need to file GSTR 3B? So there is a prescribed time limit. By that time if I file, you don't have to reverse the ITC. Is it clear or not? If I am not filing the GSTR 3B by that prescribed time limit, then you need to reverse the ITC. Clear? Now what is that prescribed time limit by which I need to file GSTR 3B? This point is not applicable for May 23 exam. Which point? Time limit by which the GSTR 3B needs to be filed is not applicable for May 23 exam, but it is applicable for November 23 exam. But nothing wrong in knowing it, just one point only, that is, by September of the next financial year, I need to file 3B. For this financial year, I need to file GSTR 3B by when, pa? September of the next financial year. Then you don't have to reverse the ITC. But if I am not filing 3B by September of the next financial year, then whatever ITC availed based on your GSTR 2B needs to be reversed along with interest. Along with interest. Again I am repeating, carefully listen. Supplier will be filing GSTR 1, step number 1. Okay, supplier will be filing GSTR 1. Based on that, what recipient will do? It will be reflected in GSTR 2B of the recipient. So recipient will take the credit based on 2B. Done. Understood this step number 1? Supplier will file. Based on that, it will be reflected in of recipient, and recipient will take ITC based on GSTR 2B. Done. Understood this? Now, supplier has to file GSTR 3B within the prescribed time limit. Suppose if not filed within the prescribed time limit, what recipient should do? Reverse the ITC so avail along with interest. Understood? So this much you remember, that is sufficient. Now, so which means you will take ITC only when supplier files 3B or supplier pays tax, or whether supplier paid tax or not, we will avail ITC. Whether supplier paid tax or not, we will avail ITC. But the supplier has to pay tax at a later point of time by filing 3B. You understood? Now, how much ITC that we avail in 3B? Whatever ITC that is reflected in 2B, that is called as matched ITC. Whatever ITC that is reflected in 2B is called as matched ITC. And will that differ between your books of accounts? Will that differ between your books of accounts and 2B? Yes. That already I told you in the first class itself. Supplier did not file GSTR 1, but he gave an invoice to us. Because of that reason, it will be reflected in our books, but it will not come in GSTR 2B. Do you remember that? So I told you A, B, C, A filed GSTR 1 properly, B did not file GSTR 1, C filed GSTR 1 but with wrong information. So we will take ITC based on the invoices, but actually in GSTR 2B only based on supplier GSTR 1 it will be coming. So therefore, will there be mismatch between GSTR 2B ITC and the real ITC? Yes. But which one only we should take? Only as per 2B. In this 2B also you need to make some adjustments. Directly whatever is reflected in 2B we cannot take as credit. As per section 41, self-assessed credit should be taken. What is that self-assessed credit? Whatever is reflected in 2B minus blocked credits. There are some purchases which are considered as blocked credits, which means you should not take ITC with respect to that. But that will also be there in GSTR 2B, because the portal don't know whether it is a blocked credit or not to you. So due to that reason, so GSTR 2B contains some inward supply data which is actually blocked credit for us. So even though it is matched ITC, can we take that credit? No. So we should eliminate. Is it clear? So that is the first thing, minus blocked ITC. Minus, you have some purchases which is used for your outward supply which is exempted. You are purchasing something and used for exempted outward supply. Can you take ITC with respect to that? No. Because if you remember this point also I stressed long back, if your outward supply is exempted, you cannot take ITC on your inward supply. So therefore, when my inward supplies are used for exempted outward supply, this data also will be reflected in GSTR 2B, but I should not take this credit. So therefore, that is also eliminated. ITC with respect to exempted supplies. Are you looking into this? So first, what is the base? What is the base to be taken? ITC reflected in 2B. ITC reflected in 2B. 2B of recipient. Who will take ITC? Recipient only will take ITC. So ITC reflected in 2B minus blocked ITC which is there in 2B. So we should take out minus inward supplies which are used for exempted outward supplies minus you have made some purchases which is used for, not used for business purpose, means used for personal purpose. Means, can you take ITC with respect to that? No. Because Section 16, conditions for availment of ITC says that only if the inward supplies are used or intended to be used in the course or furtherance of business, we can take ITC. Only inward supplies which are used or intended to be used in the course or furtherance of business, we can take ITC. Means we are making some purchases which is not used for business purpose, we cannot take ITC. For example, I purchase a laptop and that laptop I am not using for taking classes, but that laptop I am using at my home for my children to attend some online classes, etc. Can I take ITC with respect to that? No, because inward supply used for what purpose? Non-business purpose. But portal don't know whether it is for business purpose or non-business purpose. So therefore this data also will come in GSTR 2B. The moment I buy laptop, I will be giving my GSTIN. So therefore that input tax credit will be coming in 2B. But I should not take credit. So therefore what are the three exclusions from the ITC as per 2B? Come on. Blocked credit, inward supply used for exempted, and inward supplies which are used for non-business purpose should be taken out. Now, one we need to add, that is GST paid under RCM. When I am making some inward supplies on which I need to pay GST under RCM, Sir, CG, got, salads, in that whatever GST I paid under RCM, will not be reflected in my 2B because my supplier is not paying, I am paying. So means it will not come in 2B. Even then, we can take ITC with respect to that. So that is the only exception. What is the only exception to matched credits? General rule matched credit only can be taken. But only one exception we have. Even though it is not coming in 2B, we can take. What is that? GST paid under RCM. GST paid under RCM, whether we will take it as credit in the same month or next month. Same month. So this month we are paying tax under RCM. This month itself we can take it as ITC. So therefore, now you get finally one number that is called as ITC availed in GSTR 3B. So can you tell me what is ITC availed in GSTR 3B? Come on. ITC reflected in GSTR 2B minus blocked credit minus inward supply used for exempted outward supply minus inward supply used for non-business purpose plus GST paid under RCM. So that is called as ITC availed in GSTR 3B. Done? Now, what is the procedure for availment of ITC in 3B? Say this. First, Mr. A, B, C and D are the suppliers from whom ABC and Company, a trader, has made a purchase. ABC and Company, a trader, has made purchase from ABCD. A filed GSTR1. ABCD raised invoices to ABC and Company. So what is the invoice value? 1 lakh plus 12,000, 50,000 plus 9,000, 1 lakh 50 plus 27,000 and 2 lakhs plus 10,000. Now as per invoices, how much is the GST paid? Please calculate and tell me total. What is the GST paid on invoices? 12,000 plus 9,000 plus 27,000 plus 10,000. 58,000. So therefore ITC reflected in our books is 58,000. But can we take this 58,000 as ITC in 3B? No. So we need to check what is the ITC reflected in 2B. So that ITC reflected in 2B is based on GSTR1 of the supplier. A is filing GSTR1 with 1 lakh plus 12,000 and B has not filed GSTR1. So he missed filing GSTR1 by the due date. Then C filed GSTR1 1 lakh 50 plus 18,000. Wrong GST he mentioned. Then D filed GSTR1 2 lakh plus 10,000. So now based on GSTR1, what is the tax paid by the suppliers? 40,000. Which means in 2B, how much will be reflected? Only 40,000. So therefore, how much can be availed as ITC? Is it 58,000 or 40,000? Only 40,000 can be availed as ITC. And what is the unmatched ITC? 18,000. What is that 18,000? Nothing but GSTR1 not filed by Mr. B and Mr. C reported lesser GST to the extent of 9,000. That 9,000 and 9,000 only 18,000, which is not reflected in 2B, therefore that cannot be taken. So therefore what is ITC that can be taken in 3B? 40,000. So first ITC in books is 58, but ITC in 2B is only 40,000. And when this 40,000 we will be getting to know, when 2B will be now made available to us. So after 13th, actually this transaction is pertaining to July. So for July, it is 13th August it will be generated. 13th August midnight, the GSTR 2B will be generated. Is it clear? So after 13th August, means on 14th August, 15th August, you can check the GSTR 2B. So that will contain, which means if B has filed the return by the due date, it will be reflected in the 2B. If B has not filed the return by due date, GSTR1 by due date, it will not be reflected. Now what B is doing? B is filing it late. B is filing it late. Now will it be coming in 2B of July month? No. But when B is filing, you see, next page you see, Mr. B filed GSTR1 of July on 31st August, which means, so it will be reflected in GSTR 2B of July or GSTR 2B of August? August. So it will be reflected in GSTR 2B of August. So therefore this trader can take ITC when? August. So for August month he can take ITC. So ITC reflected in 2B of August pertaining to July 9,000. ITC availed in 3B of August pertaining to July 9,000. So therefore July month he cannot take ITC of 9,000. So that 9,000 he can take as ITC whenever it gets reflected in 2B. When it is reflected in 2B, August. For August month they will be filing on 3B na. When they will be filing for August month 3B. So September, 20th of September they will be filing, in that they can take ITC. Okay, but which month? For which month we need to know. When they are filing, when they are taking later but for which month they are taking. For July month can they take ITC? No. For August month only they can take ITC. Is it clear? Fine. Next, what Mr. C did, C rectified is GSTR1. Can the GSTR1 be rectified? Yes. So yesterday only we discussed, there are total 5 time limits. Time limit for availment of ITC, time limit for issuance of credit note, time limit for rectification of GSTR1, time limit for rectification of GSTR3B, and time limit for rectification of GSTR8. So can the GSTR1 be rectified? Yes. So GSTR1 can be rectified. So C has rectified his GSTR1 and reported a further liability of 9,000 rupees. When C is doing this? December 2022. So Mr. C rectified invoice reported in GSTR1 of July in December, which means that extra 9,000 we will be getting in GSTR2B of which month? December month. So therefore they can take ITC in December, that is they can take ITC for December month. So therefore ITC availed in 3B of December pertaining to July 9,000. You understood here? So eventually whenever it is getting matched in future, so then only we can take ITC. So today we can take only matched ITC, but we need to follow up with the supplier and we need to ensure that the supplier is filing GSTR1, supplier is reporting proper details in GSTR1. So in future whenever it happens, at that time we can take credit. So it does not mean we cannot take credit. So when we see, even though 58,000 but only 40,000 can be taken as credit, it does not mean 18,000 we cannot take credit. 18,000 we can take credit, but when we can take credit? In future, as and when B files the GSTR1 and C rectifies the GSTR1. Understood or not? So in exam, these points and all will be given. They will give ITC reflected in GSTR2B of this month is this much, and ITC reflected in 2B pertaining to some prior month is this much. So that amount also we can take as credit. Is it clear? ITC reflected in 2B of July pertaining to July 40,000. ITC reflected in 2B of July pertaining to January 3,000. So the 3,000 we can take as credit. Is it clear? So whenever it gets matched, whenever it gets reflected in 2B, we can take as credit. Then whether taxpayer is eligible to take credit or ITC on all supplies auto drafted in 2B. No. So we have a CBIC FAQ. So they are telling taxpayer would be eligible to avail input tax credit based on ITC indicated in 2B. However, there may be other scenarios for which input tax credit may not be available. What are the other scenarios where input tax credit may not be available? Blocked credit, inward supply used for exempted, non-business, etc. So therefore, taxpayers are advised to self-assess and reverse or take such credit in their 3B. Okay. Now, see this. Illustration 1. ABC Limited receives 100 invoices for inward supply of goods or services involving ITC of 10 lakhs from various suppliers during the month of January 2021 and has to claim ITC in his form GSTR 3B of Jan to be filed by 20th February. So the due date of 3B is 20th of the month following every month. So therefore GSTR 3B of Jan to be filed by 20th February 2021. Suppliers have furnished in form GSTR 1 80 invoices. So even though he got 100 invoices with ITC of 10 lakhs, but ABC Limited supplier has reported only 80 invoices with ITC of 9.7 lakhs on the due date of furnishing details of outward supply. Also GST paid under RCM is 1.5 lakhs. So how much ITC can be availed by ABC Limited in 3B? 9.7 lakhs plus GST paid under RCM 1.5 lakhs. So 9.7 plus 1.5. So total ITC that can be availed is 11.2. What is the ITC which they could not take? Out of 10 lakhs, they took only 9.7 lakhs. That 0.3 lakhs they have not taken as credit. So when they will take credit with respect to that 0.3 lakhs in future, as and when it gets reflected in 2B. Okay. Then, so this is section 41. Now whatever we have discussed so far is section 41, which is an amended section. So this particular section can definitely be tested in May 23 exam for sure. Mark my words. Okay. So this section 41 will be tested. But only thing that you don't have for exam is that what is the time limit by which supplier should file the GSTR 3B. So that is not there, but they have to file it in a prescribed time limit. But you need to remember for exam purpose, if they are not filing within the prescribed time limit, then the recipient has to reverse the ITC along with interest. Then look into the next area, section 49 subsection 5. Section 49, we input tax credit. First we completed section 41, which is an amended section. Then the second area is section 49 subsection 5, manner of utilization of credit. So this manner of utilization of credit, so already we discussed this first point, first rule, that is IGST credit, there is no restriction. So we can use IGST credit for payment of any GST liability. Any GST credit can be utilized for payment of IGST liability. Do you remember? While discussing IGST settlement, I told you. What about the other three things? CGST, SGST, UTGST, respective credit can be utilized for payment of respective liability, and cross utilization is not possible. Say this rule 1. There is no restriction with respect to IGST, which means I have IGST credit. Can I set off with any liability? Yes. Same way I have some credits. CGST, SGST, UTGST credit. Can I set off with IGST liability? Yes. There is no restriction. Second, amongst other taxes, what are the other taxes? CGST, SGST and UTGST. Respective credit can be utilized for payment of respective liability and cross utilization. Can CGST credit be used for payment of SGST liability? No. SGST credit for payment of CGST liability? No. Cross utilization not allowed. Then, so rule 2. So this rule 1 only, so I said in a different manner. That is, IGST is like male and CGST is like his wife, SGST, UTGST is like his parents, IGST so can adjust with his wife and his parents, but his parents cannot adjust with his wife. You understood or not? So therefore, IGST credit can be set off with CGST, SGST, whereas SGST cannot be set off with CGST, CGST cannot be set off with SGST. Then rule 2, priority. So what is the priority? IGST credit, what we should do? First we should use it for payment of IGST liability. Then CGST or SGST or UTGST in any manner, any proportion. So there is no hard and fast rule there. That is, when I have IGST credit, first IGST credit I should use for what purpose? IGST liability. Still I have some IGST credit that I can utilize for payment of CGST or SGST or both CGST and SGST in any manner, any proportion. But I need to ensure that the cash outflow is minimized. That is the objective. Okay. For example, see this. There is one illustration given below. So that illustration only I am discussing. Compute the net GST payable from the following data. Gross GST payable on outward supplies 5,000, 5,000 and 5,000. GST paid on inward supplies 2,000, 2,000 and 10,000. Now, what is the gross liability? CGST, then SGST and IGST. SGST and IGST. So what is the gross liability? 5,000, 5,000 and 5,000. Now, first I have to use IGST credit. So that is actually rule 3. Rule 3 says, before utilizing CGST credit and SGST credit, the credit of IGST should be exhausted. That is given in rule 3. So first, which credit I should spend? IGST credit. Why I should spend IGST credit? Because we have IGST settlement. So depending upon IGST credit utilized for CGST or SGST, the money will go into central government or state government. Until that point of time, this IGST will be in a suspense. So due to that reason, first we need to spend the IGST credit. Okay. IGST credit, how much we have? 10,000. First we will use it for what purpose? Payment of IGST. So we use the, still how much we have? 5,000. Suppose if I use 5,000 for payment of CGST, I can use. If I am using for payment of CGST, then what is the CGST and SGST credit? CGST and SGST credit. What is the CGST and SGST credit? So 2,000, but 2,000 I don't have to use here. Why? Because already liability became 0. And SGST I will use. Can I use CGST credit for payment of SGST liability? No. So therefore, I will have 0, 3,000 and 0. So this is my liability. And what is the excess ITC carried forward? Which credit? CGST 2,000. Now this is utter nonsense. When I am paying 3,000 and carry forward in 2,000, it is of no use, correct? Actually what I should do, I should use this 2,000 also for payment of 3,000, because what is the correct answer? The correct answer is the total of gross liability minus total of ITC should be the correct answer, correct? What is the total liability? Total liability 15,000. Total ITC, so 15 minus 14, so 1,000 is the correct answer. Is it clear? So I should get 1,000 rupees. Then only the cash outflow is minimized. So therefore, this is not the correct way of utilization. Then what I should do? I should ensure that I am not using IGST fully for payment of CGST or SGST. So then what I should do? Use IGST credit for CGST, SGST. So in equal ratio in the liability. So liability is in what ratio? 5,000 and 5,000. So you use 2,500, 2,500, or you use any amount not more than 3,000, because there is 2,000 rupees CGST credit. Yeah, please see. 2,000 rupees CGST credit is there, pa. Then how much we need to distribute to CGST? 3,000, not more than 3,000. Why not more than 3000? Because already 2000 credit is there. Same way, how much we need to distribute to SGST? Not more than 3000. Okay. So that's why we are distributing 2500, 2500. Now, let's see what happens in this case. So, CGST, SGST, IGST. So, gross liability is 5000, 5000 and 5000 minus IGST credit utilized. IGST credit utilized 5000 for payment of IGST. Then 2500 for payment of CGST, 2500 for payment of SGST. Thereafter, CGST credit and SGST credit. CGST credit and SGST credit. How much? 2000 and 2000. So, therefore, the net liability will be 500 and 500 will be the net liability. 500, 500 and 0. So, the total is equal to 1000. Therefore, this is the correct answer. Is this the only alternative? No. We have alternative answers also. How? Say for example, I am utilizing 3000 for payment of CGST and 2000 for payment of SGST. Then what happens to my net liability? 0 and 1000. This is also correct answer because the total should be equals to 1000. The total should be equals to 1000. Sir, how do we know this 1000 is the answer? That's what I gave you the shortcut. What is that? Total of liability minus total of ITC should be equals to some number. That is the correct answer. If you are getting that as the answer, your answer is correct. Is it clear? Total of liability minus total of ITC should be equals to 1000. Now you do anything, but here what should be your net liability? 1000. Now in exam, I request you to add one more column, that is total column. Okay, total column. Therefore, even if here there are any differences in number, in the total you will know whether your answer is correct or not. Understood? So therefore, total 15,000. 15,000 minus, so 10,000 minus 4,000. So therefore, it will be 1000. Okay. So here if you get 500, 500 also, the total will be 1000. Suppose if the suggested answer is 1000 as the answer, but you got 500, 500. Actually correct only. Your answer is also correct. But that valuer, because he is a sadist, he may not give the marks. So that's the reason why when you put a total column, in the total the 1000 is there. So we will get the full marks. Okay. Even for us also cross verification will be easy. So now apart from making 3 columns, CGST, SGST, IGST, one more extra column also you put, that is total. Understood? Now, so what is the first rule that we have studied? There is no restriction with respect to IGST, which means IGST credit can be utilized for payment of any GST liability and any GST credit can be utilized for payment of IGST liability. Between CGST, SGST, UT, GST, respective credit should be utilized for payment of respective liability. Then second rule, priority. IGST credit should be first utilized for payment of IGST liability. Thereafter, between CGST, SGST or UT, GST in any manner, any proportion. Then CGST credit, SGST credit, UT, GST credit. First for what liability? Its liability. Its liability. That is CGST credit for CGST payable, SGST credit for SGST payable, UT, GST credit for UT, GST payable. Thereafter, if you have any balance, use it for payment of IGST. First, we will use it for its liability. Thereafter, if excess balance is there, we are using it for other liability. Is it clear? Then third rule. Third rule says, before utilizing CGST and SGST credit, the credit of IGST should be completely exhausted, which means first you should spend which credit? IGST credit. Only when it becomes 0, then you need to touch CGST and SGST credit. Then rule 4. Rule 4 is, I have multiple credits, CGST, SGST, UT, GST, like that, multiple credits I have, but only one liability, that is IGST liability. For payment of IGST liability, always which credit should be used first? IGST credit. Thereafter, CGST credit. Thereafter, SGST or UT, GST credit. What is the difference between rule 4 And rule 2, this first point. In rule 2, we have single credit, IGST credit, and multiple liabilities. So first IGST credit used for IGST liability, thereafter between CGST, SGST, UTGST in any manner, any proportion. But rule 4 is, I have lot of credits, but only one liability, that is IGST. So first IGST credit, second CGST credit, thereafter SGST or UTGST credit. Understood, pa? So these are the 4 rules that we need to remember. We will not get a standalone question like this, but in the regular question involving computation of net GST payable, there we will definitely apply this manner of utilization of ITC. Then we are moving on to the next area. So we have completed 2 sections so far. Section 41, that is procedure for availment of ITC or manner of availment of ITC, and section 49 subsection 5, manner of utilization of ITC. 41 is how to avail ITC. 49 subsection 5 is how to utilize the ITC. Is it clear? Now, conditions for availment of ITC. We have only 3 sections, 3 more sections. Total 5 sections we have by input tax credit chapter. Section 41, manner of availment of ITC. Section 49 subsection 5, manner of utilization of ITC. Section 16, conditions for availment of ITC. Section 17, apportionment of credit and blocked credits. Section 18, input tax credit in special cases. These are only that we have. Now look into section 16, conditions for availment of ITC. In this, first of all, what is ITC means? Input tax credit, okay, that is GST paid on inward supply. So what is that input tax? So CGST can I take as credit? Yes. So all GSTs I can take as credit. Even GST paid under RCM also I can take as credit, correct or not? So either tax paid under FCM or tax paid under RCM. On import also I will be paying IGST. That also can be taken as credit. Okay. So see the meaning of input tax. Input tax means CGST, SGST or IGST, UTGST, all GSTs. Okay. It also includes tax paid on reverse charge basis and IGST charged on import of goods. IGST charged on import of goods. Whatever GST paid on import of goods also can be taken, but it does not include tax paid under composition scheme. So whatever tax that is paid under composition scheme cannot be called as input tax, because first of all, a person who is opting for composition scheme should not collect the GST from the recipient. Even if he collects GST from the recipient cannot take that as ITC. Okay, again I am repeating, composition scheme is a simplified scheme for payment of tax at reduced rates, but the person opting for composition scheme has to pay that reduced rate out of his pocket. He cannot charge it to the recipient. Suppose by mistake if he charges it to recipient, can the recipient take ITC with respect to that? No. So that's why input tax definition excludes composite tax. Then see this section 16 subsection 1, 2 basic conditions are there for availment of ITC. Only a registered person can avail the ITC. Unregistered person cannot avail ITC. So of course, because to take ITC, first of all, we need to file 3B. Who will file 3B? Only a registered person will file 3B. So therefore, input tax credit can be availed only by a registered person. An unregistered person cannot take ITC. Then second basic condition, the inward supply should be used or intended to be used in the course or furtherance of business. What is the meaning of used? Used means we are using now. Intended to be used. We are not using it now. We purchased it now. We might be using it in future. Can we take ITC now? Yes. Are you understanding? For example, we purchased 10,000 units. In this 10,000 units, 6,000 units we use now. 4,000 units is in closing stock, which we will be using in future. But can we take ITC with respect to that 4,000 units also today itself? And can we utilize for payment of liability? Yes. So it is not like section 32 depreciation. So you buy an asset, only when you use that asset, you can claim depreciation. Correct? Only if the asset is put to use in the previous year, we can claim depreciation. But this is not like that. Whether you used it or you have not used it, you purchased it, you can definitely take ITC. Understood or not? And used or intended to be used. But for what purpose it should be used or intended to be used? Course or furtherance of business. So ITC can be availed on inward supply used in the course or furtherance of business. You just write down there, intended to be used is also covered. Intended to be used. Intended to be used also covered. Intended to be used also covered. Intended to be used also covered. Course or furtherance of business. Course of business means for my existing business. Furtherance of business means some business which I am going to start in future. So course of business means existing. Furtherance of business means something which I am going to start in future. I purchase it now. So then also I can take ITC. So tell me what are the two basic conditions for availment of ITC? Come on. Only registered person can avail ITC. Second, inward supply should be used or intended to be used in the course or furtherance of business. Then next we have additional conditions for availment of ITC. So this is given in section 16 subsection 2. First, there are total 6 additional conditions that we have. Additional condition number 1 should be in possession of the tax paid document. If you want to take ITC, you should be having some tax paid document. What is a tax paid document? Invoice or debit note, some document you should have. So you should be in possession of tax paid document. Okay. So then should have actually received the goods or services. For example, I got invoice in January month, but goods are received or services are received in March month. Now when can I take ITC? January month or March month? I can take ITC in March month. Why March month? Should have actually received the goods or services. So just invoice if I have, that is not sufficient. I should have actually received the goods or services. So now there is one practical difficulty here. That is, so my GSTR 2B of January will contain the invoice details. But I am taking ITC in March month. So January month I have not taken ITC. I took ITC in March month. So but in March month 2B it will not be there. Are you understanding? I purchased goods in the month of Jan. Means invoice is in Jan month. So which means in Jan 2B it will be reflected. But in 3B of January I have not taken credit. Why I have not taken credit? Because I should not take credit, as one of the conditions for availment of ITC is that I should have actually received the goods or services. So as I have not received the goods or service in January month, so I cannot take ITC in January month. Okay. But in March month I am taking. But in March month GSTR 2B, this invoice is not reflected. Now there will be a mismatch because I am taking more ITC than 2B for the month of March. So is this a problem? No, because even though we have taken extra ITC in 3B for March month than 2B, but we have not taken ITC in the month of Jan. So that only we are taking in the month of March. So we can do that way. But now what will happen is that one system generated mail we will get stating that for the month of March you have taken more credit than 2B. So what is the reason for taking more credit? So now we need to give a reply to the department stating that January we have got an invoice, but we received the goods or service in March month. So this ITC pertains to Jan, which not taken in the month of Jan. So we are availing in March. You understood? So practically, this is not for exam. This is only for practicality purpose. Now, for exam point of view, what you need to remember, when we can take ITC, only when we receive the goods or services, not just on the basis of invoice. So what are the two conditions? First, you should be in possession of tax paid document. Second, you should have actually received the goods or services, and the tax should have been paid on such inward supplies. Tax should have been paid on inward supplies. But here we have a relaxation. What is that relaxation? Even though supplier not paid the tax, we can take ITC. Correct? Just now we started with that only here. Section 41. What does I say? What is that I said? So GSTR1 filed by the supplier, but he has not filed 3B yet. Can we take the credit? Yes. So means he has not yet paid tax. Even then we can take the credit. But if he has not paid the tax in future, so then we need to reverse the credit. So therefore, for this condition, what is the relaxation? First we can take the credit. So, but we should ensure that supplier is paying the tax, because if supplier is not paying the tax, we need to reverse the ITC. That's why. So, third condition, tax should be paid on that inward supply. If it is FCM who will pay the tax, supplier will pay. If it is RCM who will pay the tax, recipient will pay. Then, recipient should have filed GSTR 3B. So, because how can we take credit? Only by 3B. I told you. Availment of ITC, utilization of ITC, reversal of ITC, all these things will happen through GSTR 3B. So, GSTR 3B is one return which will be filed by every registered person in that 3B. So, we will have table 4. In the table 4, ITC will be the table 4. So, there we need to enter how much is the ITC that is available. So, therefore, should have filed 3B. Then, number 5, supplier should report the details of invoices in GSTR 1 and it should be made available to recipient in 2B, correct? So we have this also as a condition now. Supplier should file what? GSTR 1. Supplier should report these details in GSTR 1 and that should be made available to recipient in GSTR 2B. Now yet one more condition is also added. ITC relating to such supply has not been restricted in GSTR 2B. What is this? That is, in GSTR 2B, there is something called as ITC available and ITC not available. Like the two things we have, where in GSTR 2B. So, even though supplier reports the invoice in GSTR 1 and it came in 2B, but in 2B, in which place it should come? Under ITC available, ITC not available. ITC available means it should not be restricted in 2B. You understood or not? It should not be restricted in 2B. ITC relating to such supply has not been restricted in 2B. So tell me, what are the 6 conditions? A person availing ITC should be in possession of tax paid document, should have actually received the goods or services, and tax on that supply should have been paid. Then recipient should file GSTR 3B, then supplier should file GSTR 1, and this data should be made available in 2B. Last condition, in 2B it should not be restricted. In 2B it should not be restricted. Okay. If it is restricted in 2B, even though it comes in 2B, but we cannot take as credit, even though it is filed by a supplier in GSTR 1, but it is restricted in 2B. Why it will be restricted in 2B? Why it will be restricted in 2B? For that, we have one section, that is section 38, which you can see in returns chapter. So there is a connection to this in returns chapter. Take page number 182. So give a reference here. Refer page number 182. Why in GSTR 2B the ITC will be restricted? So in the section 16, conditions for availment of ITC, additional condition is there, and last additional condition, 6th point. For that 6th point, below you write, refer page number 182, because it has got a connection to page number 182, section 38, that we are connecting. Now, what is the point that we have discussed last? What is the point that we have discussed last? Supplier filing GSTR 1, but it is reflected in 2B and it is restricted in 2B. Why it will be restricted in 2B? You understood? Supplier filed GSTR 1, it came in 2B, but it is restricted in 2B. Why is it restricted in 2B? We need to understand. Okay. So that is given in section 38. As per section 38, they are telling that GSTR 2B will contain the details furnished by supplier in GSTR 1, and it contains ITZ available and ITZ not available. So as per section 38, again this section 38 is an amended section as per Finance Act 2022, so applicable for your exam. Okay. Auto-populated statement GSTR 2B. Is GSTR 2B an auto-populated statement? Yes. Based on GSTR 1 of supplier, and it contains two columns. What are the two columns? ITZ available, ITZ not available. Why ITZ not available? ITZ may not be available to the recipient as per 2B, even though invoice furnished by supplier in GSTR 1. Even though invoice furnished by supplier in GSTR 1. Even though invoice is furnished by supplier in GSTR 1, but it will be restricted in 2B. Why? Because that supplier is a newly registered business under GST. Huh? What? You purchased from a supplier and that idiot has started business newly, because of which your credit is disallowed. You understood? Means he filed GSTR 1? Yes, he filed GSTR 1. So then why it is disallowed? Maybe he may not pay the tax. Maybe he may not pay the tax. So wait. Until the time he pay tax, we will not give you the credit. So he is a newly started business. How can we trust him? You understood? He is a newly started business. We cannot trust him. Department is telling we cannot trust your supplier. So he may not pay tax also. So wait. When he pay tax, we will give credit to you. Means until the point of time, even though he filed GSTR 1, where the ITZ will be? ITZ not available in 2B. Then when it will be moved to ITZ available? Future. So which means it is my input tax credit. And first hurdle is what? It should be matched. Okay. So already it is suffering a lot. That is, whatever I paid my money I paid to supplier. That idiot did not file GSTR 1. Then I cannot take credit. Already there, Ghana. He filed GSTR 1. So at last I requested him, please file like that. He filed. Even when he filed, now department is telling that it will not be given. Okay. Even if God is allowing, like how priest will stop, like that. So even though supplier filed GSTR 1, but that bloody GST department is not giving the credit to me. Why it is not giving the credit to me? Because supplier is a newly registered business. Okay. Fine. Okay. Then we should not buy from newly registered people. Okay. Then next. Supplier has filed GSTR 1 but not GSTR 3B. GSTR 1 they filed, 3B not filed. Means what? Not yet paid tax. Not yet paid tax. Then whenever you make purchases from such a supplier, your ITC will be disallowed in 2B, even though they filed GSTR 1. Supplier liability in GSTR 1 is greater than GSTR 3B. Means what? He filed 3B. Listen. He filed 3B. See, 3B not filed means problem, no? Okay. He filed 3B. But in that 3B, he did not report full liability. GSTR 1 liability 10 lakhs. But 3B liability is only 2 lakhs. Means what? 8 lakhs he did not pay. You understood or not? So GSTR 1 liability is more than GSTR 3B liability. Okay. So supplier liability in GSTR 1 is greater than GSTR 3B. Then supplier ITZ in 3B is greater than 2B. What is this? Supplier ITZ in 3B is more than 2B. Means he has taken more ITZ. Because of that, they are touching my ITZ or recipient's ITZ. You understood? All this is not the mistake of recipient. Then whose mistake? Supplier's mistake. For supplier's mistake, who is penalized? recipient is penalized. Okay, so why like that, sir? That's how they created a section, and it went in Finance Act also, and it got approved also. Then what opposition is doing, sitting in the parliament, I don't know. So they need to discuss on this only mainly. Sir, this is harassment, sir. It is like, if my supplier is having an issue, then why I should be penalized? Then I should not buy from such supplier. Okay, pa, that is fine, future. I will not buy from such supplier, but already I purchased. What is the solution for that? So no solution for that. So it will be disallowed. Permanently disallowed? No. It will be ITC not available. Then whenever they want, they can put it under ITC available. So whenever supplier rectifies his mistake, you understood or not? So now we need to call our supplier. Boss, till the time you pay everything, don't expect money from me. Okay, I will not give money to you. So only when you pay everything, I will give money. Until that point of time, I will not release money to you. So like that, we need to stop that payment. Okay, some 20%, 30% payment we need to retain, and we need to tell to the supplier, only when you pay everything, I will release the payment. No other go here. Okay, because who is getting suffered because of the supplier's mistake? Recipient. So what is the first reason, pa? Why ITC will be restricted in 2B? Supplier is a newly registered business. Number 2, supplier filed GSTR1 but not filed 3B. Supplier filed GSTR1 and 3B, but liability in GSTR1 is greater than liability in 3B. Number 4, ITC of supplier in 3B is more than 2B. Means whatever is eligible to him, he has taken more than that. Okay. Then next, supplier has received a demand notice and defaulted in payment of tax, and the default continues. Supplier is a bad boy. Okay. And you are purchasing from him. So how you know whether he will have a demand notice or not, etc. and all? You will not know. You will purchase everything in a good faith only. But supplier, he has not paid taxes. So therefore department gave a notice on him. Now as you purchase from such a kind of supplier, so the department will say this much ITC which you have taken on that supplier will be disallowed, which means it will be restricted. You cannot use that. Then supplier has not fulfilled the conditions of Rule 86B. Rule 86B says that we have to pay 1% of our liability through electronic cash ledger. Even though we have sufficient balance in the credit ledger, 1% of our liability we have to pay through cash ledger. That is Rule 86B. For example, my liability is say 8 lakhs. So my gross liability is 8 lakhs. My gross liability is 8 lakhs. My gross liability is 8 lakhs. And I have an input tax credit of 10 lakhs. Logically, I can use entire 10 lakhs for payment of 8 lakhs, na? Yes or no? But what Rule 86B says is that, Rule 86B says, so 1% of my gross liability I have to pay through cash only, which means how much will be payable through cash ledger, how much through ITC, how much through cash ledger. Through ITC I can use only 99%, and through cash how much I need to pay? 1%, which means 8 lakhs into 99%. 7,92,000 I have to pay through credit ledger, and 8,000 rupees I have to pay by cash. Why they created this provision, you know? Mainly to create a cash inflow to the government. Because if entirely credit is used for payment of liability, government will not get anything into their hand, cash. So that's the reason why. So they wanted cash to meet the expenses. So that's the reason why they are telling. So even though you have enough balance in credit ledger, but you have to pay 1% of the liability through cash ledger. Okay. So therefore, if you are not complying with those provisions of Rule 86B, then also who is not complying? Your supplier is not complying. You are complying. Your supplier is not complying. So because of which, from such a supplier, you purchase any goods or services, your ITC will be restricted. Okay. So total 6 cases, ITC will be restricted in 2B, even though supplier reports in GSTR1. What are those 6 cases? Come on. supplier is newly registered business. Supplier filed GSTR1, not filed GSTR3B. Supplier liability in GSTR1 greater than liability in GSTR3B. Supplier availed ITC in 3B more than his 2B. Then supplier has got a demand notice because of default. Okay. And then 6. Supplier has not complied with the provisions of Rule 86B. Now, from such a supplier, you are making purchases even though he filed GSTR1, but this ITC may not be available. Now, see this. So, this is about section 38, which means that, so, therefore, what is the conditions for availment of ITC? So, I have tax invoice and I received the goods or services, and my supplier has paid the tax also, and even I am filing 3B, and supplier reported in GSTR1, it came in 2B. But finally, what you need to check, in 2B it should not be restricted. Why in 2B it will be restricted? Because of the section 38. Understood? Fine. Now go back to conditions for availment of ITC. So as there is a connecting point, that's the reason why I have referred this. Then next, section 16 subsection 3 you see. So we completed 16 subsection 1 and 16 subsection 2. So what are the total 8 conditions we had? 16.1 2 basic conditions, 16.2 6 additional conditions. Okay. Then 16 subsection 3, ITC not available if depreciation is computed on tax component. For example, you purchase an asset for 10 lakhs and on the 10 lakhs, 1 lakh 20 you paid as GST. Now while computing depreciation under section 32 of Income Tax Act, block of assets method, you need to take how much should be added to the block, WDV of the block, so that you can take ITC. You purchase asset for 10 lakhs and you paid GST 1 lakh 20. So how much should be computed? Depreciation should be computed on what? 10 lakhs or 11 lakh 20,000? 10 lakhs. Only when you compute depreciation on 10 lakhs, that 1 lakh 20,000 can be taken as ITC. If you compute depreciation on entire 11 lakh 20, means that 1 lakh 20 cannot be taken as ITC. That is the 16 subsection 3. ITC not available if depreciation is calculated on tax portion. Then 16 subsection 4, time limit for availment of ITC. Already we studied yesterday. What is the time limit for availment of ITC? 30th November of the succeeding financial year or date of filing annual return, whichever is earlier. And there is an exception. Re-availment of ITC reversed. That is, first we took the ITC within time limit. We reversed it. Why we reversed it? For example, section 41. Supplier did not file 3B. So whatever ITC we avail, we need to reverse along with interest. Again, supplier filed 3B. Can we take it back? Yes, we can take it back. But for the taking back, there is no time limit. Even it can be 3 years, 4 years also, we can re-avail. So first time availment only, we need to check the time limit. First time we avail within time limit. We reversed it. Again we are re-availing. For that re-availment, there is no time limit. Is it clear? So therefore, the time limit for availment of ITC is only for first time availment, not applicable in case of re-availment of ITC. Then next we have some FAQs based on this. So we completed section 16, 4 subsections only we have, and in this some FAQs are there. What is the tax paid document on the basis of which ITC can be availed? So this already asked once a short note question. So total 4 documents total 4 documents on the basis of which we can take ITC. So as per section 16 subsection 2, first point you see. So conditions for availment of ITC. A person availing ITC should be in possession of tax paid document. So what are those tax paid document? Tax invoice given by supplier to recipient, and tax invoice given by recipient to supplier. So generally who will be giving tax invoice to whom? Supplier will give tax invoice to recipient. But in one case, only one case, recipient will be giving tax invoice to the supplier, that is in case of RCM. Okay, so tax invoice given by supplier to recipient or recipient to supplier, that is one. Number two, debit note. So when debit note will be given by supplier to recipient, whenever there is a increase in the invoice value, debit note. Okay, and then number three, on import we will be filing one bill of entry. So that bill of entry contains the IGST paid on import. So bill of entry is also one of the document for availment of ITC. And number four, input service distributor invoice, ISD invoice. That is, there is a head office which will take the credit and distribute the credit to the branch officers. So for distributing the credit, for example, corporate office is there here. Below corporate office there are 4 branches. Now this corporate office will take the credit and distribute the credit to those 4 branches. For distribution of that credit, they will be giving a input service distributor invoice. So on the basis of that invoice also we can take ITC. So what are the 4 tax paid documents? What are the 4 tax paid documents? Tax invoice given by supplier to recipient or recipient to supplier. Number 2, debit note. Number 3, bill of entry. Number 4, ISD invoice, input service distributor invoice. Then next, when goods or services are not received but invoice is available, can ITC be availed? That is, generally one of the condition for availment of ITC is what? You should have actually received the goods or services. Now concentrate. So there is a supplier. There is a supplier who made a supply to Mr. A. So they gave invoice to Mr. A, but Mr. A asked the supplier to deliver the goods to Mr. B, his customer. So the goods are delivered to Mr. B. Okay. This is known as bill to ship to transaction. So Mr. A will be which address? Billing address or shipping address? Billing address. Mr. A will be billing address. Then Mr. B will be shipping address. Generally, in case of e-commerce transaction, we see this billing address and shipping address. For example, you want to buy something from Amazon and you buy it to your place. Thereafter, you send it to your friend as a gift. Now, this will incur unnecessary courier cost. Instead, you can place an order in Amazon. You can give your friend's address. So, directly the product will be delivered there. So, you don't have to pay any extra courier charges, but the invoice will be raised to you. For Amazon, you will be the billing address. Your friend will be the shipping address. Like that, supplier is raising invoice to Mr. A, but delivering the goods to Mr. B. Now, Mr. A cannot take ITC. Why Mr. A cannot take ITC? One of the conditions for availment of ITC is what? You should have actually received the goods or services. So, A received goods? No. But A is having invoice. So, therefore, A cannot take ITC. Okay. Can B take ITC on this? No. Because B received the goods, but B is not having the invoice. So, one more condition is what? You should be in possession of tax paid document. So, therefore, B did not get the invoice. Now, both cannot take ITC. How practically it can be done? That's why they have created a deeming fiction. What is the deeming fiction? The date when shipping address receives the goods, it is deemed that the billing address has received the goods and the billing address can take ITC. You understood? So, the date when shipping address has received the goods, it is deemed that the billing address has received the goods and they can take ITC. It is not only for goods, even for services it will be applicable. So, supplier raising invoice to Mr. A, but rendering services to Mr. B, the date when B has received the services, it is deemed that A has received the services. So, A can take ITC with respect to this. Now, this is what usually I will tell in class, that whenever you join coaching, say intermediate coaching and all, you pay the fees along with GST. So that particular GST, your parents can take credit under this deeming fiction. That is, for a coaching center, your parents will be the billing address and you will be the shipping address. Means they are rendering services to you, but they can raise invoice to your parents. So your parents can take ITC with respect to that. Okay. So because deeming fiction, the day when a student has received the services, it is deemed that so the person to whom we raise the invoice has received the services. But only one condition we need to check. What is that? So the student should be part of the business of his parent, because any inward supply we can take ITC provided that inward supply is used or intended to be used in the course or furtherance of business. So if you are part of your parents' business, your parents can definitely take ITC with respect to that under this deeming fiction. Understood or not? So that is with respect to this. So see this, generally ITC cannot be availed, but there is an exception for the same. In case of goods delivered or services provided to a third person on the direction of the registered person, deemed to be received by the registered person. Okay, on the direction of registered person, the goods and services are received by a third person. So whenever the third person has received the goods or services, it is deemed that the registered person has received the goods or services, and ITC is available to the registered person. So in case of bill to ship to transaction, which address can take ITC? Billing address can take ITC. Then when goods are received in lots, how ITC can be availed? For example, we placed an order for 100 numbers of a particular product. First month they delivered 40. Second month they delivered 30. Third month they delivered 30. So 40, 30, 30, 100 they delivered in 3 months. And they raise invoice in the first month itself. Now, can we take ITC for 40 units in the first month? No. Then, when we can take ITC for all these 100 units, we can take ITC only on receipt of last lot or last installment. So, in case of goods received in lots or installments or batches, ITC can be availed only on receipt of last lot or batch. What if invoice is given separately? Say for example, they are sending first month 40 units na, for that 40 units separate invoice. Second month 30 units separate invoice. Third month 30 units separate invoice. Then in that case, can we take ITC in the first month, second month and third month proportionate to 40, 30, 30? Yes. So only with respect to a single invoice, if the goods are received in lots or batches, only on receipt of last lot or last batch, we can take ITC. Then, what is the consequence if the recipient has not made payment to supplier? Very, very important point per concentrate. That is, I am a supplier, you are my recipient, I raised invoice to you. Now, you have not yet made the payment to me. Still, can you take ITC? You did not make payment to me. Can you take ITC? Anywhere it is a condition that recipient should make payment to supplier, then only recipient can take ITC. For example, you take conditions for availment of ITC, registered person only should take ITC. Okay. Inward supply should be used or intended to be used or used in the course or furtherance of business. You should be in possession of tax pay document. I gave an invoice. Then you should have actually received the goods or service, and I have provided the services to you. And supplier should pay the tax. But even if supplier not paid the tax, we can take ITC. And next, supplier should report the details in GSTR1. So nowhere it is a condition that recipient should make payment to the supplier, then only recipient can take ITC. So therefore, can you take ITC? Yes. But there is a condition here. You have to make payment to me within 180 days from the date of invoice. Sir, supplier raised invoice to the recipient. So recipient can take the ITC. But there is a condition that recipient should make payment to the supplier within 180 days from the date of invoice. Then so much of the ITC availed by the recipient, if not paid within 180 days, needs to be reversed. Understood? Again I am repeating, recipient not making payment to supplier within 180 days from the date of invoice. So much of the ITC availed by the recipient needs to be reversed after 180 days along with interest. And what is the rate of interest? 18% per annum. And from when it should be computed? Previously, it was computed from the date of availment, but now it will be computed from the date of utilization. You understood? So previously it was computed from the date of availment till the date of reversal. So whenever you took the credit till the time you are reversing the credit, previously we need to compute the interest. But now there is an amendment in this place which says that you need to compute the interest not from the date when you took, but from the date when you used it, utilized it for payment of liability. So till the date of reversal. Say this: ITC to be reversed or added to output tax liability with interest at 18% per annum if the value plus tax of goods or services is not paid within 180 days from the date of invoice. Upon payment, ITC can be re-availed without any time limit, because for re-availment there is no time limit. Say within 180 days you did not pay per, so you reverse the ITC along with interest. Again you are making payment after 180 days. You can re-avail it as ITC. Means in this process, what is the real loss for you? Interest. So, but interest paid cannot be availed as ITC. And interest computed on ITC availed, ITC availed and utilized, which means we should not compute only on availed and utilized from the date of utilization till the date of reversal. Previously it was date of availment till the date of reversal. Now they changed it to date of utilization till the date of reversal of payment. Now, so related to this, we have one question. Have a look into this, illustration 3, which is in page number 84. ITC restricted means where from you will first avail the ITC. No pa, first you have to avail the ITC and you have not made payment to the supplier within 180 days from the date of invoice. Then so much of the ITC availed you need to reverse. If ITC is restricted, where from you are availing the ITC? You are not availing ITC, then this provisions of 180 days, all this section itself is not applicable. So this section will be applicable when only when you avail the ITC. Okay. If you have, but no break break I did not give. I was explaining. Okay. So if the ITC itself is not availed, the reversal shall not arise. Then this 180 days condition, all these things will be irrelevant. Okay. So listen here, everything I will explain. Don't ask me doubts, because in the break you asked me, because when you ask doubts, others are thinking that it is a break so that they are leaving. Okay. So listen, concentrate. Important area I am discussing. Mr. Ashok, a registered supplier of hardware parts, supplied goods worth rupees 1,68,000 inclusive of CGST 9,000 and SGST 9,000 to Messrs. Shah Traders under forward charge on 14/12/2022, for which tax invoice was also issued on the same date. So what is the date of invoice? 14/12/2022 is the date of invoice. And what is the value for which invoice is raised? 1,68,000 inclusive of GST 18,000, CGST 9,000, SGST 9,000. Then Shah Traders failed to make payment for such supply along with tax to the supplier and availed input tax credit of 18,000 as on 20/1/2023. Because what is the date of invoice? December, 14 December 2022. So you purchased in December. When you will take ITC with respect to the next month 20th, because in 3B only you can take ITC. When you will file 3B, generally 3B due date is 20th of the month following every month. What is the 3B due date? 20th of the month following every month. What is the 3B due date? Generally 3B due date 20th of the month following every month. So therefore, you avail the ITC for December month on 20th January 2023. You avail the ITC. Such availed ITC is utilized for payment of GST liability of March 2023. So you should compute the interest from when to when? March 2023 you should compute. Before amendment, we used to compute interest from Jan 2023. But we need to now compute interest from the date of utilization. Which month we utilize? March. March month, where we will utilize? Which statement we will utilize? Again, this is some nth time I am telling, availment of ITC, utilization of ITC, reversal of ITC will be done in GSTR 3B. Availment of ITC, reversal of ITC, utilization of ITC will be done in GSTR 3B. So GSTR 3B, when we will file? 20th of the month following every month. So when we have utilized March month, means where we would have utilized GSTR 3B. So when we would have filed the 3B of March month? 20th of April. So can you remember this? But please remember all these things till exam. Thereafter if you forget also no issue, because then you have to learn indirect tax only for CA final. Until that point of time you don't have to remember at all. You forget everything. You throw the book like anything after your exam. But until exam, kindly remember this. So availment of ITC, reversal of ITC and utilization of ITC we will do in which statement? GSTR 3B. When we will file 3B? 20th of the month following every month we will file GSTR 3B. Correct? So therefore we utilized in March month. They have not given which date. So what is the date you need to find? What is the date? 20th of April. Not 20th of March pa. In a March month we will not file 3B pa. March month we will file 3B on next month 20th pa. So 20th of April. After March the next month is April. Because January, February, March and April. April is the next month. So 20th of the month following every month. So therefore, what is the date of utilization? 20th of April 2023. Ivulo katrampa enakagavadu olunga solunga please. So 20th March is not the date. 20th April 2023 will be taken as the date of utilization of ITC. So interest should be computed from 21st of April 2023. Previously we used to compute interest from 21st of January from the date of availment. Now we need to compute interest from 21st of April 2023. That is from the date of utilization. Now we are reversing the ITC from the date of utilization till the date of reversal. Now starting point for interest computation we understood. Now what is the ending point for interest computation? Till the date of reversal. Now for that first we need to know when 180 days is completed. For which month 180 days is completed? So what is the date of invoice? 14 December 2022. For this 14 December 2022, you add 180 days. Because what is the time limit within which we need to make payment to supplier? 180 days from the date of invoice. What is 180 days from the date of invoice? So 14 December. In December, how many days? 31 minus 14. 17 days in December. Then 31 days in Jan. Then 28 days in February. Then 31 days in March. Then again 30 days in April. So next 31 days in May. So now how many days so far? 168 days. So what is the balancing figure? 12 days in June. So therefore 14 December 2022, 180 days will be over on 12th June 2023. So now you will reverse after completing 180 days only na, because If you make payment within 180 days, this reversal shall not arise. So the reversal shall arise only when you are not making payment within 180 days. So therefore, the reversal will happen within 180 days, beyond 180 days, beyond 180 days, means after 180 days. Which month 180 days is completed? June, 12th June. So by June, you have to make the payment, 12th June. As you did not make payment by June, so for the month of June, you will do the reversal. So on which date you will do the reversal? 20th of July. Super. So reversal we will do in GSTR. Which form we will do reversal? GSTR 3B. GSTR 3B for June filed on 20th of July. So therefore, we will compute interest till 20th of July 2023. So, what is the interest computation period? Interest at 18% from the date of utilization. From the date of utilization till the date of reversal. Till the date of reversal. Okay. From the date of utilization till the date of reversal. What is the date of utilization? We utilized in March. So for March month 3B due date is 20th of April. So 20th of April 2023 till the date of reversal. So date of reversal. So 180 days is completed on June. So for June we are filing GSTR 3B on 20th July. So till 20th July 2023. Please don't count 20th because 20th only we utilize. So we need to count interest from 21st of April. So therefore number of days for computation of interest. So in April month how many days? 10 days. Because 20th you should not count, from 21st you should count. So in April 10 days and in May 31 days and in June 30 days. So then in July 20 days. So April 10 days, May 31 days, June 30 days, July 20 days. So total 91 days. Only for 91 days we need to compute the interest. And interest computed on what? Total value plus tax. So because this interest we are paying to government. Whenever we are paying interest to government, the interest should be computed on tax component. Okay. So what is the tax component? 18,000. So 18,000 into 18% into 91 divided by 365. 808 rupees you have to pay as interest. So therefore, we need to reverse 18,000 plus we need to pay interest 808. Whether short trader is eligible to avail input tax credit? Yes, they can take input tax credit first. So first they are taking input tax credit 18,000 on 21/2023 and thereafter date of invoice is 14/12/2022. So 180 days is 12/6/2023. So as they have not made payment by 12 June 2023, therefore they need to reverse along with interest. Now, what is the input tax they avail? 18,000. Date of availing 21. But the date of utilization is 24 because March month only they utilize. So 24. Date of payment of ITC added to liability, that is reversal of ITC. For June month we filed GSTR 3B on 20th July. So the number of days, 91 days. Interest will be 808. So total amount that we need to reverse will be 18,000 as ITC and we need to pay interest of 808 rupees. And again, this 18,000 can be re-availed as ITC? Yes. As and when the recipient makes payment to the supplier. So, measure short traders can take benefit of recredit of 18,000 as and when payment is made to supplier after 12/6. But only 18,000 can be re-availed. But this 808 is loss, completely gone. So that we will never get the benefit. Okay. This is the mistake or this is the problem with respect to not making payment within 180 days. So the loss is literally that interest will be the loss. But thank God, interest is now not computed from the date of availment, it is from the date of utilization. What if the availed ITC we have not utilized at all? Whether we need to pay interest or no need to pay interest? No need to pay interest. If we avail the ITC, we have not at all utilized it, we just kept it, and now when we reverse, should we pay interest? No, because we have not utilized the ITC. So that is the advantage we have now. So this information is given in Rule 37. So come back to page number 83. You understood this illustration, pa? Guaranteed, pa. This illustration will guarantee come. Okay, because this is an amendment, May 23 exam. So only first applicable for your exam only. Definitely this illustration will come. That too, it involves interest computation and all. Not necessary ditto this question, but similar lines. In these lines, you will get a question. Okay. Reversal of input tax credit in case of non-payment of consideration. Rule 37 of CGST rules. First, supplier raises invoice to the recipient. Recipient can avail the ITC. Payment is not made to supplier within 180 days of invoice. Now, reversal of interest reversal of ITC along with interest at 18% per annum. Interest computation period. What is the interest computation period? Date of utilization till the date of reversal of such ITC. Treatment in case of proportionate payment. What is this? For example, within 180 days, I paid 60%. Then I should do reversal only for 40%. Okay. Then within 180 days, I paid 30%. So I should do reversal only for 70%. The taxpayer is liable to reverse the proportionate ITC attributable to the portion of value which has not been paid within 180 days. But amended Rule 37 is silent about whether taxpayer is liable to reverse entire or proportionate ITC. Student should reverse proportionate ITC as clarification is provided in this regard. Okay. So Rule 37, even though silent, but there is one clarification, it has been provided by CBIC, which says that you reverse only proportionate. So what you said is correct. Full ITC we don't have to reverse. How much extent we have not paid within 180 days, to that extent only we need to reverse. Then whether the rate of interest is 18% or 24%, in this case it is 18% only, and that has been notified in Finance Act 22. Then no interest if such ITC availed is not utilized. So that's what we have discussed. Suppose we avail the ITC and we have not utilized at all, then whether we need to pay any interest in this case? No. So no interest would arise if ITC availed is not utilized and there is sufficient ITC balance in the electronic credit ledger from the date ITC is claimed. So this is about that non-payment of consideration within 180 days. And in 3 cases, this point 180 days condition is not applicable, which means don't refer to this 180 days condition and don't compute any interest. What are those 3 cases? If the supply is covered under RCM, if the supply is covered under RCM, who is having liability to pay GST to government? Recipient. So therefore 180 days condition is not applicable there. Then deemed supply without consideration, 71C. In case of 71C, first of all, there is no consideration. Wherefrom recipient will make payment to supplier within 180 days. So therefore, that is 180 days not applicable. Then C, that is 15.2b. 15.2b is what yesterday only we discussed. Any amount paid by the recipient on behalf of supplier to some other person, but it is not paid to supplier. Okay, but paid to some other person na. So within 180 days. So therefore this 180 days condition not applicable, because addition made to value of supply on account of supplier liability being incurred by recipient, because supplier is not getting that money. If supplier is not getting that money, then 180 days we need to reverse, but that is not applicable because the payment is made to some other person on behalf of supplier. So in these 3 cases, we don't have to check 180 days condition. So this 180 days condition alone in section 16 is very, very important. So this illustration 3 you mark as important, then 2 more FAQs. With that, section 16 is over. What is the meaning of inward supply on which ITC is availed? Inward supplies are divided into three: inputs, input services, and capital goods. Inputs means, already I told you, those goods which are purchased and charged to P&L is known as inputs. What is capital goods? Goods purchased and capitalized in the books of the purchaser is known as capital goods. Then what is input service? Any service received will be known as input service. What are the contents of invoice for availing ITC? That is, there is a document. The document do not contain all the contents, but some basic details if it is there, then also it will be called as invoice for availment of ITC. What are the basic details that should be present in a document to be called as invoice? Total 6. Supplier GSTIN, recipient GSTIN, description of goods, value of goods, tax, and place of supply if it is interstate supply. These are the minimum details that should be present. What are they? GSTIN of supplier, GSTIN of recipient, description, then value, then tax, and then place of supply. These minimum details should be there. Then the document will be called as invoice for availment of ITC. Even though the document is not containing signature, the document is not containing HSN or SAC, etc. So then also it will be treated as document for availment of ITC. Then one important point which I did not discuss in relation to 180 days. Suppose if the credit period given by the supplier itself is more than 180 days. If the credit period given by the supplier itself is more than 180 days, then in that case, the recipient as per contract is not required to pay within 180 days. Even then the recipient has to reverse the ITC? Yes. So because contract whatever is entered between the parties is irrelevant for GST purpose. For GST purpose, whether recipient is making payment to supplier within 180 days or not made payment to supplier within 180 days, reverse the ITC along with interest. Okay. Then after 180 days, suppose reversal of ITC happened. After 180 days, we paid 60% only to the supplier. How much can be re-availed? Only 60% can be re-availed. So we reversed fully pa. Thereafter we paid money to the supplier only 60%. To whatever extent you paid to the supplier, that much only can be re-availed as ITC. So you paid 60% means 60% only you will re-avail. You paid 40% means 40% only you will re-avail. Is it clear? Then look into this illustration 4. So this illustration 4 is on section 16, all provisions, connecting all provisions. XYZ Limited is engaged in manufacture of taxable goods. Compute ITC available with XYZ Limited for the month of October 2023 from the following particulars. Inputs A 1 lakh, one invoice on which GST payable was 10,000 is missing. Can we take entire 1 lakh as credit or 90,000 can be taken as credit? 90,000. Why can't we take entire 1 lakh as credit? Because one of the condition for availment of ITC is that a person availing ITC should be in possession of tax paid document. So tax invoice is a tax paid document. As this tax invoice is missing, so this person cannot take ITC with respect to 10,000. Then how much ITC can be taken? Only 90,000 can be availed as ITC. Then inputs B 50,000. Inputs are to be received in 2 installments. First installment has been received in October 2023. Right now we are computing for the month of October 2023. This is the first month in which we received first lot. Then balance will be received in future. So can we take ITC now? Why? ITC can be availed only on receipt of last lot. So therefore this is the first month in which we received first lot. So we cannot take ITC now. Full ITC we can take only on receipt of last lot. Capital goods 1,20,000. XYZ Limited has capitalized the capital goods at full invoice value inclusive of GST. Capitalized the capital goods at full invoice value inclusive of GST, and they are calculating depreciation on full invoice value. Can we take this as ITC? Why? Section 16 subsection 3 says, while computing depreciation, if you are adding GST component and compute depreciation on that, you cannot take ITC. Then input services 2,25,000, one invoice dated 21/2022 on which GST payable was 50,000 has been received in October 2023. What is the date of invoice? 21/2023 means what is the financial year? Financial year 2021-22. For this financial year 2021-22, so one second, I'll just change this little bit to 2023. 21-2023. Now answer. What is the financial year? 2022-23. For the financial year 2022-23, what is the time limit for availment of ITC? A. 30th November 2023. So what is 30th November 2023? Or B. Date of filing annual return. Now see the last line. The annual return for financial year 22-23 was filed on 15 September 2023. So 15 September 2023, whichever is, which is earlier? So which means we should take ITC by 15 September 2023, but right now we are in which month? So on this 50,000, can we take ITC in October month? No. So therefore, on this 50,000 we cannot take ITC, then it will be 1,75,000. So the answer is 90,000 plus 1,75,000, 2,65,000. On this 2,65,000 only ITC can be availed. Understood? So here we are taking one assumption that all these inward supplies are reflected in GSTR 2B. So means supplier has filed the GSTR 1. Suppose in these invoices, any one invoice, if supplier has not filed GSTR 1, even though it is eligible, but we should not take the credit because it is not reflected in 2B. Okay. So that is with respect to this section 16, conditions for availment of ITC. Clear here? Okay. Now we have section 17, apportionment of credit and blocked credit. In this, apportionment of credit is simple. Concentrate. I have some inward supplies which is used for taxable outward supplies. I have some inward supplies and these inward supplies are used for taxable outward supplies. Taxable outward. Can I take ITC? Can I take ITC? Yes. Then I have some inward supplies. I have some inward supplies which is partly used for taxable and partly used for exempted. Exempted outward. Can I take ITC? No. Can I take ITC? Yes. But how much ITC I can take? Proportionate ITC I can take. To what proportionate I can take ITC? Taxable proportion. Means how to compute that proportionate ITC? Total ITC into taxable divided by total. For example, if the total ITC is 1,20,000 and the taxable turnover is 15 lakhs and exempted turnover is 5 lakhs. Okay. Then how much is the proportionate ITC that I can take? Total ITC 1,20,000 into 15 divided by 20. 90,000 I can avail as proportionate ITC. So when inward supply is used for taxable outward supply, full ITC we can take. When inward supply is partly used for taxable, partly used for exempted, proportionate ITC we can take. That is total ITC into taxable divided by total. Suppose if inward supplies are fully used for exempted outward supplies. If inward supplies are used for exempted outward, can we take ITC on inward supply? No, we cannot take ITC on inward supply. This is only given in section 17 subsection 2. So goods and/or services used partly for making taxable and partly for exempted, ITC available only attributable to taxable supplies, means proportionate ITC to taxable supplies. And here if you see zero rated supplies, in case of zero rated supplies, actually we have two options. Either we can pay IGST or no need to pay IGST, but even then it will be treated as taxable only. So zero rated supplies, whether you pay IGST and get refund or don't pay IGST and get refund of ITC, so whatever the case may be, your burden is zero, but it will not be treated as exempted for ITC purpose. For ITC purpose, it is treated as taxable, which means I can take ITC on my inward supply when my outward supply is zero rated. In this regard, one super point is there. There is a product which is exempted. There is a product which is exempted, but that exempted product we cannot take ITC, correct? We are making a product which is exempted, pa. Now we have inward supply with respect to that product. We cannot take ITC. Am I right? We purchase some raw material used in making a exempted product. Can we take ITC on that raw material? No. Now this exempted product is exported or supplied to SEZ. Now it will become zero rated. As it becomes zero rated, so we can take ITC on the raw material purchased. Is it clear? So right now the product is exempted, so ITC not available on inward supply. But the moment the exempted product or exempted service is exported or supplied to SEZ, it will become zero rated. When it becomes zero rated, can we take ITC on inward supply? Yes, that is this. Then same way, we have some inward supplies which is used for business purpose. We have some inward supplies and that inward supplies is used for business purpose. Business purpose. Can we take ITC? Yes or no? Yes. And we have some inward supplies. We have some inward supplies which is partly used for business and partly used for non-business, means personal purpose. Can we take ITC? Yes. Which ITC? Proportionate ITC. But here we need to know the ratio that should be given in the question itself. We need to know the ratio that is to be given in the question itself. Say 60% we used for business and 40% we used for non-business. Then how much ITC available? 60%. So of the total ITC, if total ITC is 1,20,000, 1,20,000 into 60%. So this percentage, business and non-business, will be given in the question itself. Then suppose if we have inward supplies and that inward supply is fully used for non-business purpose, means personal purpose, can we take ITC? No. That is given in 17 subsection 1. Goods and/or services used partly for business and partly for non-business, ITC available only as attributable to business purpose. Only to the extent of business purpose ITC available. Okay. So then we have seen 17 subsection 1 and 17 subsection 2. So what is in short 17.1 and 17.2? We can take proportionate ITC when inward supplies are partly used for business, partly used for non-business. We can take proportionate ITC when inward supplies are partly used for taxable, partly used for exempted. See this, meaning of exempted supplies. You can see in page number 88, meaning of exempted supplies, that is, general meaning of exempted supplies we have 3, which we discussed in segment number 2, notified as exempted, nil rated and non-taxable. These 3 are the general meaning of exempted supply for payment of GST. But for the purpose of availment of ITC, we have many other transactions also meaning of exempted supply. So that is what we are trying to understand here. That is, first for payment of GST, what it is, and for availment of ITC, what it is. So I told you these three, what are these 3? Notified as exempted, nil rated and non-taxable. These three are treated as exempted supply for payment of GST. Even these three are treated as exempted supply while computing ITC, because while computing ITC, we take the proportionate ITC. How we will take proportionate ITC? Proportionate ITC is based on total ITC into taxable divided by total. What is the total? Taxable plus exempted. Taxable plus exempted. So therefore, total is taxable plus exempted, and what should be taken as this exempted is what we are trying to understand. Again, I am repeating. Proportionate ITC is total ITC into taxable divided by total. Total is taxable plus exempted. So what is taxable we know, on which we pay GST. What is exempted? So that exempted meaning only we are trying to understand. What are the 3 points that we have learned so far in exempted? Notified as exempted means from time to time through notification government will be giving few transactions as exempted, that exempted supplies. Then nil rated supplies means rate of GST is nil. Then non-taxable supplies, that is alcoholic liquor for human consumption and petroleum products. So these three. Apart from these three, sale of land, sale of building, sale of securities, actually these three are not at all supply for payment of GST, but they will be treated as exempted supply while doing ITC computation. So this is given in 17 subsection 3. Why they are doing that way? Mainly to reduce the ITC availability to a person. So for example, total ITC is 1,20,000 and taxable turnover is 15 lakhs and exempted turnover is 5 lakhs. This is the example we have seen. Taxable turnover and exempted turnover. So 5 lakhs exempted turnover. Now what is the proportionate ITC? The proportionate ITC is, so 1,20,000 into 15 divided by 20, that is 90,000. So this is the general. Now what happened? I sold a land. I sold some land. When I sold some land, the land value, sale value of land is say 20 lakhs. Sale value of land is 20 lakhs. Now automatically the proportionate ITC will change. How? So proportionate ITC, what they are telling, even though land is not a supply, but you need to treat it as exempted supply, which means the proportionate ITC will be 1,20,000 into taxable divided by total. What is taxable? 15 divided by total. In total what I should take? 15 plus 5 plus 20, that is 40. Then automatically the ITC will be 1,20,000 into 15 by 40. 45,000. What was my ITC? 90,000. That is the real ITC. But because of considering sale value of land into the meaning of exempted supply, what happened to the ITC availability? It has reduced. It has come down. You understood this scam that government is doing. So sale of land is not at all a supply, but they are asking us to treat it as exempted supply. So the available ITC will come down. Now what a taxpayer will do? Taxpayer will say, okay, if that be the case, then I don't have any common ITC. Everything used for taxable only, like that he will say. You come and check, okay? You come and check. I am using all invert supplies for making taxable supplies only. So common ITC, if it is there only, now your problem is like that. So common ITC not there. Invert supply used for taxable and invert supply used for exempted. We don't have common ITC. So that is what actually government will make some stupid provisions. Because of that only taxpayers will try to evade that and escape from payment of GST. Because in break someone asked me, sir, if it is invert supply used for non-business purpose, how government will come to know, sir? I will buy that and it may be my personal asset I will be using it for my business like that, I will take ITC. Yes, government will not know. So you can do that. But there is something called as GST audit. GST audit is not applicable to everyone. So it is not conducted by chartered accountant, cost accountant. Chartered accountant, cost accountant means the taxpayer can correct the chartered accountant, cost accountant by paying some money. But it is done by the GST department. And GST department, not every officer will take bribe. You understood or not? Because recently I was caught with a traffic police near that Pachapas signal. And I was not wearing helmet. And so fine, 1,000 rupees fine, and 1,000 rupees fine. So I said, sir, I will give 500 rupees, leave me. So he said, no, I don't need 500. So he then generated a challan. He generated a challan. I said, I have only 500 rupees cash and I will give that 500 rupees cash. No, so I don't need bribe. I will generate challan. If you don't have money also, it's okay, you pay later. But you have to pay the fine, whatever is given. So now, when some officers are that much strict and all, so we can't do anything. So they will definitely ask, okay, you purchase the goods and where is it in the business? Sir, it is not in business. Then where? It is in my home, sir. Then it is used for personal purpose. So therefore, they will disallow the credit at that time. And added to that, they will even ask us to pay the interest and penalty also. So that's how practical it works. That is, whenever we are learning the provisions, you should not think, okay, if I am not doing this, how government will know? You have to, daily get up and go to toilet, then bath and then eat. No, I will sit in toilet and I will eat. Who will ask? Who will disturb you? No one will disturb you. Some people are setting the rules part. This way, you should live like that. No, I will not do that way. So morning, sitting in kakus, I will eat. What is your problem? No one will stop you. It is your headache only. Because of that, you may get some infection, disease, etc. and all. So you face the consequences. Be ready to face the consequences when you commit the offense. Simple, okay? So for that reason, don't ask me if I do that way, how department will come to know. They have some ways to find. They will find and they will, try to collect it. So, but the provisions what we are discussing is that this is how it is created in the law. We can't do anything with respect to that. Only way we can do is that, so we have to use our vote right properly and we should elect proper people and then proper people will make the proper law. Till the time we are selling ourselves for 2,000, 3,000, 5,000 rupees. So we get lawmakers like this only. So buffoons only will become lawmakers and they create a law like this only. We can't do anything with respect to that. Then, so sale of land, sale of building and sale of securities, this is atrocious that it is not a supply but it is treated as exempted supply. And what should be taken as the value? In case of land, building and securities, stamp duty value should be taken as exempted supply in case of land and building. In case of securities, 1% of the sale value of securities will be taken. So, land and building, what will be taken as a value? Stamp duty value. In case of securities, we take 1% of sale value of securities. Then, next one. Supply covered under RCM. Actually, it is taxable supply. Who will pay GST? Recipient will pay GST. But for ITC computation, where we need to keep it under exempted supply. This I discussed while discussing the author point. Author will be opting for FCM because if author opts to pay GST under RCM, then he cannot take ITC on inward supply. So therefore, when my outward supply is covered under RCM, for me it is treated as exempted supply. I cannot take ITC on inward supplies. Okay. So far we have seen 7 points. First 3. What is the meaning of exempted for ITC purpose? Notified as exempted, nil rated, non-taxable. Again, next 3, which are not at all supply but treated as exempted. Sale of land, sale of building, sale of securities. Land and building take stamp duty value. Securities take 1% of sale value of securities. Then outward supply covered under RCM. outward supply covered under RCM is also treated as exempted supplies. Then next, interest on loans, advances, deposits is actually exempted, but for ITC purpose it will be treated as taxable. So far what we have seen, not at all supplies treated as exempted. Now we are discussing there is a really exempted supply, but that is not treated as exempted, but that is treated as taxable. But what they have kept as exempted is big: land, building, securities. Interest is actually a marginal income, so that they are keeping as taxable. So they are telling, enjoy, we are making it taxable, you can enjoy the ITC. But really that interest income is major to whom? Bank, financial institution, NBFC. For them this point is not applicable. You understood? Where really they need to give, there they did not give. So bank, financial institution, NBFC, interest on loans, advances, deposits is treated as exempted only for availment of ITC. But for others only, interest is treated as taxable for availment of ITC. Done? Then transportation of goods by vessel from India to outside India. So vessel, we discussed in yesterday's session, vessel, international waters, both ways will be taxable at present. India to outside India also taxable, outside India to India also taxable. So you need to remember the updated provision. What is the updated provision? With effect from 1/10/2022. For your exam, this is only applicable. For payment of GST, it is taxable. So even for ITC purpose also it will be taxable. There is nothing special. But up to 1/10/2022, this was the provision. So exempted it was for payment of GST, but it is treated as taxable. But this is not applicable at present. So you can ignore this point fully. Okay. So why I have given this, because maybe you would have studied some old provision. So that's why I have given this. This is not applicable at present, which means only one point you need to remember, which is actually exempted but treated as taxable. What is that? Interest on loans, advances, deposits. That too for a person other than bank, financial institution, NBFC. Then export of goods or services and supply of goods or services is what? Zero rated supplies. And the zero rated supplies, even though we have two options for payment of GST, but for ITC always it will be treated as taxable. Now you need to remember only 8 points per. Okay. So what are the 8 points that you need to remember? This, because this 9th point is at present not applicable. 10th point already you know. So what are the 8 points you need to remember? Come on. What is the meaning of exempted for ITC purpose? Notified as exempted, nil rated, non-taxable. Then sale of land, sale of building, sale of securities. Land and building, stamp duty value. Securities, 1% of sale value of securities. Then supply covered under RCM. Then last point, interest on loans, advances, deposits, even though it is exempted for payment of GST, but while computing ITC it should be taken under taxable, and this is not applicable in case of a bank, financial institution, NBFC. Apart from this, any other transaction, if it is taxable for payment of GST, it will be taxable for ITC. If it is exempted for payment of GST, it will be exempted for ITC. If it is not a supply for payment of GST, ignore it for ITC purpose. Is it clear? So these 8 points only you need to remember, pa. Apart from this, any other transaction, for example, sale on high C basis. Sale on high C basis is what? For payment of GST, excluded from supply. So even for ITC you will not consider it as supply. Then so taxable supplies you will consider it as taxable. Exempted supply for payment of GST you will treat it as exempted. Understood or not? Then note 2, you see, I am a manufacturer and I am purchasing some raw material, input service and capital goods. Using this raw material, input service and capital goods, I make some finished goods. So generally finished goods, so if I need to create a good marketability, I need to give these finished goods as samples. So therefore these finished goods are given as gifts or free samples. For example, lot of this hair oil, and shampoo products and all. So initially when they are launching, they will be giving sample sachets. So small sachets they will be giving. So like sample packs, so that people will start using it. And if they like that product, then they will start purchasing the product. So I manufacture some product which I am giving as gifts or free samples. Is it supply or not a supply? Is it 71A? Why it is no? Because there is no consideration. Superb. 71B, no, because it is not import of service. 71C, disposal of business asset on which ITC availed. No, because what I avail ITC is inputs, input service, capital goods. But what I am disposing of is finished goods. Whether I purchase the finished goods? No. So therefore, it will not come under disposal of business asset. Related party? No. And principal agent transaction? No. Consequently, it is not a supply. Correct? But as per CBIC circular, we should treat it as exempted supply, and we need to take the proportionate ITC on inputs, input service and capital goods, which means we need to treat these gifts or free samples as what? Exempted turnover. Understood or not? So what is the 9th point that you need to remember? Already 8 points you remember. Now 9th point, come on. If any manufactured goods are distributed as gifts or free samples, it should be treated as exempted supply, and we need to avail the proportionate ITC. Full ITC not available, only proportionate ITC available. Then next note you see, invert supplies given as gift along with a product. For example, I am manufacturing and selling one health drink, and health drink along with health drink, for example Boost, Bonvita, etc. So this health drink, if I need to make it popular exactly this time, summer holidays, okay. So summer holidays, if I need to make this product popular, I need to give some gift, one bat or one like school bag or one zipper bottle, something I will give as a gift. You understood or not? But this gift, am I manufacturing? No. I manufactured this health drink and I am purchasing the product as, I am purchasing one product, and that purchased product is given as a gift along with this article. Now, one sold product along with one gift, it will be treated as what? Composite supply or mixed supply. Correct? Now, this will be treated as a single supply and I will pay GST on that. So, can I take ITC on the gift that I am purchasing? Yes. So, I can take ITC. Why we need to discuss this point? Because generally, if any goods are purchased and distributed as gifts or free samples, ITC not available. But if the gift or free sample is along with another product, now it will be treated as composite supply, mixed supply. So ITC available. That is this note 3. See that. Invert supplies given by supplier along with the product as quantity discount or gift. Now it will be treated as composite supply, mixed supply. So ITC available on that invert supply which is given as gift along with the product. Okay. Then next, note 4, there is a trader. That trader is purchasing some goods and giving it as gifts or free samples. And on these purchases, they availed ITC. Now will it become supply under 71C? Yes. Where disposal of business asset on which ITC availed. For example, some traders, what they will do, in order to push their sales, they will be giving, if you buy for 500 rupees, so 2 soaps free. If you buy for 1000 rupees, you will get 1 kg rice free. Like that they will be giving offers. So therefore, this free product also they will purchase na. Whatever they are giving as free also they will purchase on that ITC availed. So now when it is given, it will become disposal of business asset on which ITC is availed. Okay. Again they can take ITC on invert supply. So this is what I said in that employer-employee example. Employer purchases a mobile along with GST. If the mobile value is more than 50,000, it will become supply under 71C. Correct? Now can the employer take ITC with respect to that mobile purchased? Yes. Generally, these are all exceptions to inputs purchased and given as gifts or free samples is blocked credit. But for that, we have this as exceptions. Okay. Now, so what is in short you need to remember? Any goods distributed as gifts or free samples, if it becomes supply under 71C, we can take ITC on the inward supplies. Okay. Next, look into this illustration, illustration 5. Measures ABC Traders has made taxable outward supplies of 20 lakhs, GST at 12% and exempted outward supply of 10 lakhs, and in the 10 lakhs, interest income is 4 lakhs and other exempted supply is 6 lakhs. During July 2018, their inward supply for the month is 10 lakhs, excluding GST at 10%. Compute net GST payable. So in net GST payable, there are two parts. First, gross GST payable minus input tax credit, that is net GST payable. Now, please don't see the answer, concentrate. First, we need to compute the GST payable. For GST payable, whether on 20 lakhs should we pay GST? Yes. So 20 lakhs into 12%, how much? 2,40,000. Then on the 10 lakhs should we pay GST? No, because it is exempted. We don't have to pay any GST on that. So our gross liability is what? Only 2,40,000. Understood this point? Now minus ITC. In that ITC, what is the total ITC? How much is the total purchases? 10 lakhs. On the 10 lakhs, what is the GST paid? 10%. That is 1 lakh. But entire 1 lakh, can we enjoy as credit? No. Because this is used for both taxable and exempted, which means we need to take proportionate ITC. How to compute the proportionate ITC? Total ITC into taxable divided by total. What is the total ITC? 1 lakh. 1 lakh. 10 lakhs into 10%, 1 lakh into taxable turnover. From the question, you check and tell me what will be taken as taxable turnover. 20 lakhs, 24 lakhs, 24 lakhs. Why sir 24 lakhs taken as taxable? Just now we studied interest on loans, advances, deposits, even though exempted for payment of GST, but for computing ITC, it will be treated as taxable for a person other than bank, financial institution, NBFC. So therefore it is other than bank, financial institution, NBFC, ABC traders, correct or not? So therefore they need to treat interest as dash for availment of ITC, taxable. So therefore numerator will be 20 or 24? 24, and denominator will be 30. How 30? 20 plus 4 plus 6. That is 30. So therefore 24 divided by 30, they can take ITC. So what is the 24 divided by 30? Calculate 1 lakh into 24 divided by 30. So 80,000, correct? 80,000 can be availed as ITC. So therefore 1 lakh minus 80,000, sorry 80,000, 2,40,000, 2,40,000 minus 80,000, 1,60,000 is the net GST liability. You understood how we got 1,60,000? First gross liability 2,40,000. Please respond. Are you listening or not? So gross liability 2,40,000. How we got 2,40,000? 20 lakhs into 12%. So first we need to prepare a table like this. For payment of GST, for availment of ITC, normal 20 lakhs. Taxable for payment of GST. Even for ITC it will be taxable. But interest exempted for payment of GST. For ITC purpose it will be treated as taxable. Other exempted, it is exempted for payment of GST. For availment of ITC also it will be treated as exempted. So therefore what we need to do is that, so first for payment of GST 2,40,000 is the liability. Now proportionate ITC is total ITC 1 lakh into these two should be treated as taxable. So 24 divided by 30, so 80,000. So 2,40,000 minus 80, 1,60,000 we will get as net liability. Understood? Then next question you see. Pacific International Limited, a shipping company, registered in India has made the following outward supplies for the month of September 2018. Actually, this provisions is as per 2018. So now we will modify it for the updated provisions, because for 2018 there is a change in the provision. What is that? Before 110-2022, before 110-2022, transportation of goods by vessel from India to outside India was exempted for payment of GST, but for ITC it was treated as taxable. Now it is taxable both for payment of GST as well as ITC, so that's why I am just modifying the question. So Pacific International Limited, a shipping company registered in India, has made the following outward supplies for the month of September 2023. Okay, actually the question is answered as per the old provisions. Okay, Vapa. So, but we will answer this as per new provision. Whatever is there in the book is as per old provisions. Okay. First I will explain the old provision, then I will explain new provision, because depending upon the date you need to change it accordingly. That's why. So up to which date the old provision was applicable? 30/9/2022. Up to that date, transportation of goods by vessel from India to outside India was exempted for payment of GST. But for ITC purpose, it was treated as taxable. Now let's see that particular point. Transportation of goods by vessel from India to outside India, 20 lakhs. So up to 30/9/2022 it was exempted. So therefore this 20 lakhs exempted for payment of GST. For ITC purpose it will be treated as taxable. Then second one, transportation of goods by aircraft from India to outside India. So up to 30/9/2022 it is exempted. Okay. And even for payment of GST also it will be treated as exempted. Then transportation of goods by vessel from outside India to India, always taxable. So 15 lakhs will be taxable. On that the rate of GST is 12%, 18%. So therefore 15 lakhs into 18%, 2,70,000. So even for availment of ITC it is treated as taxable, because apart from those 8 points, anything else, if it is taxable for payment of GST, it will be taxable for ITC purpose. Then transportation by aircraft from outside India to India, it is exempted. We studied that. Outside India to India, aircraft is exempted both for payment of GST as well as for ITC purpose. Then transportation of goods by vessel from one place in India to another place in India, if it is for public transportation, goods, specified goods means exempted, other goods means taxable. We don't have specified goods, therefore taxable. 5 lakhs into 18%, and as it is not covered under the list of 8 points, so therefore it is others. If it is taxable for payment of GST, it will be taxable for ITC. So now based on that, how much is the GST payable? 2,70,000 plus 90,000. So that will be the gross liability. And then what is the gross liability? 2,70,000 plus 90,000, that is 3,60,000. Now ITC wise if you see, so total 50 lakhs we purchased. On that excluding GST at 12%, that is 6 lakhs. On that 6 lakhs fully we cannot take credit. 6 lakhs proportionate credit we need to take. So what are taxable for availment of ITC? 20, 15 and 5. So that is 40. 40 divided by total 55. So therefore 6 lakhs into 40 by 55. How much? 4,36,363. This is adjusted from 3,60,000. So excess ITC carried forward. So this is as per the provisions up to 30/9/2022. Now you make note of the answer if the same question is as per the updated provisions. Okay. So because depending upon the question, date in the question, we need to change the answer. That's why I am telling you. So now answer to question number 6. Please write down in your notebook. Answer to illustration 6. Answer to illustration 6 in page number 90. if transaction takes place, if transactions take place with effect from 1/10/2022. Answer to illustration 6, page number 90. If transactions takes place with effect from 1/10/2022. First, particulars for payment of GST, for payment of GST, for availment of ITC. For payment of GST, then for availment of ITC. For availment of ITC. Now, what is the first transaction? Transportation of goods by vessel. From where to where? India to outside India. Now, see your book. So, we have discussed yesterday one provision. Transportation of goods. So, exemptions with respect to transportation of goods and transportation of services. So, what is that I told you in case of transportation of goods? Transportation of goods by waterways. What is exempted at present? We don't have any exemption at present when it comes to international, correct? Only inland waters and coastal water specified goods is exempted. All other cases it will be taxable. So therefore, what is the updated provision for payment of GST? Taxable. And what is the value? 20 lakhs. So on the 20 lakhs, GST will be payable at what rate given in the question? 18%. All outward supplies taxable at 18%. So 20 lakhs into 18%. 3,60,000. Now, is it given under the 8 points that we remember? Notified as exempted, nil rated, non-taxable, sale of land, sale of buildings, sale of securities, interest on loans, advances, deposits? No. So, supply under RCM. It is not there in that 8 points. If it is not there in that 8 points, if it is taxable for payment of GST, it will be taxable for availment of ITC. Then next, second, what is the second transaction? Check the book. Aircraft, where to where? India to outside India. Aircraft, India to outside India. In case of aircraft, India to outside India, again, goods, transportation of goods by aircraft, international, only one is exempted. What is exempted? Outside India to India only exempted for payment of GST, but this is not there in the exemption, so taxable. And for payment of GST it will be 10 lakhs into 18%, that is 1,80,000. For ITC purpose also it will be treated as taxable. For ITC purpose also it will be treated as taxable. Then next, number 3. So why it is taxable for ITC purpose? Because it is not covered under those 8 points. Okay. Then next, vessel. Vessel from where to where? Outside India to India. Outside India to India. Vessel outside India to India. For payment of GST it is taxable. And what is the value? 15 lakhs. So 15 lakhs into 18%. 2,70,000. And it is not in those 8 points. So therefore it will be treated as taxable even for ITC purpose. Then next one. Aircraft from where to where? Aircraft from outside India to India. Aircraft from outside India to India is what? For payment of GST, it will be exempted. So, as it is exempted for payment of GST, notified as exempted. So, even for ITC purpose, it will be treated as exempted. Then, next one. So, vessel domestic transportation. Vessel domestic transportation. Domestic transportation, what is exempted in case of transportation by vessel? So, in case of transportation of goods by vessel, coastal waters, vessel means coastal waters. So, only specified goods is exempted. Other goods will be taxable. So, here we don't have any information about specified goods, therefore, it will be taxable. And what is the value? 5 lakhs. So, 5 lakhs into 18%, that is 90,000. And is it in that 8 points? No. So, therefore, it will be treated as taxable for ITC purpose. Now, all transactions over. Now, we need to know 3 things for ITC purpose. For ITC purpose. What is taxable? What is exempted? And what is the total? For ITC purpose, what is taxable, what is exempted, and what is total? What is taxable? For availment of ITC, so taxable 20 lakhs, then 10 lakhs, 30 lakhs, then 15 lakhs, so 45 lakhs, then 50 lakhs. So 50 lakhs will be taxable. Then what is exempted for ITC purpose? Only 5 lakhs. So total 55 lakhs. Now, gross liability. Gross liability, if you see, gross liability is first. So wherever we have computed taxable, 3,60,000 plus 1,80,000 plus 2,70,000 plus 90,000, that will be 9 lakhs. So gross liability 9 lakhs minus ITC, proportionate ITC. Proportionate ITC. What is it? Proportionate ITC, total ITC into taxable divided by total. What is the total ITC? Total ITC, check the question. 50 lakhs are total ITC, inward supplies, inward supply value 50 lakhs. On that 50 lakhs, what is the GST paid? 12%. This is the total ITC. Out of this ITC, how much is the proportionate that we will take? Taxable turnover to total turnover. What is the taxable turnover? 50 divided by 55. So 50 lakhs into 12% into 50 divided by 55. 5,45,545. Correct? 455. 5,45,000 or 54.5. So therefore 455 we will take, and the remaining will be the net liability. Net liability is the balance, that is 9 lakhs minus 5,45,455, that is 3,54,545. This will be taken as the net liability. Now you understood how to arrive at the answer. See, this kind of question is actually not tested till November 22 exam. This type of question on exempted supplies. So this is an untapped area. They can make a question on this. It's a very good concept. You finished making note of this? Then, so we completed 17 subsection 3, meaning of exempted supplies, along with the illustrations related to that, and look into the next area, 17 subsection 4, special provisions for availment of ITC by banking company and financial institution including NBFC. For a bank, part of its outward supply is taxable and part of its outward supply is exempted. So because interest on loans, advances, deposits is exempted and remaining consideration received by bank will be taxable. So they have two options. They can take proportionate ITC. What is a proportionate ITC? Just now we discussed one, total ITC into taxable divided by total. That is known as proportionate ITC. Whereas option 2 is ad hoc, that is flat 50% they can take as ITC, which means they don't have to calculate taxable by total, 50% they will take. Means what is the assumption? The assumption is that 50% will be taxable and 50% will be exempted, irrespective of what is the actual taxable and what is actual exempted. So that is option 2. But they need to decide between this option 1 and option 2 in the beginning of the financial year. So option 1's exercise that will be applicable throughout the financial year. Say for example, my interest income is 60%, taxable income is 40%. Then how much credit I can take? Interest income is 60%, taxable income is 40%. How much I can take proportionate ITC? 40%. Why? Because my taxable component is only 40%. Then suppose if I go for option 2, how much credit I can take? 50%. So which option is better? Option 2 is better. Then again, suppose if my interest income is only 30% and other income is 70%, how much I can take under proportionate ITC? 70%. But if I go for option 2, I can take only 50%. So which option is better? Option 1 is preferential. So therefore, we need to decide based on this, but we need to decide it in the beginning of the financial year. Option 1's exercise cannot be withdrawn during remaining part of the financial year. Then if you go for option 2, 50% ITC only can be taken, remaining 50% will be lapsed. And that restriction of 50% is not applicable with respect to inward supply from another registration, means inward supply from a distinct person. For example, HDFC Bank Tamil Nadu receives inward supply from HDFC Bank Karnataka. In that case, should they reduce 50%? No, full ITC they can take. Only on that they can take full ITC. On all others, they will take only proportionate ITC, that is 50%. Okay. Suppose if we go for option 1, not only inward supply from distinct person, everything will be proportionate only. So what are the two differences between option 1 and option 2? Option 1, proportionate ITC. How to calculate proportionate ITC? Total ITC into taxable by total. Option 2, 50% of ITC, which means total ITC into 50%. Then second difference, inward supply from distinct person. Option 1, proportionate ITC. Inward supply from distinct person. Option 2, full ITC. Don't reduce 50%, full ITC you can take. That is this part. Now look into this question. This question we will answer as per both the options. Illustration 7. And that bank, financial institution, NBFC, interest on loans, advances, deposits is treated as exempted both for payment of GST as well as for ITC purpose. Axis Bank provides the following information for the month of November 2020. Eligible input tax on input 16,020, eligible input tax on input service 11,340. Value of taxable supply of services 11 lakhs, exempted supply of services 10 lakhs. Determine the amount of ITC available to Axis Bank. First we will take proportionate ITC option. So for that proportionate ITC option, please see this. Option 1, no need to make note, just listen. Option 1, so we have CGST, SGST. What is the gross liability? Gross. Please check the question. What is the taxable supplies? 11 lakhs. On that 11 lakhs, what is the rate of GST? 18%. So therefore, 11 lakhs into 18% means 1 lakh 98,000. Divide it into CGST, SGST. 99,000, 99,000. Then next, minus proportionate ITC. proportionate ITC. What is the proportionate ITC that will be available? So total ITC how much? Total this two, 16,020 plus 11,340. 16,020 plus 11,340, how much? 26,000. 360, 27,360. In this, how much credit will be available? Proportionate to taxable. So what is proportionate to taxable? 11 divided by 21, correct? How 11 divided by 21? Taxable divided by total turnover. So 11 divided by 21. So how much is that number? 27,360 into 11 divided by 21. 14,331 will be reduced. So remaining will be taken as the net liability. So 27,360 into 11 by 21, 14,331. 14,331 you reduce from 99,000. So remaining will be taken as net liability. This is under option 1. How much? 84,669 is taken. Understood proportionate option pa? Suppose if the same question we are doing under option 2, then what will happen? Option 2. Will the gross liability change? No. So CGST, SGST will be gross liability same. So gross liability is same. That is 99,000, 99,000. But ITC will change. So ITC, proportionate ITC. Proportionate ITC. What is that proportionate ITC? It will be 50% of the full ITC. What is the full ITC? So 27,360 into 50%. 13,680 will be reduced. So 27,360 into 50%, 13,680 will be reduced. So what will be taken as the net liability? 85,320 will be taken as net liability. So that is the answer. And now they can go for either 85,320 or 84,669. 84,669 is only less. So they need to decide that in the beginning of the financial year. So this is how you may get a question on banking company, financial institution, NBFC. Then 17 subsection 1 is proportionate ITC, partly business, partly non-business, we will get proportionate ITC. Then partly taxable, partly exempted, we will get proportionate ITC as per 17.2. 17.3 is the meaning of exempted supply. 17.4 special provision for bank, financial institution, NBFC. Now we are discussing a very, very important area, that is blocked credits. So blocked credits, so we need to remember, because in question, in exam, we will have lot of inward supplies. Few are blocked credits, few are not blocked credits. Whenever it is blocked credit, ITC is not available. Okay. Now blocked credits are basically divided into 3: motor vehicle related block credit, construction related block credit, and other block credits. First, motor vehicle related block credits. Motor vehicles are divided into 3. Motor vehicles for transportation of persons, vessels and aircrafts, and others. Others are not at all block credit, which means ITC always available. What will come in others? Motor vehicle for transportation of persons means two-wheelers, cars, bus, etc. will come in motor vehicles for transportation of persons. Vessels and aircrafts also okay. What will come in others? Lorries, trucks, bulldozers, road rollers, cranes. These are all other motor vehicles, and even ambulance also. Why ambulance? Because ambulance is not a motor vehicle for transportation of persons. Ambulance is a motor vehicle which provide the first aid during the transportation. So the purpose is not for transporting persons. So it will come under other motor vehicles. So ITC is available. So other motor vehicles, ITC always available. Then when it comes to motor vehicle for transportation of persons, again that is divided into 2. Capacity does not exceed 13. Capacity exceeds 13. While counting capacity, including the driver seat, we need to take. So now if capacity exceeds 13, it is not a blocked credit. For example, so a company purchased a bus for transporting its employees and the capacity of that bus is 40 seater. Now can they take ITC with respect to that bus? So bus will come under motor vehicle for transportation of persons and the capacity exceeds 13. So therefore ITC is available with respect to that bus purchased. Now what if the capacity does not exceed 13? It is a blocked credit. However, in 3 exceptional cases, ITC available. So motor vehicle for transportation of persons, capacity does not exceed 13 is a block credit. However, in 3 exceptional cases, ITC available. What are those 3 exceptional cases? Further supply means I am purchasing and selling the motor vehicle. I can take ITC, that is further supply. Or I am using the motor vehicle for the business of transportation of passengers. Number 3, I am using motor vehicles for imparting driving skills. In these 3 cases, ITC is available even though capacity does not exceed 13. For example, a company purchased a car for transporting its employees. Whether ITC available or not available. First, capacity, it is used for transportation of persons. Capacity does not exceed 13 and it is not for further supply, not in the business of transportation of passengers, not for imparting driving skills. Therefore, ITC not available, like that. One more example, you need to answer this. A chartered accountant purchased a car for use in his profession. Can he take ITC with respect to the car purchased? Why? Capacity does not exceed 13. And is it covered under further supply used in the business of transportation of passengers imparting driving skills? No. Therefore, ITC not available. Then, a travel agency purchased a car for using it for transportation of passengers. So, can they take ITC with respect to that car? Why? So, even though capacity does not exceed 13, but it is used in the business of transportation of passengers, so ITC available. One more example. A person is into renting of motor vehicles. He purchased a car and he gave that car on renting and collected some rental income. So, whether he can take ITC on that car purchased? Why? Further supply. Further supply not only sale, but that includes even renting of motor vehicles also. So therefore, supply means not only sale, barter, exchange, lease, license, everything will come under supply. So therefore, renting of motor vehicles also coming under further supply, so they can take ITC. Then there is a car driving school. Car driving school purchased a car for teaching driving to the students. So can they take ITC with respect to that? Yes. Even though car capacity does not exceed 13, but it is used in the driving skills, imparting driving skills, so they can take ITC with respect to that. Then one more example. A restaurant purchased two-wheeler for food delivery. A restaurant purchased two-wheeler for food delivery. Can they take ITC with respect to the two-wheeler purchase? Yes or no? So why it is yes? No. Motor vehicle is not in further supply. They are selling two-wheeler. You order for food, they will give two-wheeler. Further supply means two-wheeler should be there in further supply. Okay. So answer is yes. But why? Why? Because it will come under other motor vehicles. Because it is not used for transporting persons. Are they using it for transporting persons? Then what? Food delivery. So means it is not used for transporting persons. It is not vessels and aircrafts. So therefore it will come under other motor vehicles. So they can take ITC. Suppose if a person purchased a two-wheeler for using it in Rapido. Now can they take ITC with respect to that? First, two-wheelers used for transporting persons and capacity does not exceed 13 but covered under the exception used in the business of transportation of passengers, so they can take ITC with respect to that. So that is this. So motor vehicles which are vessels and aircraft. So we have completed other motor vehicles and for transporting persons. For vessels and aircrafts, generally vessels and aircrafts are blocked credits. However, we have 4 exceptions. In case of these 4 exceptions, ITC available. Number 1, used for further supply, used in the business of transportation of passengers, used for imparting driving skills. These 3 are same. But one more extra point is there, used for transportation of goods. So then in this 4 case ITC available, in other cases vessels and aircrafts ITC not available. For example, listen, Reliance Industries Limited purchased an aircraft for transporting its director, managing director, from one place to another place. So now can they take ITC with respect to that aircraft purchased? No, because it is not in further supply, not used in the business of transportation of passengers, not imparting driving skills, not used for transportation of goods. So vessels and aircrafts will be blocked credit. Then another example, there is a car manufacturer. That car manufacturer purchased a ship for transporting the cars manufactured by them from one location to another location. Can they take ITC on that ship purchased? Yes. Which point? Used for transportation of goods. They can take ITC. Then first flight couriers or Blue Dart courier, they have purchased the aircraft for transporting the courier parcels. Can they take ITC with respect to that aircraft purchased? Yes. Where? Used for transportation of goods. Under that category they can take. Then Indigo Airlines purchased the aircraft for transporting the passengers. Can they take ITC with respect to that? Yes. Under used in the business of transportation of passengers. Then there is a company which is giving chartered flights on rental basis. So if you want a flight to go from one location to another location, so they will be giving a chartered flight on rental basis. For that they purchase the chartered flight. Can they take ITC with respect to that aircraft purchase? Yes. Why? Further supply. It is in the further supply, so they can take ITC with respect to that. Then a shipping maritime training institute. A shipping training institute purchased the ship for teaching the students how to operate the ship, what are the parts of the ship, etc. Can they take ITC with respect to that? Yes, because driving schools. Clear here? So now, tell me, motor vehicles divided into 3. What are they? Don't see the book. Motor vehicle for transportation of persons. Then vessels and aircrafts. Then others. Others, what is the treatment? Always ITC available. Then motor vehicle for transportation of persons divided into 2. Capacity does not exceed 13 and capacity exceeds 13. Capacity exceeds 13, what is the answer? ITC always available. Capacity does not exceed 13 is blocked credit. But we have 3 exceptions. What are those 3 exceptions? Further supply, used in the business of transportation of passengers, imparting driving skills. These 3 cases ITC available. Then next, vessels and aircrafts generally blocked credit. But we have 4 exceptions. What are they? Further supply, used in the business of transportation of passengers, imparting driving skills, and used for transportation of goods. That's it, pa. This is about motor vehicle related. Then in motor vehicles, one more point is also there, that is services in relation to motor vehicle. So we are receiving 4 services in relation to motor vehicle: repair and maintenance service, insurance service, and servicing, that is authorized service center service. So what is the difference between repair and maintenance and servicing? So repair and maintenance means we go to a workshop and we will give our vehicle for servicing. So private workshop, that is repair and maintenance. There are some authorized service centers. So like company operated service centers, there if you give, that is called as servicing. Then hiring, renting and leasing of motor vehicles. We are taking motor vehicle on hiring, renting and leasing basis. So rental basis. These 4 services, so with respect to motor vehicles, is eligible for ITC if motor vehicle is eligible for ITC. So you buy a motor vehicle, it is eligible for ITC. Then with respect to that motor vehicle, these 4 services also eligible for ITC. If you buy a motor vehicle and that motor vehicle is eligible for ITC, then these 4 services in relation to that motor vehicle is available or not available accordingly. So therefore, let's take an example again. A chartered accountant purchased a car, and on that car he took insurance. He paid insurance premium with GST. Can he take ITC with respect to that insurance premium? Why? As car purchased by the chartered accountant is not eligible for ITC. So with respect to that insurance premium, GST paid also not eligible for ITC. Understood, pa? Then a company purchased a car, and on that car they have received the servicing, authorized service center services. Now can they take ITC with respect to that authorized service center, and they are using that car for transporting their directors? Can they take ITC with respect to that servicing? No. Why? Car purchased is eligible for ITC? No. So as car purchased is not eligible for ITC, on that servicing also GST paid cannot be taken as ITC. Then a Ola driver purchased a car, and that car he gave it to a private workshop for repairs and maintenance. He paid along with repairs and maintenance some GST. Can he take ITC with respect to that? Yes, because the car purchased is eligible for ITC. On that repair and maintenance also ITC can be availed. Then suppose if I am purchasing an aircraft, so I cannot take ITC. Now I am taking renting of aircraft. Can I take ITC with respect to that? No, because if the aircraft purchased is not eligible for ITC, so renting of aircraft also not eligible for ITC. Suppose if a company takes a car on rent for transporting its employees, can they take ITC with respect to that rent-a-cab services? If they buy a car, are they eligible to take ITC? No. As they buy a car, they cannot take ITC. So when they take the car on rent also, they cannot take ITC. A company purchases a bus, they can take ITC. If they take the bus on rent, they can take ITC with respect to that renting. Yes. So 4 services. What are the 4 services? Repair and maintenance, insurance, servicing, hiring, renting and leasing of motor vehicles. First we need to check whether the motor vehicle purchased is eligible for ITC. Yes, then these 4 services also GST paid can be taken as ITC. If motor vehicle purchased is not eligible for ITC, then on these 4 services GST paid cannot be availed as ITC. That is this. Then second, construction related blocked credits. That is, we are making some purchases in relation to construction of an immobile property. What are they? Any service in relation to construction of immobile property, including works contract service, or any goods purchased in relation to construction of an immobile property is blocked credit. For example, for construction of immobile property, I purchased cement, bricks, iron rods, etc. Can I take ITC with respect to that? No, because goods purchased for construction of an immobile property is block credit, ITC not available. I receive construction contractor service, interior decorator service, architect service for construction of immobile property, even though it is business property. Can I take ITC with respect to that? No, because any service received for construction of an immobile property is blocked credit. I received a works contract service. So builder only buy all the material required and he is only doing the construction, and he provided works contract service. On that works contract service also I cannot take ITC. So come on, what are the block credits in relation to construction? 3. Any service for construction of immobile property, including works contract service, or any goods purchased for construction of immobile property is block credits. However, we have 3 exceptions. In those 3 exceptional cases, ITC available. Exception number 1, this restriction is not applicable to supplier. This restriction is only to the owner of the property. For example, you are the owner of the property. I am the builder. Okay, I am builder. Now I received some services for construction of this property. Can I take ITC? Yes. So the restriction is only to the owner of the property. For example, I buy the material. Can I take ITC? Yes. So, but if you buy the material, you cannot take ITC. If I buy the building material, I am the builder, If I buy the building material, I can take ITC? Yes. But you are the owner of the property. If you buy the building material, you cannot take ITC. So therefore, the restriction is only to owner of the property, not to supplier. Read the first point. The above discussion is not applicable to supplier. That is, if a works contractor receives construction service for construction of an immobile property, then ITC available on construction service. Generally, construction service is block credit, but who is receiving it? Supplier, not the owner of the property. Understood? Then second exception. Suppose if the construction of immobile property is a plant and machinery. Example, in my building, I am constructing a lift. For construction of that lift, I received construction service or I purchase a material. Can I take ITC with respect to that? Yes, because lift is what? Plant and machinery. Even though immobile, but ITC is available because the restriction is only to land and buildings, not for plant and machinery. And plant and machinery excludes what? Telecommunication towers and pipelines laid outside factory gate. Suppose for this telecommunication towers or pipelines laid outside the factory gate, if I receive any service for construction of that, ITC not available. Why? Because plant and machinery definition excludes telecommunication towers and pipelines laid outside factory. What if it is pipelines laid inside the factory gate? Whether it is treated as plant and machinery? Yes. Then GST paid on materials, can I take ITC? Yes. Then third exception. Suppose if the construction expenditure is charged to P&L, then also ITC available. Means if the construction expenditure I have capitalized, ITC not available. Sir, generally any service received and any goods purchased for construction of an immobile property is block credit. But what should I do if I want ITC? That expenditure I need to charge it to P&L. Then I can take ITC. What if I capitalize that expenditure? I cannot take ITC with respect to that. Then that is this three exceptions. Next, so in relation to construction, can you tell me first what are the block credits? Any service in relation to construction of immobile property, including works contract service. Then any goods for construction of an immobile property is block credit. Three exceptions. Not applicable to supplier of service. Then plant and machinery other than telecommunication towers or pipelines laid outside factory gate. Good. Third, charge it to P&L. In the absence of information in the question, so we will capitalize it. Only when it is specifically given as charge it to P&L, you need to take it as charge it to P&L. So these exceptions and all should be clearly given in the question. So if exceptions are not given in the question, which means exceptions are not there. So which means it is a block credit. Okay. Then other blocked credits. In this other blocked credits, first we have membership of a club, health and fitness center. So these are the block credits and these columns are exceptions. Okay. First, membership of a club, health and fitness center is a block credit. For example, lot of chartered accountants take membership of some social clubs like Rotary Club, Lions Club, etc. So mainly to increase their network, to increase their contacts. So because, today it is all about the network and the contacts that people are having. So depending upon that, so they will be able to get the business. Suppose if a chartered accountant know a rich person, definitely that rich person will have lot of businesses. So from that business, some tax work or audit work they will be getting. So that's the reason why. So they take membership of a club. Is it business expenditure? Yes, business expenditure only. But they cannot take ITC with respect to that. Why? Because it's a blocked credit. Membership of a club, health and fitness center. Then celebrities, lot of celebrities, hero, heroine or actors. So even TV, serial actors, etc. They will be taking membership of fitness center. They will go to gym on a regular basis. So in order to maintain the health and the fitness. So this gym membership is actually for their profession. So but can they take ITC with respect to that? No, because membership of a club, health and fitness center is blocked credit. ITC not available. But if it is under a statutory obligation taken by employer for their employees, they can take ITC. Got it? For example, there is a social club and a recreational club, and government of Tamil Nadu mandated the employer to take membership of that recreational club for their workers or employees. Now can they take ITC with respect to that membership of a club? Yes, they can take ITC. Only one exception pa. Membership of a club, health and fitness center is block credit. Only in one case they can take ITC. Suppose if it is provided by employer to employee under statutory obligation. Then number 2, travel benefits extended to employees on vacation. So an employee is going on a vacation and that travel expenditure is incurred by the employer. Can they take ITC with respect to that? No, it's a blocked credit. For example, say employer sponsored the honeymoon package of an employee. Employee got married and employee, so is very good employee, hard working, etc. and all. So therefore employer sponsored the honeymoon package of the employee, means employee will go with his wife only, employee's wife only, okay. So for that employer has sponsored the money, okay, travel benefit. Now can the employer take ITC with respect to that? It's a business expenditure because it is for employee, they are incurring employee welfare. So can they take ITC with respect to that? No, because the employee is going on a vacation. Suppose if the employee is going on a business visit and for that if the travel expenditure is paid by the employer, can the employer take ITC with respect to that? Yes. So only in case of vacation, travel benefits extended to employees on vacation, ITC not available. However, we have an exception, only one exception here also. Suppose if it is incurred by employer to employee under a statutory obligation, then ITC available. For example, Tamil Nadu government has mandated all software and BPO companies to mandatorily provide cab facility to their employees if they are working in the night shifts. So now this particular cab facility, generally rent a cab is blocked credit, correct? If a company purchases a car for transporting its employees, blocked credit, and instead of transporting the employees, if they take it on rental basis, so then also if they buy a car, block credit. So renting of car also block credit. If it is under a statutory obligation, then ITC available. So therefore like that, suppose if a government is mandating an employer to give a leave to the employee, leave travel concession, they have to provide the leave travel concession to the employee. For that leave travel concession, as per the mandate of the government, if the employer provides the travel benefits, then they can take ITC. Understood? So travel benefits extended to employees on vacation. So under a statutory obligation, they can take ITC. Same way, hiring, renting and leasing of motor vehicles also, that point is there. Hiring, renting and leasing of motor vehicles also, employer under a statutory obligation, they can take ITC. Okay. Then next, look into NRTP, non-resident taxable person. NRTP is a person who come from outside the country to India and is not having any physical place of business in India. He is known as a non-resident taxable person. Example, cricketers, so who come from outside India to India to play one-day international or IPL matches will be called as non-resident taxable person. They come from outside India to India and is not having any physical place of business in India. They are called as NRTP. Same way, actors who come from outside India to India to act in movies will also come under NRTP. Then some sellers of goods who come from outside India to sell their goods in India is also called as NRTP. Generally, NRTP cannot take ITC with respect to any inward supplies. And are they required to register in India? Yes. An NRTP is required to get registered in India, but they cannot take ITC on inward supplies. Only one inward supply they can take ITC. What is that? Import of goods. For example, these cricketers, usually they will be having, sentiment with respect to bat, cricket bat. So they will be using their cricket bat, which they are using it for practice only. So that cricket bat is imported. So now in this case, as the cricketer is an NRTP, they are importing the cricket bat. On the cricket bat, whatever GST is paid, can they take ITC? Yes. So only on import of goods they can take ITC. With respect to all other inward supplies, they cannot take ITC. That is with respect to NRTP. So we have covered 3 points. What are they? First, membership of a club, health and fitness center is block credit. Exception, statutory obligation, employer to employee. Number 2, travel benefits extended to employees on vacation, blocked credit. Exception, statutory obligation, employer to employee. Then NRTP, blocked, all are a block credit. Exception, import of goods. Then look into the next one, food and beverages, outdoor catering, so related to food. Then beauty treatment, cosmetic surgery, plastic surgery, hair transplantation, related to beauty. Then life insurance, health insurance, related to insurance, related to food, related to beauty, related to insurance. So food and beverages, outdoor catering, beauty treatment, and then health insurance and life insurance. These inward supplies are blocked credits. However, we have 3 exceptions. In these 3 exceptional cases, ITC available. What is the first exception? Statutory obligation. For example, say outdoor catering service is received by an employer to provide food to the employee. Generally, it is blocked credit. What if, as per Factories Act, there is a mandatory requirement that employer has to provide food to the workers, for that the employer purchase the food. Can they take ITC with respect to that? Yes. You understood? Generally, food and beverages is block credit. But if it is incurred by employer to employee under a statutory obligation, then they can take ITC. Then, second exception, if inward supply and outward supply in this same category, for example, I am into the business of outdoor catering. Now, I received outdoor catering service from another person. For example, there is a marriage function. For that marriage function, I need to cook food for 1,000 people. So definitely, so single person cannot do. So I will outsource some dishes to another outdoor caterer. Now my inward supply also outdoor catering, my outward supply also outdoor catering. I can take ITC with respect to that. Or I purchase some food items for sale of food items. I can take ITC. That is the meaning of inward supply, outward supply in the same category. Then third exception is inward supply is part or component of the composite or mixed outward supply. For example, I am into the business of transportation of passengers by airways. Now, to my passengers, I provide the food along with the travel. So, I receive the outdoor catering service. Can I take ITC? Yes, because inward supply is part of the outward supply. Correct? I receive food, that food is in my inward supply, and in my outward supply also that is a part. So therefore, I can take ITC with respect to that. Understood? Now, an airline company receives beauty treatment services for their air hostess. Can they take ITC with respect to that beauty treatment expenditure? Yes or no? Okay, if it is yes, why it is yes? An airlines receives beauty treatment service with respect to the air hostess business expenditure only. Now, can they take ITC? Generally, beauty treatment is block credit. Can they take ITC? Statutory obligation, which statutory obligation? Yeah. So there is no statutory obligation. No law says that, so air hostess should look good and because of that the airline should spend the money. No. Okay. Inward supply, outward supply in the same category. No. Inward supply part of outward supply. Yes, sir. We will not pay for air hostess. We are paying only for travel, not for the air hostess. Air hostess is not in outward supply. Oh, in the matter nanapilla where irukkinga. So we are not paying for the air hostess we pay for the travel only. So inward supply is not part of outward supply. So therefore on the beauty treatment expenditure ITC is not available. So that is this. Okay. So therefore tell me what is this inward supply? Food and beverages, outdoor catering, beauty treatment including cosmetic, plastic, hair transplantation, life insurance and health insurance service is block credit. Suppose if it is under a statutory obligation by employer to employee, ITC available. Inward supply, outward supply, same category, ITC available. Inward supply part of composite or mixed outward supply, then also ITC available. Then, same way, hiring, renting and leasing of motor vehicles. Generally, hiring, renting and leasing of motor vehicle is block credit, correct? Say this. Hiring, renting and leasing of motor vehicle is block credit if motor vehicle is not eligible for ITC. But for that, we have three exceptions. What is that? Statutory obligation. That's what I told you, cap facility, mandatorily to be provided to workers, employees, BPO employees. So, ITC available. Inward supply, outward supply, same category. I am into business of renting, I take the motor vehicle on rent. I can take ITC. So, because my inward supply also renting of motor vehicles, outward supply also renting of motor vehicles. Then, inward supply part or composite, part or component of the composite or mixed outward supply. So, concentrate. Generally, some wildlife sanctuaries and tiger reserves, what they do is that they will allow you to enter into that wildlife sanctuary or tiger reserve along with a vehicle provided by them. So, you cannot go by walk and all. You will go, but outside you will not come. Okay. So, they will provide one vehicle, one jeep, and in that jeep only you need to travel, because the animals over there are accustomed to this jeep, that okay, if this jeep is coming means there will be one security in this jeep, he will be having a gun, so therefore the animals and all will not be coming nearing to that jeep. So normal vehicle when you take, the animals will start coming and attacking that vehicle. That's why these tiger reserves, national parks and wildlife sanctuaries, they will be providing the jeep also along with the entry ticket. So there are two supplies, entry to the park or entry to the wildlife sanctuary and hiring of jeep. These two are actually mixed supply. Why? Entry to the park or wildlife sanctuary is exempted irrespective of the ticket price. That entry ticket is exempted. Hiring of jeep is taxable. So one taxable, one exempted will be mixed supply. Now this jeep, they will take it on rental basis. Who? That wildlife sanctuary. So therefore, wildlife sanctuary, inward supply is hiring of motor vehicle, which is part or component of the outward supply, which is mixed outward supply. So therefore, they can take ITC with respect to that. That is the meaning of this. Then, next one, I am purchasing from a person opting for composition scheme. Can I take ITC? No. Because purchases from a person opting for composition scheme is a blocked credit. I cannot take ITC. Then, inward supply used for personal consumption. Can I take ITC? No. Because we saw it in section 16 itself. Inward supply should be used or intended to be used in the course or furtherance of business. Then, I purchase some goods which are lost, stolen, destroyed or written off or disposed of by way of gift or free sample. Even then, ITC not available. For example, I purchased some goods. Someone has stolen those goods or those goods got destroyed. I cannot take ITC with respect to that. I purchased some goods. I am giving it as gifts or free samples. Even then, I cannot take ITC with respect to that. However, in case of gifts and free samples, we have studied some exceptions. What is that? If gifts and free samples become supply, then we can take ITC with respect to that goods purchased. Okay. So these are the blocked credits that we have. With this, we completed all the blocked credits. Then, looking into the last section in input tax credit, that is section 18. Input tax credit in special cases. In that, section 18 subsection 1 talks about availment of ITC on closing stock. There are total 4 situations in 18 subsection 1. In these 4 situations, we will take ITC on closing stock. What are those 4 situations? 18(1)(a), a person is liable to get registered and they made application for registration within 30 days. 18(1)(b), voluntarily a person is getting registered. 18(1)(c), registered person migrated from composition scheme to normal scheme. 18(1)(d), registered person's outward supply which was exempted, now it became taxable. Now, try to understand, I am little bit explaining these situations in detail. That is, previously I was not registered. When I was not registered, so I would have made some purchases. Now I am liable to get registered. So now I am making application for registration. Before the date I am liable to get registered, I have got some closing stock. On that closing stock, I would have paid GST but not taken ITC. So now I can take that ITC. So therefore, a person is liable to get registered and they made application for registration within 30 days. Now before the date they are liable to get registered, there is some closing stock. What is that closing stock? Inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. So on this inputs in WIP, inputs in FG, whatever GST is paid, that GST paid can be availed as ITC. So which date closing stock we need to check? Immediately before the date the person is liable to get registered. Say, for example, I commence a business on 25th of May, I commenced business. And when I commenced business on this date, I am not liable to get registered. As and when my aggregate turnover exceeds threshold limit, I need to register. Say, my aggregate turnover exceeded threshold limit on 110. Aggregate turnover exceeded threshold limit. Aggregate turnover exceeded threshold limit on 110. And therefore, on this date, I am liable to get registered. But during this time, that is from 2510 to 110, I would have made some purchases. On that purchases, whatever GST paid, I can take as ITC. But not on all purchases. Now we need to see the closing stock date. What is the closing stock date? 39. So 39. Before the date I am liable to get registered. What is the date I am liable to get registered? 110. Before the date. What is before the date? 39. As on 39, I need to see what is the inputs. And I need to see what is the WIP that I have on 39. Then what is the FG? In this WIP, there will be some inputs content. Okay, that inputs. On this FG also, there will be some inputs content. So, this inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. On these three inputs, whatever GST I paid, I can avail as ITC. Is it clear or not? And for this, whether any matching is required? No, matching is not required. Matching is not required. But they have given one condition. As per section 18 subsection 2, so this inputs as such held in stock, inputs in WIP, inputs in FG, I should have purchased within 1 year prior to closing stock date. What is the closing stock date? 39. Means the invoice date of these inputs to the closing stock, it should be within 1 year. So therefore, within 1 year prior I should have purchased these inputs, which means if I purchased it 2 years, 3 years before, which is in the closing stock, like obsolete stock or old stock, on that I cannot take. So it should have been purchased within 1 year prior. On that GST paid I can take as ITC. Generally, we will avail ITC in which statement? GSTR 3B. But this ITC we will not avail in 3B. So for that we need to file one separate form, that is form GST ITC 1. So we need to avail this ITC by filing ITC 1. A separate form is there. That form we need to file. What is the time limit within which we need to file? Within 30 days or such extended time by the commissioner. So when are we getting registered? After exceeding threshold limit, we make application for registration. What is the time limit within which we need to make application for registration? See the heading. So a registered person make application for registration within 30 days. Then only this 18(1)(a) will be applicable. So therefore, what is the time limit by which I need to make application for registration? Application for registration within 30 days. Within 30 days. So say I made application for registration on 25th of October. and thereafter I got the registration certificate on say 31st October. Now after I get the registration certificate, again within 30 days, I need to file one form. What is that? ITZ 1 to avail the ITZ on the closing stock. Okay. So what is the time limit by which ITZ 1 should be filed? Come on. Within 30 days after registration. Within 30 days after registration, I need to make application for availment of ITZ in one form. What is that form? Form GST ITZ 1. That form should be certified by a chartered accountant or a cost accountant. If the ITZ claim exceeds 2 lakhs, means up to 2 lakhs, self-declaration, no need to certify. But after crossing 2 lakhs, that form should be certified by a CMA that yes, this particular ITZ what they are availing is genuine like that. Which means up to 2 lakhs, by like default, it is like a gift from the government to us, correct? 2 lakhs, no need of any CMA certification, means we will declare. So newly started business, whether we have really inputs or not, up to 2 lakhs, happily we can enjoy the ITZ. And suppose if you want more than that, then only we need to go to CMA. So therefore, this is actually like a jackpot, because we don't have to even matching not required. So now only I am getting registered. So I will say that I have purchased some inputs on the GST paid. So somewhere 1,90,000 or 1,95,000, I will for ITC 1, I will get that money. What I can do with that money? I can set off with my liability. Are you understanding this here? And this form should be certified by CMA only if the claim of ITC exceeds 2 lakhs. Then this is first situation. 18(1)(a). What is 18(1)(a)? A person is liable to get registered and they make application for registration within 30 days. 18(1)(b). 18(1)(b) is a person voluntarily getting registered. So that is, I am not liable to get registered, but I am voluntarily getting registered. Now, from when I am required to pay GST? From the date I get certificate of registration. So, before the date I get certificate of registration, whether I would have taken ITC on the goods purchased? No, because only a registered person can avail ITC, correct or not? So therefore, before the date of registration, whatever is the closing stock, on the closing stock, GST paid can be availed as ITC. See this, a person voluntarily get registered, they can take ITC on inputs in stock, inputs in WIP, inputs in FG, and here also matching not required. Which date closing stock should be taken? Immediately before the date of registration. What is the difference between 18(1)(a) and 1B? 18(1)(a) and 1B. 1A, liable to get registered and make application for registration within 30 days. 1B, voluntarily getting registered. Both in 1A and 1B, we will take ITC on same, correct? Inputs are such held in stock, inputs in WIP, inputs in FG. Matching required or not required? Not required. Which date closing stock should be taken in case of 18(1)(a)? Before the date they are liable to get registered. 18(1)(b), before the date they get the certificate of registration. Then, in case of 18(1)(c) and 18(1)(d), there is a registered person who migrated from composition scheme to normal scheme. Remember, C for composition scheme, 18(1)(c). So, composition scheme to normal scheme. I am under composition scheme. When I am under composition scheme, I cannot take ITC on closing stock. Say, for example, on 111, I am migrating from composition scheme to normal scheme. Composition scheme to normal scheme. So when I was under composition scheme, I would not have taken ITC. Now I have some closing stock. Which date closing stock I need to see? 31/10. As on 31/10, again I need to take inputs as such held in stock, inputs in WIP held in stock, and inputs in FG. Not only that, even on capital goods also I can take ITC. So what is the advantage in 18(1)(c) over 18(1)(a), 1B? In 1A, 1B, I can take only ITC on inputs. But in case of 1C, I can take ITC on even capital goods. Okay. And Matching is required or matching is not required? Matching is required. Unfortunately, matching is required, which means whatever ITC that I am taking should be reported by supplier in their GSTR 1. So, inputs in stock, inputs in WIP in stock, inputs in FG in stock, and even on capital goods. But on capital goods, full ITC, full GST paid cannot be availed as ITC. So, we need to give a depreciation. What is a depreciation? See, capital goods we would have purchased like 6 months before or 8 months before. So, definitely the value of that capital goods will come down. Na? So, that's why full ITC, full GST paid cannot be taken as ITC. We need to reduce. How much we need to reduce? 5% for every quarter or part thereof. In case of capital goods, ITC shall be GST paid minus 5% for every quarter or part thereof from the date of purchase till the date of conversion. Understood? For example, I purchased capital goods on 20th May. So, therefore, how much I need to reduce from 20th May to 3110? From 20th May to 3110. How many quarters? So, take calendar quarter. May will come in which quarter? April, May, June. First quarter, April, May, June. Then again July, August, September. And October, few days. So, therefore, how many quarters? 3 quarters. So, therefore, how much I need to reduce? 15%. Correct? 5% for every quarter or part thereof. Say, I purchase the capital goods for 10 lakhs plus GST 18%. Then, how much is the GST paid on capital goods? 1,80,000. From 1,80,000, I need to reduce 15%. Remaining amount I can avail as ITC. For input, should we do like this? For input, should we do like this? No, inputs fully GST paid you can take. Only for capital goods we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. Understood or not? Then 18.1c is inputs in stock, inputs in WIP, inputs in FG capital goods before the date of conversion. Should this capital goods also be purchased within 1 year prior? Yes. This 18 subsection to time limit is common for both inputs and capital goods, which means even those inputs should have been purchased within 1 year prior. Capital goods should also be purchased within 1 year prior. Is the capital goods purchased within 1 year prior to the closing stock date? Yes. So, we can take the ITC. Then 18.1d you see. 18.1d is a registered person who is making exempted supplies. So, when he was making exempted supplies, can he take ITC? No. Now, he started making taxable supplies, means his exempted supplies became taxable. Now, can he take ITC? Yes. So, on the closing stock before the date of conversion, same as 18.1c. That is, inputs are such held in stock, inputs in WIP, inputs in FG capital goods. Which date? Before the date of conversion. From where to where? Exempted supplies to taxable supplies. So, what is the difference between 18.1c and 1d? Situation is different. 18.1c composition scheme to normal scheme. 18.1d exempted supplies to taxable supplies. And both cases closing stock is same. And both cases matching is required. And in both cases before the date of conversion. Now, what is the difference between 18.1a1b versus 18.1c 1d? 1a1b versus 1c 1d. 1a1b we cannot take ITC on. 1c 1d we can take ITC on capital goods. After reducing 5% for every quarter or part thereof from the date of purchase till the date of conversion. And one more difference is also there between 1a 1b versus 1c 1d. Matching is required. 1a 1b matching is required, 1c 1d matching is not required. And one more difference, matching is not required in case of 1a 1b and required in case of 1c 1d. Yet another difference is there. 1a 1b capital goods we have seen, matching point we have seen. One more point, in 1a 1b now only we are getting registered, but in 1c 1d already they are registered. So that is about this. And in all these 4 cases, what is the time limit? 1 year prior to the date of closing stock. And ITC with respect to GST paid on inputs can be availed as ITC, no need to reduce 5%. But in case of capital goods, we need to reduce 5% for every quarter or part thereof from the date of purchase till the date of conversion. And to take this ITC in all these 4 cases, they need to file a declaration in ITC 1. And that ITC 1 should be filed within 30 days from the date they are eligible. In case of 18(1)(a), 1(b), from the date they get registration certificate. In 18(1)(c), 1(d), from the date of conversion within 30 days. And suppose if the claim exceeds 2 lakhs, that should be certified by CA or CMA. Then, next one, transfer of ITC, 18 subsection 3. Whenever there is transfer of business with specific provision for transfer of liabilities. Say, I am having a business and that business you have taken over. So therefore, in case of takeover, either merger, amalgamation, whatever it may be, in case of takeover of business, from the transfer or electronic credit ledger, the unutilized ITC will be moving to the transferee's electronic credit ledger. For example, A Limited is taken over by B Limited. Now in A Limited, some credit will be there in electronic credit ledger. That will be moving to the B Limited's ITC. Got it? But only one condition, pa. This transfer of business should be with specific provision for transfer of liabilities. Means only assets should be transferred, both assets and liabilities should be transferred. Both assets and liabilities should be transferred. And to transfer this ITC, what is the form that is required? ITC 2. ITC 2. So transferor should file this form ITC 2 for transfer of this ITC. Whether a CA/CMA certificate is required in this case, yes. But whether that CA/CMA certificate required only when the amount exceeds 2 lakhs or irrespective of the ITC? Irrespective of the ITC. What should they certify? That CA/CMA should certify that this transfer of business is with transfer of both assets and liabilities. So these assets and liabilities will come into picture only in case of amalgamation in the nature of merger. It should not be amalgamation in the nature of purchase. It should be amalgamation in the nature of merger. So all assets and liabilities should be transferred. Understood or not? Then in case of demerger, what will happen is that from one entity, we are now getting 2 entities. So for example, if A Limited and B Limited gets merged into AB Limited, no issue. A Limited will file one ITC2 to transfer the ITC, correct? Same way B Limited will file one ITC2 to transfer the ITC. So easy. But when AB Limited, one company is divided into A Limited and B Limited, then how the ITC can be transferred? Here AB Limited is having some ITC. It should be transferred to A Limited and B Limited. So in what ratio it should be transferred? We need to take the assets ratio. We need to take the assets ratio of A Limited, B Limited. So assets ratio of A Limited is 40 crores and assets ratio of B Limited is, assets of B Limited is 60 crores. Then in 4:6 or 2:3 ratio, the ITC should be transferred. Say for example, 1 lakh is the ITC. So to A Limited it will be 2/5 and B Limited it will be 3/5. That will be transferred. Understood? So therefore in case of demerger, how the ITC will be transferred, on what basis? Assets ratio, and whether we need to take total assets or assets on which ITC is availed. Total assets. Whether ITC availed or not on such assets, total assets we need to take for the purpose of the ratio. And post demerger, transfer or change in ownership will also include transfer or change in ownership due to death of sole proprietor. For example, there is a sole proprietor who is dead and his son has taken over the business. In that case also, from father to son, whether ITC will be transferred? Yes, same 18 subsection 3. Then this 18 subsection 3 is also applicable in one more situation. That is, within the state, there is only single registration with respect to multiple places of business. Say for example, I have business in 3 places within the state: Chennai, Madurai and Salem. So in 3 places I have place of business. But for all these 3 places put together, I have only single GSTIN. Okay. because it is optional na, whether to go for separate registration or continue with single registration. So I was having single registration. Now it is split into 3 registrations. Okay. Now I got separate registration. So one GSTIN, then second GSTIN, and third GSTIN. Now, so far I was having only one GSTIN and I was having this ITZ under this GSTIN. Now that ITZ needs to be shifted to these 3 registrations. In what ratio the ITZ will be transferred? Again, assets ratio. Assets ratio of Chennai, assets ratio of Madurai is to assets ratio of Salem. In that ratio, I need to distribute. For this, the form will be different, ITZ2. And here we don't need CMA certification. Okay. Where a single registration gets converted into multiple registrations within the state, then also ITC against a single registration can be distributed to multiple registrations by filing ITC 2A, and we need to take assets ratio on the date of new registration. Now, what are the 3 forms that we have come across so far? ITC 1, availment of ITC on closing stock. ITC 2, transfer of ITC on account of transfer of business. ITC 2A, transfer of ITC on account of single registration getting separated into multiple registrations. ITC 1, should it be certified by CMA? Yes, if ITC amount exceeds 2 lakhs. ITC 2, should it be certified by CMA? Yes, always. ITC 2A, should it be certified by CMA? No, not required. Then look into this. So before demerger, so assets of XYZ Limited and ITC of XYZ Limited. Now post demerger, so XYZ Limited is demerged into ABC and XYZ. Now what was the ITC of XYZ Limited? 4 crores in Madhya Pradesh. And now how that 4 crores will be distributed to ABC and XYZ. Now see the assets in Madhya Pradesh. What is the assets in Madhya Pradesh? 60 crores. How that 60 crores is given to ABC Limited and XYZ Limited? 30 crores to ABC, 30 crores to XYZ. So equal ratio. Then the ITC of 4 crores should be equally given to ABC and XYZ. Understood pa? Then again, in Uttar Pradesh, they are having ITC of 6 crores and the assets 40 crores is divided between ABC and XYZ in 10:30 ratio, means 1:3 ratio. Then in that case, so 6 crores will be given to ABC and XYZ in what ratio? 1:3. So please calculate. 6 crores into 1/4. 6 crores into 1/4, 1.5 crores to ABC, 6 crores into 3/4, that is 4.5 crores to XYZ. Understood or not? So state wise, we need to take the assets ratio and we need to distribute the credit accordingly. Then one more illustration. Transferor and transferee should be in the same state. Transferor and transferee should be in the same state. So these are some extra illustrations which I have added. In the previous edition book, it was not there. So because these are the questions which could be tested. So maybe these are untapped area. So these could be tested in exam. That's why I coined these questions. Okay. Now, transferor XYZ Limited, transferee ABC Limited. So both transferor and transferee should be in the same state. Then only ITC can be transferred. Otherwise, ITC cannot be transferred. For example, transferor XYZ Limited is in Madhya Pradesh. So a transferee is also in Madhya Pradesh. So can ITC be transferred? Yes. But transferor is in Uttar Pradesh and transferee is in Karnataka. Can the ITC be transferred? No, ITC cannot be transferred. So what is the point that we are learning here? Transferor and transferee should be in the same state. Then transferor XYZ Limited is in Maharashtra. Transfer is also in Maharashtra, so that ITC can be transferred. So if transferor and transfer is in not same state, so then ITC cannot be transferred, that ITC will be lapsed, gone. Then another illustration. Now, in what ratio we need to distribute the credit in case of demerger? Assets ratio. but the total ITC we need to distribute in assets ratio. Individually, we don't have to follow the ratio. Individually means I have CGST credit, SGST credit, IGST credit. So total I need to transfer in assets ratio. Not necessary that individually I need to transfer in the assets ratio. Say this, a very, very important point. So XYZ Limited is in Maharashtra. Now it is demerged into ABC Limited and PQR Limited. So what is the ratio? 4:6, 4:6 or 2:3 ratio. Okay. Now, so we have CGST credit 6 crores, SGST credit 6 crores and IGST credit 4 crores. So we have to transfer this to XYZ, ABC and PQR. We have to transfer this to ABC and PQR. But CGST we don't have to transfer in that ratio. SGST we don't have to transfer in that ratio. IGST we don't have to transfer in that ratio. But overall we should transfer in that ratio. Now listen carefully. So what is the total ITC? 16 crores. 16 crores into 4 by 10 how much? 6.4 crores. 16 crores into 6 by 10 is how much? 9.6 crores. This much I need to transfer to ABC and PQR. But within that CGST, SGST, I can decide, which means I am transferring 6 crores to PQR, 5.6 crores to PQR and 0.4 crores to ABC. Actually, I am not following the ratio here, correct? So I don't have to follow the ratio. Overall, I need to follow the ratio, but between this, I don't have to follow the ratio. Got it? Then I am not giving any IGST to ABC, but sorry, alignment issue. This is 0 and this is 4 crores. And I am transferring 4 crores to PQR. Then SGST, I have not transferred anything to PQR and fully I have given to ABC. Now see the total for ABC. Total for ABC 6.4. So how much I should have given to ABC? 6.4. So within CGST, SGST, I did not follow the ratio, but overall I need to distribute that. Then what is the total for PQR? 5.6 plus 4, that is 9.6. I need to distribute 9.6. I distributed. So now, is this the only answer? No. I can distribute what? So any ratio I can distribute CGST, SGST, IGST. But the overall should be 4.6 and 9.6. Clear here? So in 4:6 ratio, I need to distribute. So overall, so which means I can give IGST 4 also, IGST 4, SGST 2, then also correct answer? Yes or no? So I can give IGST 4 to ABC, 2 crore to ABC, and 4 crores I will be giving it to PQR. I can internally, I can decide, I can transfer any manner, but the overall ITC, I need to follow the assets ratio. Then, next one, section 18 subsection 4, read with section 29 subsection 5. So, 18 subsection 4 is opposite of, so 18.1c and 18.1d. What is 18.1c? Composition scheme 2. Now, what is opposite of that? Normal scheme to composition scheme. Then 18.1d, exempted supplies to taxable supply. Now, what is the opposite of that? Taxable supply to exempted supply. Also, cancellation of registration. In these three cases, I have to reverse the ITC on closing stock. In 18.1c, 1d, I avail the ITC on closing stock. But in this case, I will reverse the ITC on closing stock. Understood? Now, so I have inputs as such held in stock, inputs in WIP held in stock, inputs in FG held in stock. On these three inputs, whatever I have availed as ITC, now I will reverse. Even on capital goods also I will reverse ITC. But how much ITC I will reverse on capital goods? Total ITC divided by 60 months. Means the life of the capital goods is considered as 60 months, 5 years. And into balance life. For example, I purchased it 4 years before. Now, how much ITC I need to reverse? Total ITC divided by 60 months into 4 years I use. What is the balance life? 1 year. 1 year means 12 months. So into 12 I need to reverse. Is it clear? Means I am not using the capital goods for full 5 years. Now, what if the capital goods is used for full 5 years? Should we reverse anything? No. Inputs and capital goods can be purchased anytime. In case of 18(1)(c), 1D, in case of 18 subsection 1, we had the time limit. Now within 1 year prior it should be purchased. But here we don't have any time limit. By there we are availing ITC. So that's why time limit. Availing ITC means benefit to us. Loss to government. So time limit. Reversal of ITC. Loss to us. Benefit to government. So no time limit. Understood? So inputs and capital goods can be purchased anytime on which ITC is availed. If ITC is not at all availed on inputs, should we do the reversal? No, not required. If capital goods are purchased before 5 years on which ITC is availed, then also reversal shall not arise. Why? Because already we used for 5 years. There is no balanced life. If invoice is pertaining to such inputs not available, in case of 18(1)(c), 1D there is matching. But in this case there is no matching. If no invoice, don't worry. Today whatever is the market value, take that market value and reverse the ITC. Okay. But there no invoice, sorry, you cannot take credit. But here reversal of ITC, reverse. You take the market value. How to determine the market value? Go to the CMA, they will tell. Okay. So if invoice value not available, then market value should be considered, and that market value will be fixed by CMA. And all these details should be reported in ITC 3. So ITC 3 is the form that is required for this. Still if you have balance in ITC, after reversal, that shall be lapsed. And if there is any shortfall for reversal, then such shortfall shall be payable using cash ledger. Then, for example, I need to reverse 1,50,000 per. I have a balance in ITC 2 lakhs and I need to reverse ITC 1,50,000. So therefore I will adjust from 2 lakhs. Still how much balance is there? 50,000. That shall be lapsed. Okay. Now I have balance 75,000. And what is the ITC that I need to reverse? 1,50,000. So therefore 75,000 I will adjust. So still, what is the amount that I need to pay? 75,000. Understood or not? If we have any balance in ITC, that will be lapsed. If there is any shortfall, that I need to pay. And this computation should be done separately for CGST, SGST, UTGST. So ITC 1, whether CMA certification is required for ITC 1? Yes, if ITC exceeds 2 lakhs. Then ITC 3, whether CMA certification is required? Yes. When invoice value is substituted with market value. So now, what are the 4 forms that we have? Only 4 forms we have. ITC 1, purpose, availment of ITC on closing stock. ITC 2, transfer of ITC in case of transfer of business. ITC 2A, when single registration is getting separated into multiple registrations. ITC 3, reversal of ITC on closing stock. ITC 1, certified by CMA? Yes, if ITC exceeds 2 lakhs. ITC 2, always yes. ITC 2A, no. ITC 3, yes, if invoice value is substituted with market value. Now, look into this illustration 11. S&P Private Limited, Coimbatore, exclusively manufactures and sells product Z, which is exempted from GST. So they are making only exempted product and therefore they will not be registered. Okay. The company sells Z only within Tamil Nadu. The turnover of the company in the previous year was 55 lakhs. The company expects the sales to grow by 20% in the current year. Owing to the increasing demand for the product, the company decided to increase its production capacity and purchased a machinery on 1/7. The purchase price of the capital goods was 20 lakhs exclusive of GST at 18%. However, with effect from 1/11, exemption is withdrawn on product Z. So now, so far they were making exempted product. Now automatically that product became taxable. So therefore, they have made application for registration, exemption available on the Z was withdrawn by government and GST at 12% was imposed. The turnover of the company for the half year ended 30/10 itself was 45 lakhs. Means as on 1/11, they crossed the threshold limit. Okay. Now, the board of directors of SNP Private Limited wants to know whether they have to register under GST. What is your answer? Whether they should register? Yes. When are they liable to get registered? When they commence business or whenever their outward supplies become taxable? Outward supply become taxable. So till the time their outward supply was exempted, they are not required to register. So only when their outward supply became taxable, so their aggregate turnover already exceeded threshold limit, so therefore they will be required to be taxable, registered and pay GST. So therefore, when should they make application for registration? Within 30 days. From which date? 1/11. Why 1/11? Because 1/11 they are liable to get registered. From that date, within 30 days, they need to make application for registration. Now, whether they can take ITC on machinery purchased, if yes, how much credit can be availed? So, machinery purchased on which date? 1/7. And when are they getting registered? 1/11. So, 1/7 to 1/11, how many quarters? July, August, September, and October, November, December, 2 quarters. So, how much is the capital goods? 20 lakhs. 20 lakhs into 18%. 3,60,000. 3,60,000 minus 10%. Okay. 36,000 should be reduced. So, remaining they can take as ITC. So, can you tell me what is the mistake in this? First of all, which section is applicable? 18, 1A, 1D? 1A. 1A. They are getting registered now only. When they are getting registered now only, from where they can take credit on capital goods? So they cannot take credit on capital goods. We are making a mistake by applying 18(1)(d). 18(1)(d) is applicable. Read. 18(1)(d) is applicable only when a registered person is having exempted supply and his exempted supply become taxable. Now only we are applying for registration where from they can take ITC on capital goods. So they cannot take ITC on capital goods because now only they are getting registered. What if they are already registered? Then they can take ITC on capital goods. So therefore we need to write the answer in 2 parts. If they are applying for registration only after 1/11, they cannot take ITC on capital goods because the applicable section is 18(1)(a). If they are already registered before 1/11, then they can take ITC on capital goods after reducing 5% for every quarter or part thereof. Then only we need to write the answer. 3,60,000 minus 10%, 3,24,000. Understood? Then last subsection, 18 subsection 6. GST payable on disposal of capital goods. First listen, I purchase some capital goods. What is the meaning of capital goods? Capitalized in my books is known as capital goods. So I purchase some capital goods. On that capital goods I paid GST and I have availed it as ITC. Now that capital goods is disposed of. When the capital goods is disposed of, I have to pay GST whichever is higher, A or B, whichever is higher. A, like depreciation, ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale, or GST on sale value, whichever is higher. Okay. So I have availed ITC on capital goods and the capital goods got sold. Now GST payable is highest of the following. ITC availed minus 5% for every quarter or part thereof. From which date to which date? From the date of invoice till the date of supply, or GST on sale value, whichever is higher. But in case of refractory bricks which are used for making clints, commercial clints to heat the raw material, that bricks, then molds and dies, jigs and fixtures, these 3 capital goods, if it is sold as scrap, then not A or B, whichever is higher, just B, that is GST on sale value. Understood? What are the three capital goods, pa? Refractory bricks, molds and dies, jigs and fixtures. How is it sold? Sold as scrap. Then we need to just take GST on sale value. No need to take ITC avail minus 5%, etc. Now, have a look into this illustration 12. Capital goods purchased on 8/10/2019 for 10 lakhs, excluding GST at 12%. They were disposed of on 5/5/2021 for 6 lakhs, excluding GST at 12%. Compute the GST payable. First, what we need to do? ITC availed minus 5% for every quarter or part thereof from the date of purchase till the date of sale. What is the date of purchase? 8/10/2019. What is the date of sale? 5/5/2021. How many quarters? Take calendar quarters. Calendar quarter. Calendar quarter means October will come in which quarter? Third quarter. So take that October ending quarter. That is October, November, December. Then again 2020 full year na. 2020 full year. Check here. So therefore 4 quarters. Total 5. Then 2021 Jan, Feb, March, April, May. So 2 quarters. So total how many quarters? 7 quarters. 7 quarters. So 2019 1 quarter. 2020 full year 4 quarters. 2021 2 quarters, because we need to take quarter or part thereof. So 7 quarters into 5%. 7 5s are 35. So therefore we need to reduce 1,20,000. Why 1,20,000? Sir, 10 lakhs into 12% ITC availed is 1,20,000. 1,20,000 minus 35%, 78,000, or GST on sale value 6 lakhs into 12%, 72,000. Whichever is higher, 78,000 will be taken as the GST payable. Now, what will be your answer if such goods are not capital goods? Then suppose if it is not capital goods, simple, sale value. What is the sale value? 6 lakhs on the 12%, 72,000 we will pay. What will be your answer if such capital goods are disposed without consideration and the value determined under Rule 31? Under Rule 31 is 4 lakhs. As per CGST rules, we determine 4 lakhs. Then that rule value will be taken. So therefore, A will be 78,000. B will be 4 lakhs into 12%. That is 48,000. Whichever is higher, 78,000. Then what will be your answer? Means suppose if it is without consideration, they need to give in the question some value. That value we will take. What will be your answer if such capital goods are disposed of without consideration and value cannot be determined? Means we don't have value in the question. Then what you will do? Only A, that is 78,000. What will be your answer if such capital goods are sold after 5 years? A will become 0. How A will become 0? ITC avail minus 5% for every quarter or part thereof. 5 years. 5 years means how many quarters? 20 quarters. 20 quarters into 5% will be 100. So fully A will become 0. B will be GST on sale value. Whichever is higher, 72,000. Understood, pa? So with this, we completed input tax credit fully in detail. Okay. See this, pa. Segment 9. Registration under GST, page number 143. Registration, we have total 9 sections in registration, that is section 22 to section 30. So up to section 21 is related to input tax credit, and section 22 to section 30 we have registration. Section 22, section 23 and section 24 are 3 important sections in registration which talks about the legality. Section 22 is when a person is required to get registered. Section 23, exemption from registration. Section 24, compulsory registration. So these are the 3 sections first we need to complete. Section 22 talks about when a person is required to get registered. Section 23 when a person is exempted from registration. Section 24, when a person is compulsorily required to get registered irrespective of threshold limit. Now, as per section 22, a person is required to get registered whenever their aggregate turnover in a financial year exceeds threshold limit for registration. So, aggregate turnover exceeds threshold limit for registration, they are required to get registered. What is the meaning of aggregate turnover? Aggregate turnover means it includes all four supplies, that is taxable supplies, exempted supplies. Exempted supply includes non-taxable supplies, then exports and interstate supplies, and this should be computed on a all India basis or state wise, on a all India basis. But aggregate turnover does not include inward supply on which GST payable under RCM, because turnover means mostly outward supplies, mainly outward supplies. So that's why inward supply should not come. Also taxes, CGST, SGST, UTGST, IGST should be excluded. Now, first we need to compute the aggregate turnover, and then we need to see that aggregate turnover exceeds threshold limit, then a person is required to get registered. So what is the threshold limit for registration? That threshold limit for registration depends upon whether you are doing business in a single state or you are doing business in multiple states. If you are doing business in single state, and if that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs. Okay, let it be goods or services, the limit will be 10 lakhs. If you are doing business in multiple states, single state, and that single state is in U stamp, you are doing business in single state, and if that single state is in MMTN, Manipur, Mizoram, Tripura, Nagaland, then the limit will be 10 lakhs. You are doing business in a single state, and that single state is in U stamp. U stamp is Uttarakhand, Sikkim, Telangana, Arunachal Pradesh, Meghalaya and Puducherry, Pondicherry, these 6 states. U stamp, U for Uttarakhand, then Sikkim, yes, T, Telangana, A, Arunachal Pradesh, M, Meghalaya and P, Pondicherry or Puducherry. Then the limit will be 20 lakhs. Let it be goods or services. If you are doing business in other states other than MMT and U stamp, then if you are exclusively engaged in supply of goods, the limit will be 40 lakhs. If you are supplying both goods and services or only services, then the limit will be 20 lakhs. Now concentrate. You are doing business in Telangana, engaged exclusively in supply of goods. What is the limit? 20 lakhs. You are doing business in Nagaland, exclusively engaged in supply of goods. 10 lakhs. You are doing business in Tamil Nadu, exclusively engaged in supply of goods. 40 lakhs. You are doing business in Karnataka, engaged in both supply of goods and services. 20 lakhs. You are doing business in Andhra Pradesh, exclusively engaged in supply of goods. 40 lakhs. Andhra Pradesh is not in the list. So therefore the limit will be 40 lakhs. You are doing business in Meghalaya and exclusively engaged in supply of goods. 20 lakhs. There it is MM Manipur, Mizoram, not Meghalaya. So first MMTN, MM is Manipur, Mizoram, not Meghalaya, okay. So Meghalaya will be 20 lakhs limit. And then if you are doing business in multiple states, this you understood now? What is that, tell me? You are doing business in single state, and if that state is in MMTN, limit is? And you stamp other states, exclusively goods, 40 lakhs. Both goods and service or only services, 20 lakhs. Now, what is MMTN full form? Manipur, Mizoram, Tripura, Nagaland. You stamp Uttarakhand, Sikkim, Telangana, okay, Arunachal Pradesh, Meghalaya, Pondicherry. Then, if you are doing business in multiple states, this is only little difficult, okay, concentrate. If you are doing business in multiple states, one of the state, in that multiple states, one of the state is in special category state, that is MMTN, and taxable supplies are made from that state. One of the state is a special category state and taxable supplies are made from that state. Both the conditions should be satisfied. Out of the given states, one state should be a special category state, that is MMTN, and taxable supplies are made from that state. If these two conditions are satisfied, the limit will be 10 lakhs. Let it be goods or services. That's the first point. You are doing business in multiple states and any one state is special category state, that is MMTN, and taxable supplies are made from that state, the limit will be 10 lakhs. You are doing business in multiple states, none of the states is in MMTN use stamp. Out of the given states where you are doing business, none of the states is in MMTN use stamp and you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. So out of the given states, none of the state is in MMTN use stamp. One state also should not be in MMTN use stamp and you are exclusively engaged in supply of goods, then the limit will be 40 lakhs. In all other cases, the limit will be 20 lakhs. Now concentrate. You are doing business in multiple states. One state is Sikkim. One state is Sikkim. Okay. Now you are exclusively engaged in supply of goods. What will be the limit? 20 lakhs. First point, 10 lakhs will not come because it is not MMTN. And last point will not come because it is one state also should not be in MMTN use stamp. But Sikkim is in use stamp. Therefore, 40 lakhs limit will not come. Only balancing figure, that is 20 lakhs. Understood, pa? So can you tell me this alone once again? Multiple states. You are doing business in multiple states. And one of the state is MMTN. And taxable supplies are made from that state. Limit is 10 lakhs. Then second point you need to remember, none of the states is in MMTN use stamp and exclusively engaged in supply of goods. Then the limit will be all other cases. Now, say this, you should not be engaged in supply of pan masala, tobacco and tobacco products, ice cream and edible ice, bricks and roofing tiles. If you are exclusively engaged in supply of these goods, 40 lakhs limit you will not get. Then again it will be 20 lakhs limit. So wherever 40 lakhs limit comes, there we need to remember that you are not engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles. You should not be engaged in supply of these goods. If you are engaged in supply of these goods, then the limit will be 20 lakhs. Now concentrate, please listen. You have a shop in Tamil Nadu. You have a shop in Tamil Nadu. You are exclusively engaged in supply of goods. In that shop, there is one fridge. In that fridge, you are selling ice cream. Okay. So you are keeping ice cream and you are selling ice cream also in your shop. So now, in this case, whether 40 lakhs limit is applicable or not applicable? Applicable. Applicable. If you are exclusively engaged in supply of ice cream shops will be there na, Ibaco or BR, etc. So these ice cream shops will not get 40 lakhs. Exclusively engaged in supply of ice cream, edible ice, pan masala, tobacco products, bricks and roofing tiles, then only 40 lakhs limit not applicable. There is a small shop. They will sell chocolates, biscuits, small items, and they also sell cigarettes. Okay. Now, will they get 40 lakhs limit? Yes. Because they are not exclusively engaged in supply of tobacco products. Suppose if there is a pan shop which is engaged in sale of pan masala and tobacco products, then 20 lakhs only, 40 lakhs limit is not applicable. You understood or not? Then the limit of 40 lakhs is applicable only in case of exclusive supply of goods. However, interest on loans, advances, deposits, income is allowed. Actually, interest on loans, advances, deposits is service. Correct? See this, concentrate. You are doing business in Tamil Nadu. You are doing business in Tamil Nadu. Supply of goods is 38 lakhs. Supply of goods is 38 lakhs. And delivery services is 1 lakh. Okay, delivery service is 1 lakh. Now, what is the applicable threshold limit? What is the applicable threshold limit? 40 lakhs, no, 20 lakhs. Why 20 lakhs? You are not engaged exclusively in supply of goods. You are supplying both goods and services. But small element only in service, let it be. But you are engaged in supply of service, na? So therefore, both goods and services. So therefore, what will be the applicable limit? 20 lakhs. Whether this person is required to get registered? Yes. However, we have an exception to this. That is interest. You are doing business in Tamil Nadu. You are exclusively engaged in supply of goods, 38 lakhs, and you got a interest income. So that interest income is 1 lakh. So total 39 lakhs. Now what is the applicable limit? 40 lakhs. So if you are engaged in supply of goods and if you have only one service, that is interest, still you will be treated as engaged in supply of goods. So therefore the limit will be 40 lakhs. So whether this person is required to get registered or not? No. So that is this exception. However, interest on loans, advances, deposits, income is allowed. So means the limit will be taken as 40 lakhs only. Clear here? Then suppose if a person is engaged in exclusive supply of services or supply of both goods and services, what is the limit? 20 lakhs or 10 lakhs as the case may be. Why for Manipur, Mizoram, Tripura, Nagaland they are keeping 10 lakhs as the limit? Because the effort that it requires to earn 20 lakhs here requires the same effort to earn 10 lakhs there. Reason, it is not that easy to earn money there because that's a backward region and their economic activity is not there. Money is not there with the people. So they will not be able to spend money that much. They depend mostly on the natural resources. So therefore, earning 10 lakhs itself is very difficult there. That's why the limit has been reduced to 10 lakhs. Got it? That is the reason behind it. Then, the limit of 40 lakhs is not applicable in the following cases. When, if a person is voluntarily registered, see, once you are registered, this 20 lakhs, 10 lakhs, 40 lakhs limit is not applicable. Means you have to pay GST. You got it? Sir, the applicable limit to me is 20 lakhs. Now, my turnover is only 5 lakhs, but I registered. Then, next to 15 lakhs, no need to pay GST. I have to pay GST. I have to pay GST the moment I am registered. No need to see the 20 lakhs limit. Okay. So then wait and register only after crossing 20 lakhs. Why are you getting registered now? You have to wait till 20 lakhs. Thereafter you register, then you are enjoying the benefit. Are you understanding? So if a person is voluntarily registered, they will not get the threshold limit. Also, if a person is compulsorily required to get registered, then also this limit of 40 lakhs is not applicable. Compulsory registration means what? Irrespective of threshold limit, they are required to get registered. Then person making supply of ice cream, edible ice, pan masala, tobacco and tobacco products, bricks and roofing tiles also will not get 40 lakhs limit. Understood? Then now look into the overview of these provisions in this. So below this, that is page number 146, there are some illustrations. Have a look into that illustration. Illustration 1. Mr. X is exclusively engaged in supply of goods in Sikkim. Sikkim, what is the limit? Sikkim, what is the limit? 20 lakhs. Why 20 lakhs limit in Sikkim? Because you are doing business in single state. And that single state is in U stamp. Therefore, the limit will be 20 lakhs. But this person is not at all required to get registered. Why? Because whenever you are making only exempted supplies, whatever may be the turnover, they are not required to get registered. For example, Tasmak, a liquor shop, and their turnover, each and every shop on an average, if you see, the turnover will be 80 lakhs to 1 crore easily. So now, whether they are required to get registered? No. Why? Because all are non-taxable supplies. So non-taxable supplies means exclusively exempted supplies. So they are not required to register. Suppose in the Tasmark liquor shop, they sell liquor plus plastic cup, water bottle, pickle, chips, etc. Now in that case, whether they need to register? Yes. Why? They are making partly taxable and partly exempted. So this main dish is exempted, but side dish is there, that will be taxable. So circle plus side dish, total will exceed the aggregate turnover threshold limit. So they need to register. But once they register, they need to pay GST only on side dish, not on the main dish. You understood or not? So while computing the threshold limit, we take exempted supplies also, taxable supplies also. But once they are liable to get registered, they need to pay GST only on taxable supplies. But if you are making exclusively exempted supplies, you are exempted from registration. Then illustration 2. Mr. X is engaged in making supply of goods in Tamil Nadu, Andhra Pradesh, Meghalaya. Whether one of these states is special category state? Yes, sir. MMTN. Manipur, Mizoram, Tripura, Nagaland. I know you will definitely get confused in Meghalaya. You will think in MMTN. No. MMTN is Manipur, Mizoram, Tripura, Nagaland. Whether one of the state is in special category state? No. So therefore 10 lakhs limit is not applicable. And none of the states is in MMTN use stamp? No. Because one state is in MMTN use stamp. Which one? Meghalaya is in MMTN use stamp. Therefore, limit of 40 lakhs not applicable. Why 40 lakhs not applicable even though they are engaged in exclusive supply of goods? Because one of the state is in MMTN use stamp. Therefore, 40 lakhs limit not applicable. So balancing figure. What is the balancing figure? 20 lakhs. So the applicable threshold limit will be 20 lakhs. Now, what is the aggregate turnover? While counting aggregate turnover, we need to take taxable, exempted, everything. So 5 plus 3 plus 8 plus 2 plus 4. What is the aggregate turnover? 22 lakhs. Whether aggregate turnover exceeds threshold limit? Yes. So whether Mr. X is liable to get registered? Yes. And where it should get registered? Tamil Nadu and Andhra Pradesh, but not in, why not in Meghalaya? Because they are making exempted supplies. Actually, Meghalaya influences the threshold limit, but they are not required to get registered in Meghalaya because they are making only exempted supplies in Meghalaya. When they will register in Meghalaya? As and when they start making taxable supplies in Meghalaya, they are required to get registered. Understood? Next, illustration 3. Mahadev Enterprises, a sole proprietorship firm, opened a shopping complex dealing in supply of goods at multiple locations, that is in Himachal Pradesh, Uttarakhand and Tripura in the month of June. It has furnished the following details relating to supply made at multiple locations for the month of June. So they are doing business in 3 states, Himachal Pradesh, Uttarakhand and Tripura, and they are making taxable supplies, exempted supplies, everything they are making. Now, what is the applicable threshold limit? Whether one of the state is in MMTN? Yes. And the taxable supplies are made from that state? Check. See, just because one of the state is in Manipur, Mizoram, Tripura, Nagaland, you cannot take 10 lakhs. One of the states should be in MMTN and taxable supplies are made from that state. Yes. So we are making taxable supplies in Tripura. Therefore, the limit will be 10 lakhs. And what is their aggregate turnover? Whether it crossed 10 lakhs? Yes. Because in Himachal Pradesh itself is 22 lakh 50,000. So therefore, their aggregate turnover exceeds 10 lakhs. Are they required to get registered? Yes. But where? In Himachal Pradesh and Tripura, but not in, why not in Uttarakhand? Because they are making non-taxable supplies. So they are not required to get registered in Uttarakhand. Understood? Now, determine whether Mahadev Enterprise is liable to be registered. Yes, because the applicable threshold limit is 10 lakhs. and their aggregate turnover exceed 10 lakhs. And what is the threshold limit? 10 lakhs, and they need to register in Himachal Pradesh and Tripura. Now, explain with reasons whether your answer in one will change in the following independent cases. A. If Mahadev Enterprises is dealing in taxable supply of goods only from Himachal Pradesh. So Himachal Pradesh, they don't have data of Uttarakhand and Tripura. They are doing business only in Himachal Pradesh. Then we need to refer to the first branch. They are doing business only in single state. And is that single state in MMTN? Is that single state in U-stamp? So other states. So other states, are they engaged only in supply of goods? Yes. So the limit will be, and their aggregate turnover does not exceed 40 lakhs. Therefore, not required to get registered. Understood? Now, next part. If Mahadev Enterprises is dealing in taxable supply of goods and services only from Himachal Pradesh, they are dealing in both goods and services, then the limit will be 20 lakhs. So even though they are doing business only in Himachal Pradesh, but both goods and service, so 20 lakhs, but their turnover is 22 lakh 50, therefore they need to register in Himachal Pradesh. Then, if Mahadev Enterprises is dealing in taxable supply of goods only in Himachal Pradesh and also has affected interstate supply of taxable goods, even though their limit is 40 lakhs, only one state and only engaged in supply of goods, so 40 lakhs, but they are making interstate supplies. Interstate supplies of goods is reason for compulsory registration. So there are some cases where a person is compulsorily required to get registered. In that one point is a person who is making interstate supply of goods, taxable interstate supply of goods. So due to that reason, so under section 24, that person is compulsorily required to get registered. Then illustration 4. A Limited is doing business in 3 states, Tamil Nadu, Kerala and Nagaland. And what is the applicable threshold limit? They are doing business in multiple states. Whether one of the state is a special category state? Yes. And taxable supplies are made from that state? No. So 10 lakhs limit not applicable. Okay. 40 lakhs limit also not applicable because one of the state is in MMTN U-stamp. So 40 lakhs limit also not applicable. Then what is the limit applicable in this case? Balancing figure, that is 20 lakhs. So what is their applicable threshold limit? 20 lakhs. What is their aggregate turnover? 4 plus 2 plus 3 plus 1 plus 2. That is 12 lakhs, and it does not exceed 20 lakhs. Therefore, they are not required to get registered. Understood? Why are we not taking 10 lakhs limit? So even though they are located in Nagaland, but they are not making taxable supplies in Nagaland, that's why 10 lakhs limit is not applicable. Then next one. So we completed this and come back to page number 145. So 4 illustrations we completed, and already we discussed 22 subsection 1. So when a person is required to get registered based on aggregate turnover. Now, when a person is not at all required to get registered, 23, exempted from registration, see that. So 3 cases, a person is not at all required to get registered. If they are exclusively making exempted supplies, or if they are exclusively making RCM supplies, means outward supply is covered under RCM, or if they are an agriculturist, so they are engaged only in supply out of cultivation of land. They are an agriculturist. They are engaged only in supply out of cultivation of land. Let that be taxable goods or exempted goods. Example, rubber. Natural rubber is taxable. Actually, it is taxable. But in Kerala, lot of people are dependent on sale of that natural rubber. They will have rubber plantation. So in that rubber plantation, they will collect the natural rubber from the trees, and they will make the rubber sheets. They will rotate and they make a rubber sheet, and that they will be selling. So therefore, they are engaged only out of cultivation of land. So therefore, even though that rubber is taxable, but they are not required to get registered. Why they are not required to get registered? Because they are only an agriculturist. You understood or not? Like that, there is a groundnut crop farmer. That groundnut crop farmer gets the groundnuts, peanuts, groundnuts. So this they are selling. So they are not required to register. Now they are selling groundnuts plus crushing groundnuts to make groundnut oil, and the groundnut oil also they are selling. Now partly they are making supply out of cultivation of land, and partly they are selling processed goods. So therefore they will not get this exemption. So an agriculturist is not at all required to get registered if they are only an agriculturist. When they are only an agriculturist, they should sell produce out of cultivation of land. Then only they are called as agriculturist. Then, so advocates, outward supply is always covered under RCM, correct? So whether advocate is required to get registered? No. Because if a person's outward supply is exclusively covered under RCM, they are exempted from registration. So tell me what are the three cases where a person is exempted from registration? Come on. Exclusively exempted, and exempted includes non-taxable. Then exclusively RCM supplies, and then agriculturist. They are exempted from registration. Then irrespective of aggregate turnover, some people are required to get registered as per section 22 and 24. First looking into 22. If you are already registered under existing law, that is old indirect taxes, under GST also you need to compulsorily register. Same way, so when a registered person transfers this business to another person, so the transferee should definitely get registered. Then transfer pursuant to scheme of amalgamation or demerger, the amalgamated company or the resulting company, even though it is a new company, but they need to get registered as and when they get the certificate of incorporation. So in these three cases, so a person is compulsorily required to get registered. But if their aggregate turnover fall below threshold limit, they can make an application for cancellation of registration. Understood? So in these three cases, concentrate pa. In these three cases, registered under earlier law should be registered under GST. Transfer of business, transferee should register. Amalgamation or merger, the amalgamated or resultant company should register. But after getting registration, if their turnover falls below threshold limit, they can make an application for cancellation of registration. But in case of section 24, once you are compulsorily required to get registered because of section 24, even though your aggregate turnover fall below threshold limit, you cannot make application for cancellation of registration. Is it clear? So that point somewhere you make note pa. So somewhere you write down, maybe this space is sufficient. Here also you can write. So what is it you need to write? Person required to get registered under 22. Person required to get registered under section 22. Person required to get registered under section 22 can make application for cancellation. Person required to get registered under section 22 can make application for cancellation. Can make application for cancellation if turnover falls below threshold limit. If turnover falls below threshold limit. However, this is not applicable in case of section 24. However, this is not applicable in case of section 24. So, if I am required to get registered under section 22, first I need to register under section 22. If my turnover is coming down below threshold limit, I can make an application for cancellation of registration. But if I am covered under section 24, even though my turnover falls below threshold limit, I cannot make application for cancellation of registration. I need to definitely get registered and I am continuing in registration only. Now, what are the cases where a person is compulsorily required to get registered under section 24? Remember a keyword, I creations. I creations. So, this I creations, they are not required to register or they should compulsorily register. They should compulsorily register. So, what is this? I, first one, interstate supply of goods. That too what goods? Taxable goods. If I am making interstate supply of exempted goods, am I compulsorily required to register? No. Interstate supply of taxable goods. What about interstate supply of services? Interstate supply of services, whether compulsory registration is applicable? No. So, interstate supply of goods, that too taxable goods. Understood? For interstate supply of services, compulsory registration not applicable. For interstate supply of exempted goods, compulsory registration not applicable. One more point, interstate supply of taxable goods other than handicrafts. Suppose if I am making interstate supply of handicrafts, am I compulsorily required to register? No. Clear here? Interstate taxable supply of goods other than handicrafts. Then C for casual taxable person. Who is a casual taxable person? Who come from other state to this state and is not having any physical place of business in this state, he is known as a casual taxable person, and they will be engaged in supply of goods or services. For example, so you take cinema actors who come from other state to this state for the purpose of acting in some movies, so they will be called as casual taxable person. Then even suppose if the match tournaments and all is happening in Tamil Nadu, so IPL is coming up, so a lot of players from other states in India also will be coming here to play, so they will be called as casual taxable person. And then so usually this festive seasons and all, lot of factory outlets they will open, garment sellers. So from north and all, they will be coming, they will bring the garments and they will sell factory outlet. They will take one marriage hall on rent, and in that marriage hall they will open, so flat 50% off, flat 60% off, buy one get 9 free, like that and all. So these cases are called as casual taxable person. They come from other state to this state and is not having any physical place of business in this state. For example, a CA faculty who come from other state to this state to take classes here, will they be called as casual taxable person in this state? Yes. Same way, if I go to any other state to take the classes, I will be called as a casual taxable person in that state. Is it clear or not? So every casual taxable person is compulsorily required to get registered. And then R for, but casual taxable person other than handicrafts. So this other than handicrafts is there even for interstate supply as well as casual taxable person. Usually handicraft sellers and all, handicraft goods sellers and all, they need to go to different states. In the exhibition they need to participate, trade fairs, there they will open one counter and they will display those handicraft goods and they will be selling. So that's why their sales mainly depend upon going to the other state and selling, so they are not required to compulsorily register. Then R for recipient who is liable to pay GST under RCM. Which RCM? 9.3 RCM or 9.4 RCM? 9.3 RCM only compulsory registration. Then e-commerce operator. So we discussed now 9 subsection 5, e-commerce operator. So liability to pay GST is on e-commerce operator. So that e-commerce operator is compulsorily required to get registered. Then agent making supply on behalf of principal. That is in case of principal agent transaction, I told you, when an agent is making supply on behalf of principal, if invoice is raised by agent to the buyer, or in case of purchase invoice is in the name of the agent, then agent is acting on behalf of principal and that agent is compulsorily required to get registered. Then T for TDS deductor. We have TDS concept in GST, but which is not there in syllabus, but in GST also there is TDS, and at CA final level you will learn. So that TDS deductor is also compulsorily required to get registered. Then next I, that is input service distributor. While discussing an input tax credit chapter, I told you there is a head office which will take the input tax credit and distribute the input tax credit to the branch offices. So that head office will be called as an input service distributor. So that input service distributor is also compulsorily required to get registered. O for OIDR supplier. Which OIDR supplier? Located outside India, making supply to non-taxable online recipient in India. We discussed that. Netflix, Amazon outside India, when we subscribe, we will not pay GST. That Netflix or Amazon will pay GST. They need to compulsorily required to get registered. Then N, that is NRTP. NRTP is non-resident taxable person. What is the difference between casual taxable person and non-resident taxable person? Casual taxable person will come from other state to this state in order to make supply of goods or services. But non-resident taxable person will come from outside India to India in order to make supply of goods or services. Okay. So that NRTP is also compulsorily required to get registered. And yes, that is supplier of goods through e-commerce operator. So any person who is engaged in supply of goods, not services. So because we discussed supplies through e-commerce operator, supplier of goods through e-commerce operator is only compulsorily required to get registered, but not supplier of services through e-commerce operator. So these are the cases where a person is compulsorily required to get registered. Come on, I don't see your book. I is interstate supply of taxable goods other than handicraft. C, casual taxable person other than handicrafts. R, recipient liable to pay GST under RCM. Which one? 9(3). Then E, e-commerce operator. A, agent acting on behalf of principal. T, TDS deductor. Another I, input service distributor. O, OIDR supplier located outside India making supply to non-taxable online recipient in India. N, non-resident taxable person. Then yes, supplier of goods through e-commerce operator. So these are the cases where compulsory registration is applicable. Now I'll give you one peculiar situation. Say this. There is an advocate. Please concentrate, pa. There is an advocate. Advocate is making some outward supplies. Advocate is making some outward supplies, which is covered under RCM. Advocate is making some outward supplies which is covered under RCM. So who will pay GST? Recipient, business entity will pay GST. Correct? Now, advocate is having some inward supplies. Advocate is having some inward supplies, and that inward supplies is also covered under RCM. So on this, who should pay GST? Advocate should pay GST. Now, as advocates outward supplies fully covered under RCM, they are exempted from registration under section 23. As they have inward supplies under RCM on which they need to pay GST under RCM. We have no inward supplies under RCM. Lot of things are there. So what is that? So sir, CG got salads. Big list is there. So therefore, as they have inward supply on which they need to pay GST under RCM, as per section 24, they need to compulsorily get registered. Now, which section will prevail? Section 24 or section 23? 23 will prevail. So, which means they are exempted from registration. So, even though as per section 24, they are compulsorily required to get registered, but section 23 overrides section 24, which means if they are exempted from registration, they are exempted from registration. Even though they are covered under compulsory registration, they are not required to register, because section 24 uses the word notwithstanding anything contained in section 22. They did not use the word notwithstanding anything contained in 23. That's the reason why 23 is an independent section. So 23 will override 24. And this even given in the Finance Act 2023. So recently, so March Finance Act, so February Finance Act came. So in that Finance Act, they made this amendment. So therefore, whatever we are learning is correct. But specifically, this amendment is made. Okay. So that section 23 will override section 24 like that. But for your exam also, it is applicable. It is applicable from the beginning. But there were difference in thought. And people were not agreeing, no, 24 only will prevail. For that only, government has clearly given a clarification that 23 will only override 24. So now, please make note of that information here. In section 23, you write down, section 23 overrides section 24. Somewhere here you write down, section 23 overrides, section 23 overrides section 24. Section 23 overrides section 24. So which will prevail? Section 23 only will prevail. So we completed section 22, 23 and 24. 22 who are required to get registered. 23 exempted from registration. 24 compulsory registration. Then we are moving on to section 25, that is procedure for registration. Now after these three sections, 22, 23 and 24, we have next three sections. Section 25, which talks about procedure for registration. Section 26, deemed registration. Section 27, special provisions for CTP and NRTP. Okay, these three sections are not important for case study type questions, but for practical, like this MCQs. MCQ questions, case study type questions or practical questions will not come. Mainly in MCQ it will be tested. Mainly in MCQs it will be tested. So section 25, procedure for registration. So here you see, first of all, every registered person will get a GSTIN. That GSTIN is a dash digit number, 15 digit number. In that 15 digits, first 2 digits is what? State code. Next 10 digits is permanent account number. And next one will be entity code, that is 1 if it is your first registration. And thereafter alphabet Z constant. And last will be a checksum digit, that can be alphanumeric. So these are the 15 digits that we will have GSTIN. And a person should obtain registration in every state from where he makes taxable supply. But within the state, is registration required if you have multiple places of business? Within the state, optional. Either you can go for single registration by showing one place as your principal place of business and other place as your additional place of business. Correct? Or you can go for separate registration with respect to each place of business. Then look into the procedure for registration in page number 148. 148, you can see what are the forms involved in registration. So these forms you need to remember. Again in MCQ it will be tested. So application for registration is in which form? 1. REG1. Total 6 forms are there. You need to remember the purpose. REG1, application for registration. Once you make application, they will give an acknowledgement, that is REG2, acknowledgement. REG3, notice. Suppose if you make an application and if you have not given proper details, they will be giving notice in REG3. Then REG4, reply to the notice. REG5, rejection of application. REG6, certificate of registration. Once again, REG1, REG2, acknowledgement. REG3, notice. REG4, reply to notice. Good. REG5, rejection of application. REG6, certificate of registration. In this, all the time limits are 7 working days. That is, what is the time limit within which you will get notice from application? 7 working days. So within 7 working days, we will get notice from the date of application, or within 7 working days, we will get a certificate of registration. So once we make application for registration, either we will get a notice or we will get a certificate within 7 working days. Understood? Suppose if we get a notice, we need to give reply to the notice. What is the time limit within which we need to give reply to the notice? 7 working days. Again, after giving reply to the notice, within 7 working days, either they will give registration certificate or they will reject the application. Understood, pa? And acknowledgement will be immediate. Once you make application, immediately you will get acknowledgement. Then, what is the time limit within which a person should make application for registration? Already we studied that. Within 30 days from the date when a person is liable for registration. Then, whenever we make application for registration, we have an option called as Aadhaar authentication. We can select the Aadhaar authentication or no need to select Aadhaar authentication. Suppose, if you select Aadhaar authentication, which means, so once you submit the application REG1, then we will get a Aadhaar link, and in that Aadhaar link, we need to enter our mobile number OTP and email OTP. So once we enter that OTP, Aadhaar authentication is completed. The day when you complete the Aadhaar authentication, that date only called as the date of submission of application. Is it clear? So it is not the date when you submit the application really. So when it will be called as date of submission of application, pa? Date of completion of Aadhaar authentication. So option 1, Aadhaar authentication. After submission of part B of REG1, an authentication link will be sent. Now you need to enter the Aadhaar OTP, and once you enter Aadhaar OTP, means application is filed. From that date, within 7 working days, so you will get registration certificate, correct or not? Else, deemed registration. Are you getting? What the meaning of deemed registration? Thereafter, they cannot reject the application. So within 7 working days, either they need to give, notice, or they need to give certificate of registration. Suppose you made application for registration. Within 7 working days, neither you got a notice nor you got a certificate of registration, which means deemed registration. But we will not have number. But thereafter, they cannot reject the application. They have to grant the registration certificate. That is the meaning of deemed registration. Okay. Then, next, suppose if you fail to authenticate the OTP, what is the time limit that we have to complete the authentication? 15 days. We will have 15 days time to enter the OTP. Suppose if you fail to complete the OTP verification within 15 days, then within 15 days from the date of application, okay, so then the application is deemed to have been filed on expiry of 15 days without Aadhaar authentication. Got it? After 15 days, even though you submitted the application with authentication, as you did not complete the authentication within 15 days, on expiry of 15 days, it is deemed that you made an application after 15 days without Aadhaar authentication. Now, suppose if you make application without authentication or made application with authentication but not completed authentication within 15 days, in these two cases, they will grant registration only after conducting physical verification at the place of business. So the officer will come, will verify the premises, and then only they will give registration certificate. What is the time limit for that? 30 days. 30 days. Now, in case you make application for registration with authentication and not completed authentication within 15 days, the 30 days will be counted after 15 days. Is it clear? Which means, what is the overall period? 45 days. First 15 days we should complete OTP, authentication. Otherwise, next 30 days, they will check the premises and they will give registration certificate. Suppose if you make application itself without authentication, from the date of application itself within 30 days, we will get. So it is not 45 days now, only 30 days. Then, suppose within the 30 days, if proper officer failed to complete the physical verification and give registration certificate, then also we have deemed registration. Now, we have deemed registration totally in 4 places. Okay. Now, so listen carefully. First, you have completed the authentication, means you submitted the application. Within 7 working days, neither notice nor certificate of registration, then it is deemed registration. Can you tell me what is it? Come on. Authentication completed and neither notice nor certificate of registration within 7 working days, then it is deemed registration. Now, second point, you submitted application with authentication, that is authentication completed, and you got a notice. After notice, you gave a reply to the notice, and within 7 working days, neither rejection of application nor certificate of registration, then also deemed registration. So tell me, second deemed registration, after reply to notice, neither rejection nor certificate of registration within 7 working days, then also deemed registration. Now third, you made application with authentication. Authentication not completed within 15 days. Thereafter, within 30 days, they have not given registration, then also deemed registration. Got it? Then 4, you made application without authentication, and after application within 30 days, they have not done physical verification and given registration, then also deemed registration. Got it? 4 points you understood? So these 4 points are only called as deemed registration, which you can see in page number 150 and mark it as important for short note. Deemed registration. See that Aadhaar authentication completed, neither REG3, what is REG3? Notice, nor REG6, certificate within 7 working days. Then second, Aadhaar authentication completed, neither REG5, what is REG5? Rejection, nor REG6, certificate within 7 working days from the date of reply to notice. Then Aadhaar authentication not completed within 15 days, and so thereafter, after expiry of 15 days, within 30 days, they did not grant registration, then also deemed registration. Aadhaar authentication not opted, you did not opt for Aadhaar authentication, and registration is not granted within 30 days, then also deemed registration. Clear or not? So this can be given as a short note question part, deemed registration. Now, look into illustration 5. So on this deemed registration, how we will get MCQs? See this, part B filed on 25/5/2021 without selecting Aadhaar authentication. Without selecting Aadhaar authentication means what is the date for deemed registration? 30 days. Assume all days are working days. So count the 30 days and tell me. 25/5. So in May, 6 days. In May, 6 days. And in June, 24 days. So 24 June will be taken as the 30th day. So therefore, by 24 June, if they are not giving registration, then it is deemed registration. Correct? Then next, illustration 6. Part B filed on 25/5/2021 by selecting Aadhaar authentication, and such authentication is completed on 3/6, up to which date registration may be granted, failing which deemed registration. Assume all days are working days. So what is the date on which you completed authentication? 3/6. So from 3/6, what is the time limit by which you need to get registration certificate? 7 working days, assuming all days are working days. So from 3/6, 7 days is what? 10/6. So by 10/6, we need to get registration, otherwise deemed registration. Then illustration 7. Part B filed on 25/5/2021 by selecting Aadhaar authentication, but failed to complete the authentication. Okay. Up to which date registration may be granted, failing which deemed to be registered. So you did not complete authentication. So overall you need to take 45 days. So count 45 days from 25/5. So 25/5 in May, 6 days, and in June 30 days. So what is the balance? 9 days. So therefore 9th July. By 9th July, if they are not giving registration certificate, then it is deemed to be registered. Is it clear? First 15 days for completion of authentication. Next 30 days for registration. Otherwise, deemed registration. Then illustration 8. Part B filed on 25/5/2021 by selecting other authentication. Such authentication is completed on 4/6. But officer gave a notice in REG 3 on 8/6 and thereafter replied to notice in REG 4 on 13/6. Up to which date registration may be granted, otherwise deemed registration. When you gave reply, 13/6. From 13/6, what is the time limit within which they need to either reject application or give registration certificate? 7 working days. Assume all days are working days, which means 26. By 26, we need to get registration, otherwise deemed registration. Okay? Clear here? Now, suppose if you make application beyond 30 days, what is the consequence? 18(1)(a) we studied. 18(1)(a). So please check 18(1)(a) in your book. 18(1)(a). 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 Availment of ITC on closing stock. So 18(1)(a), what is the heading it says? Liable to get registered and make application for registration within 30 days. Suppose if the application for registration is not made within 30 days, whether we get that 18(1)(a) benefit? No. So therefore, what is the consequence of not making application within 30 days? We cannot avail the ITC on closing stock. Also, there is one more concept called as revised tax invoice. Revised tax invoice means, say, I am liable to get registered today and I get the registration certificate after some time, correct? Today I will not get registration certificate because whenever I am liable to get registered, thereafter I need to make application for registration within 30 days. Thereafter I will get a registration certificate. Then only I can collect GST from my customer. Got it? But until that point of time, will I make sales or not? Yes. But can I collect GST from my customer? No. But I can give a revised tax invoice for the sales made during this period. After the date I get the registration certificate, I can give a revised tax invoice and collect the GST with respect to sales made during the period liable to get registration till the date of certificate of registration. But this revised tax invoice also we cannot give if the application is not made within 30 days. So what are the two consequences of application not made within 30 days? Come on. ITC cannot be availed on closing stock and revised tax invoice cannot be issued to collect the GST. Okay. Now, that is this illustration 9. Mr. A commenced business on 15/5/2021 and crossed threshold limit on 30/6/2021. He submitted Part B of RAG1 on 25/7 by selecting other authentication and that authentication is completed on 31/7. Can Mr. A issue revised tax invoice if registration certificate is granted on 2/8/2021? Sir, when he is liable to get registered? 36. And when the authentication is completed, is it within 30 days or beyond 30 days? Beyond? As the authentication is beyond 30 days, because what should be taken as the date of application? Date of authentication will be taken as the date of application. As the authentication is completed beyond 30 days, so can they give revised tax invoice? No. And can they take ITC on closing stock? No. That is this. So what is the date of submission of application? 31/7. And which is beyond 30 days from the date on which A is liable to get registered. Therefore, they cannot give revised tax invoice and even they cannot avail ITC on closing stock. So this is the consequence of other authentication not completing on time. Then next, who are not required to do other authentication? Please come back to page number 150. So what is considered as the date of submission of application? The date of authentication is taken as the date of application or 15 days from the date of submission of Part B, whichever is earlier. Because within 15 days, if you are not completing authentication, then also the date on which 15 days expires is date of application without authentication. Who are not required to comply with this Aadhaar authentication? Not a citizen of India. Why? First of all, they will not have Aadhaar number. They are not a citizen of India. Partners other than authorized or managing partner. Why? Because authorized or managing partner will undergo authentication. That is enough. Remaining partners not required. Understood? So in a partnership firm, if there are 3 partners, not all 3 partners are required to undergo authentication. Out of these 3, any one partner will be managing partner or authorized partner. That partner alone have undergo authentication enough. So other 2 partners not required. Then members other than Karta of HUF. Why? Because Karta will undergo authentication and other members are not required to undergo authentication. Then members of any company or body corporate or entity other than authorized signatory. Why? Because authorized signatory will undergo authentication. So remaining members are not required to undergo authentication. Okay? First 4 points. Tell me. Not a citizen of India. Partners other than managing or authorized partner. Members other than Karta of a HUF. Members other than authorized signatory of any other person. Then next 4 is government and its family members. Central government, state government department, local authority, statutory body, public sector undertaking. So these are all part of government only now. So they are not required to undergo authentication. Then last, UIN holder. Who is UIN holder? UN embassy or consulate or UN agencies we discussed now. Foreign diplomatic mission. That foreign diplomatic mission located in India is exempted from payment of GST. So for them, one identification number will be given to get the refund of GST paid on inward supplies. So they are called as UIN holders. So who are UIN holder pa? UN agency, embassy or consulate. So these people are also not required to undergo authentication as they do not belong to India. So total 9 points you need to remember. Very, very important for short note. Who are not required to undergo authentication? Come on. First, not a citizen of India. So partner other than authorized or managing partner. Members of HUF other than. Then members of a person other than authorized signatory. Then next 4. CGSG, local authority, statutory body, public sector undertaking. Then last. So these 9 people are not required to undergo authentication. So that is about Aadhaar authentication. And look into the next area, furnishing of bank details. Page number 152. But these are all will be tested as MCQs here. Okay. See, I don't know whether you will be reading this separately or not. So the advantage is once you listen once in the class, thereafter you don't have to read it. Just if you revise it is enough. So because if it is coming in MCQ, so at that time directly you will be able to arrive at the answer. So that's why I am discussing everything, every point. So you might be feeling bored or you feel like, okay, why is it teaching all these things? So I am not teaching this because, I have to teach. There is a purpose. Every point which I am telling, so if not for practical question, at least in MCQ it will be useful. But whether you like or not, I want you to get minimum 38 out of 40. That is my expectation. Okay. So that's the reason why everything I am telling. Okay. So because some students, they are getting up and leaving. So therefore, if okay, fine, but tell to them that at least in the YouTube, ask them to watch it once. Okay. Because these points and all, if you are not reading and sitting in the exam hall, you will not be able to find it. That's why. Then it's okay. Anyhow, you did not pay fees. I am taking the class. But even then, you are free to go. You are free to come. You are free to go. But if you are leaving because some business meeting or some very, very important work will be there. So who am I to stop you? You can go, but ensure that at least in the YouTube you are revising it or you are reading it once. Okay. Then furnishing of bank details. Bank details needs to be furnished. So within 45 days from the date of registration or due date of filing 3B, whichever is earlier. So listen, at the time when we make application for registration, we need to give the bank details, but we may give the bank details later also. So not mandatory that we need to give bank details at the time of application. At a later point of time also we can give. But what is the time limit within which we need to furnish the bank details? 45 days from the date when we get registration certificate or due date of filing 3B, whichever is earlier. Now, so definitely due date of 3B is only earlier. No, not necessary. For example, you see below, registration granted on 3/11/2020. So means, what is 45 days from 3/11/2020? In November, 27 days. And in December, the remaining days. That is 45 minus 27. 18. So 18 December 2020, or for November month, when you need to file 3B, 20th of December. So whichever is earlier, so 18th of December will be taken. Suppose if you get the registration on 18/11/2020, you count 45 days. In November, 12 days, and in December, 30 days. So then we have 2 days in January. So 12 plus 30. Sorry, December 31. So November 12 days, December 31 days. So therefore 43 days. So in January 2 days. Therefore 2nd January 2021 is 45 days. Or for November month, what is the due date of filing 3B? 20th of December. Whichever is earlier. So 20th of December will be taken as the earlier date. By that time we need to furnish bank details. What will happen if the bank details are not furnished within this time? If bank details are not furnished within the time, that is one of the reason for cancellation of registration. We have something for as cancellation of registration. In that cancellation of registration, not furnishing the bank details within the time limit is one of the reason. Do not furnish bank details within the specified time is one of the reason for cancellation of registration. Is it clear? So what is the consequence of not furnishing the bank details within 45 days or due date of 3B, whichever is earlier? It leads to cancellation of our registration. Then next, what is the time limit for making application for registration? Already we studied, application for registration should be made within 30 days. Suppose if I am compulsorily required to get registered, whenever I commence a business from there within 30 days. If my aggregate turnover exceed threshold limit, as and when my aggregate turnover exceed threshold limit, from there within 30 days. Suppose if I am transferring the business within 30 days from the date of transfer. If it is amalgamation or merger, within 30 days from the date of certificate of incorporation. So all these is 30 days from the date when I am liable to get registered. But we have an exception. Only in one case, we need to make application for registration at least 5 days before commencement of business. That is CTP and NRTP. That alone you need to remember. CTP and NRTP should make application for registration at least 5 days before commencement of business. But all other cases within 30 days from the date when they are liable to get registered. So we completed section 25 and 26. 25 procedure for registration, 26 deemed registration, 27 special provisions relating to CTP and NRTP. So far, what we have learnt about CTP and NRTP, you tell me, what are the provisions we learnt for CTP and NRTP? CTP and NRTP is compulsorily required to get registered. Good. Then they need to make application for registration at least 5 days before commencement of business. Now, what is the type of registration that is granted to them? It's a temporary registration. for how many days it will be given? Up to 90 days. Means if they are asking for 60 days, 60 days. If they are asking for 120 days, 90 days. So first up to 90 days. Can this 90-day period be extended? Yes. It can be extended for a further period not exceeding 90 days. Means at a stretch, for how many days they can get registered? 180 days, not more than that. And thereafter also, if they want to continue in the business, then they need to go for a permanent registration. They cannot continue in registration as a CTP, NRTP. See that. Registration validity is maximum 90 days plus 90 days. So first, they have to make application for registration, and that application will be maximum for 90 days. On sufficient cause being shown, that can be extended for a further period not exceeding 90 days. Then, during the time when they are registered as CTP, NRTP, they have physical place of business or they don't have physical place of business? They don't have physical place of business. So, they may remove, like they may go out of that state anytime, correct? They don't have physical place of business and they will be living on a temporary place. Anytime they can vacate that place and go, correct? So then it is difficult to collect the GST from them. That's the reason why they should pay the advance tax. So means with respect to their estimated net tax liability, they need to compute how much could be my turnover and how much could be my ITC. So estimated net tax liability, they need to deposit as advance tax. This advance tax will be deposited in electronic cash ledger, will be adjusted against their liability. Still, if there is a balance in electronic cash ledger, they will get it as a refund. If there is any shortfall, they need to pay that amount. Okay? See this. A CTP NRTP shall at the time of submission of application make advance deposit of tax. And this advance deposit of tax is with respect to estimated tax liability. And suppose if the extension is sought for that extra period, again they need to pay the additional amount of tax as advance tax. And where this advance tax will be kept? Electronic cash ledger, which shall be adjusted against final liability. Got it? Then, distinguishing points between CTP and NRTP. So, what is the difference? CTP will come from other state to this state and is not having any physical place of business in the state, correct? So, in a state or union territory where you don't have physical place of business. But NRTP, outside India to India where he don't have physical place of business or residence in India. And both should be coming to the state or India on an occasional basis. If they are regularly coming, they will not be called as CTP, NRTP, means they need to get a normal registration. And CTP should do the business in the course, that is, should undertake transaction in the course or furtherance of business. But NRTP, no such requirement. CTP, as he is a person in the state, so in India, so definitely he will have a permanent account number. So using his permanent account number, he will get the registration. But NRTP is from outside India, means they will not have a permanent account number. So using their passport, registration will be granted. And CTP will make application for registration in REG1 and NRTP will make application for registration in REG9. And CTP will file a regular return, GSTR1 and GSTR3B. But non-resident taxable person, we have a special return, that is GSTR5. So maybe, so far not asked, but maybe they can ask a question, distinguish between CTP and NRTP, you need to write these points, okay. So we completed 25, 26 and 27. 25, procedure for registration. 26, deemed registration. 27, special provision for CTP and NRTP. Now, we are moving on to next three sections, that is section 28, that is amendment in registration. Section 29, cancellation of registration. Section 30, revocation of cancellation of registration. These three sections are useful for theory type questions plus MCQs, okay. So, there will be some theory questions asked on this and again in MCQs it will be useful. So first, section 28 says amendment in registration. 29, cancellation of registration. 30, revocation of cancellation of registration. Please listen once. So enough, if you are listening in the class, that is sufficient. So you don't have to read this again, okay? Because it is not that much important concept and all. So section 28, amendment in registration. So when there will be amendment in registration, any change in particular submitted at the time of registration, there will be amendment in registration. So what are those changes? What could change? Address could change in name, or change in the goods or services that you deal with, change in mobile number, or change in the top management, or change in email ID, change in bank account, correct? There are many changes that could happen from the time we start the business. Then in that case, all these changes divided into two, core field and non-core field. Three changes are considered as core fields. What are they? Change in name, change in address, and change in top management. These three are core fields. These three changes will happen in our registration certificate subject to approval by the proper officer. Clear? What are the three changes proper officer should approve? Change in name, change in address. Address can be principal place or additional place. Then change in top management. These three changes is subject to approval by proper officer. Apart from this, any other change, any proper officer approval required? No. By default, it will be approved. You understood? So the moment you change it, it will be changed in the portal that do not require proper officer approval. Understood, Appa? So now you need to remember what are the changes that requires proper officer approval. So three changes. What are they? Change in name, change in address, change in top management, that is change in managing director, change in karta, change in partners, etc. Then next, whether the change is prospective or retrospective. Prospective means what? With effect from the date, they will change. Retrospective means what? Today they make a change which will have an effect from a back date. So whether the change will be prospective or retrospective, always the change will be prospective. But if the commissioner approves, retrospective amendment is possible. Generally, amendment will be prospective, but if commissioner approves, it can be retrospective. Also, one important point you need to remember, if there is any change that leads to change in permanent account number, then old registration should be cancelled and new registration should be obtained. That is, in your permanent account number, the fourth digit. So fourth digit is actually constitution. Fourth digit in permanent account number is constitution. For example, you just run through your permanent account number. So it will be having P. Fourth digit will be P. For a company, it will be C. For a firm, it will be F. Now, individual converted to partnership firm. Partnership firm converted to company means they need to get a new permanent account number. So, new permanent account number means, so whether they can continue with the registration? No. They need to cancel the registration and they need to make application for new registration. Then, fifth digit is actually your name first alphabet. Name first alphabet. Your first name will be there na, that first alphabet. Just run through your permanent account number. So wherein, so after P, your first name, first alphabet will be the next digit. Suppose if it is a company, XYZ Motors. XYZ Motors, definitely the fifth digit will be X. Now, XYZ Motors is changed to XYZ Automobiles. Change in name. Will that lead to change in permanent account number? No. So, we can make amendment in registration, change in name. Suppose if XYZ Motors is changed to ABC Automobiles. Now, in that case, the first name changes. So, therefore, we need to get a new permanent account number. Then, in that case, so we cannot make amendment in registration. So, we need to cancel the registration and get a new registration. Now, you tell me, which will be the priority? Cancelling the old registration and getting new registration, or getting new registration and then cancelling the old registration? Which should be correct? Getting new registration and then cancelling the old registration is only correct, because if you cancel the old registration first, ITC will be lapsed. If you are getting a new registration, you can transfer the ITC and then cancel the old registration. Is it clear or not? So, first, obtain new registration. Obtain new registration. Obtain new registration. And then transfer ITC from old registration to new registration. Old registration to new registration. Transfer ITC from old registration to new registration. Then 3, cancel old registration. Cancel old registration. Obtain new registration, transfer ITC from old to new, and then cancel old registration. Then next, procedure for amendment in registration. We need to make one application for amendment in registration, that is REG 14. What is the time limit within which we need to make application for registration? Within 15 days. Within 15 days we need to make the application for amendment. Once we make application for amendment, thereafter, so within 15 working days, they will be giving a notice. When we make application, 15 days. When they give notice, 15 working days. There is a difference there, okay? 15 working days. And after notice, in REG 3, we need to give reply. Usually what is the time limit within which we need to give reply? 7 working days. So we need to give reply within 7 working days. And thereafter, after reply within 7 working days, they will take 7 working days either to pass an order or reject the application. Okay, they will reject the application within 7 working days. If they are not rejecting, they will pass the order. Understood? So what are the 3 time limits we need to remember? Application for amendment, 15 days. Thereafter, notice or order within 15 working days. Notice given, reply within, and after reply, they will either reject the application or give order within. Okay, and application in REG 14. Application in REG 14. Amendment application. And remaining forms are same old forms. Notice in 3. Reply to notice 4. And rejection of application REG 5. Then look into the next area, cancellation of registration. So we completed 28, amendment in registration. Now we are moving on to 29, cancellation of registration. So when there will be cancellation of registration, total 8 situations there will be cancellation of registration, and we have some amendments in this place. First, so 3 cases, either application can be made by registered person or proper officer can initiate cancellation. Transfer or discontinuance of business. See, when you will make application for cancellation, if you transfer the business, you will make application for cancellation or discontinuance of business, or you are no longer liable to be registered. Means what? Your aggregate turnover falls below threshold limit, or there is a change in constitution of business, that is change in permanent account number, firm to company or individual to firm, etc. So these are the 3 cases. It is very important for theory. So they will be directly asking what are the situations where a person's registration can be cancelled. So total 8 points we need to remember. So please concentrate, listen. So there are first 3 cases where registered person can make application for cancellation or proper officer can initiate cancellation. What are those 3 cases? Come on. Transfer or discontinuance of business, change in constitution, no longer liable to be registered. Once again, transfer or discontinuance of business, change in constitution, no longer liable to be registered. Then next 5 cases, proper officer will initiate cancellation. Registered person will not make application for cancellation, but proper officer will initiate cancellation. So those 5 cases are like 2 cases related to returns. First, you are under composition scheme. You need to file an annual return. So that annual return needs to be filed within 3 months after due date. If it is not filed, so person opting for composition scheme not filed annual return. This 3 consecutive is not there. This 3 consecutive is omitted. So not filed annual return within 3 months after due date. What is the due date of annual return? April 30th. So a person opting for composition scheme is required to file annual return in GSTR 4. That GSTR 4 needs to be filed by 30th April of the succeeding financial year. By 30th April of the succeeding financial year, if we have not filed, still what is the time limit we have thereafter? 3 months. So in that 3 months, if you file, okay. If you are not filing in 3 months after due date, then that will be a reason for cancellation of registration. Then suppose if you are registered under normal scheme and you have not filed returns for 6 consecutive months or 2 consecutive quarters, okay, continuous 6 months or 2 quarters, if you have not filed normal returns, then also registration will be cancelled. So related to returns, 2 points. What are they? You are under composition scheme and you did not file annual return within 3 months after due date. Then number 2, normal scheme. You are under normal scheme. You did not file returns for continuous 6 months or 2 quarters. Then next. So you have contravened the provisions of the act or rules. So what are those contraventions of the provisions is given below. But some provisions you have contravened. Okay. Means you committed certain offences. Then you have obtained registration by fraud. Means what? You gave the fake details and you got the registration. Then you obtained voluntary registration and not commenced business within 6 months. So that is voluntarily you got registered and you should have started the business within 6 months, but you did not start business within 6 months. These are the 5 cases where proper officer will initiate cancellation. Now, total 8 points you need to remember. So what are these situations? What are these situations that leads to cancellation of registration? Come on, what are the 8 points? Number 1, transfer or discontinuance of business, change in constitution, no longer liable to be registered. Then returns, composition scheme, not file annual return within 3 months after due date. Then normal scheme, not file continuous 6 returns or 2 quarterly returns. Then contravention of provisions. Then 2 more points. Fraud, registration obtained by fraud. Then you did not commence the business within 6 months after obtaining registration. So voluntary registration. These are the 8 points you need to write when you get a question. What are the situations that leads to cancellation of registration? Now another theory question is possible. What are the contravention of provisions that leads to cancellation of registration? Total 7 points are there. So these 7 points you need to write. Don't interchange and write. You will not get 1 mark also. When they are asking what are the contravention of provisions that leads to cancellation of registration, don't write 8 points. If you write those 8 points, answer is like correct, but not for this question. Okay. For the question, that answer is wrong. So therefore 1 mark also they will not give. So what are the contravention of provisions that leads to cancellation of registration? 7 points, easily we can remember. 3 wrong things. 3 wrong things, that is wrong invoice, wrong ITC, wrong address. What's the meaning of wrong invoice? You have not given the invoice with proper details. Okay. Then wrong ITC. You have not availed the ITC as per section 16, conditions for availment of ITC. Then wrong address. You are not doing business from the place where you have obtained registration. Okay. Don't write wrong invoice, wrong ITC, wrong address. You have to explain that and write. Okay. So what are the 3 wrong things, pa? Wrong invoice, wrong ITC, wrong address. Okay. Say this. Does not conduct business from the place where they have obtained registration, issues invoice in contravention of the provisions of rules, then avails ITC in contravention of section 16. That is wrong address, wrong invoice, wrong ITC. Then three violations. Number one, violates furnishing bank details. You have to furnish the bank details, but you did not furnish the bank details. Violating the provision of furnishing the bank details. Then violates anti-profiteering provisions. Anti-profiteering means whenever you try to increase your profit by not passing on the benefit to the customer. So whenever you are not passing on the benefit to the customer by way of reduction in rate of tax. Reduction in rate of tax means what? Here previously I was selling a product which was taxable at 12%. Now the product rate has come down to 5%. Means I should have reduced the price now to my customer, but I did not reduce my price. So which means I retained the same price. Means previously 12% rate of GST, whatever was the price, now under 5% also I made the same price, because of which what will happen to my profit? My profit will increase. Suppose if my profit increases, is it genuine or not genuine? Not genuine. So then there is one authority called as anti-profiteering authority. That anti-profiteering authority will pass an order. If I violate that order, then also it will lead to cancellation of registration. So violation of furnishing bank details, violation of the provisions of anti-profiteering, and violation of Rule 86B. What is violation of Rule 86B? I have to pay 1% of my gross liability through electronic cash ledger. If I am not paying 1% of my liability through cash ledger, so then I am violating that provision. Then also it will lead to cancellation of registration. So tell me first three wrong things. Wrong invoice, wrong address, wrong ITC. Super. Three violations. Violation of furnishing bank details. Violation of anti-profiteering. Violation of payment of 1% through cash ledger. Then last one more point, that is liability in GSTR1 greater than 3B for one or more tax periods. When it will happen? You reported more liability in GSTR1, but you paid less amount in GSTR3B. Then ITC in 3B is greater than ITC in 2B for one or more tax periods. When it will happen? You are taking more ITC than in 2B. So in this case also registration will be cancelled. These are the 7 situations that leads to cancellation of registration. Correct? No. 7 provisions which contravention of which it leads to cancellation of registration. But situations are 8 situations. Then whenever they initiate cancellation of registration, or whenever you make application for cancellation, the first thing that they will do is suspension of registration, because you make application for cancellation, not that immediately I am waiting for you only, so I will cancel, like that. They will not cancel. They will ask why you want the registration to be cancelled. So you will specify a reason. My turnover is fallen below the threshold limit. Now they will check your turnover. So all these things will take a time now. Until the point of time, so until the conclusion of cancellation proceedings, our registration will be suspended. Same way, when the officer initiate cancellation of registration, first he will give a notice, and till the time he conclude the cancellation proceedings, so the registration will be suspended. Is suspension of registration means cancellation of registration? No. Suspension of registration means temporary activity. For example, there is a police officer. That police officer has committed an offence. When police officer committed an offence, so he will be suspended from his duties. But is he still a police officer? Yes. Only when he is dismissed, he is not a police officer. Like that, whenever your registration is suspended, are you still a registered person? Yes. But you will behave like a unregistered person. The moment your registration is cancelled, you are officially called as a unregistered person. Understood or not? So, suspension of registration is mandatory or optional? Read that paragraph and tell me. Once a registered person has applied for cancellation of registration, or the proper officer seeks to cancel his registration, the proper officer may suspend his registration. May suspend his registration means it is optional. Now, suspension of registration requires any notice? No. Suspension of registration can be without affording any reasonable opportunity of being heard. Means what? Notice is required for suspension or notice is not required for suspension? Notice not required for suspension. Notice not required for suspension. Notice not required for suspension. Now, what is the period for which our registration will be suspended? Where the registered person has applied for cancellation of registration, the date he made application or the date selected in the application, whichever is later till the conclusion of cancellation proceedings. For example, I am making application today, say 31st March I am making application and I selected 5th of April. So from when the registration will be suspended? 5th of April. Suppose if I make application today, 31st March, I selected 1st of March, okay. So which will be the date of suspension? 31st March. So whichever is later, the date on which I make application or the date selected in application, whichever is later, till the officer conclude the cancellation proceedings, my registration will be suspended. This is when the registered person is making application for cancellation. When proper officer initiates cancellation of registration, when proper officer initiates cancellation of registration, he will specify one date. So from that date till the conclusion of cancellation proceedings, our registration is suspended with effect from a date to be determined by him, by the officer, pending the completion of cancellation proceedings. What will happen during this period of suspension? During the period of suspension, on my outward supplies, I cannot collect the GST from the customer. Means, can I give tax invoice? No. On my inward supplies, I cannot avail ITC. Means, can I file the return GST or 3B to avail ITC? No. This is the consequences during the period of suspension. So, what are the two consequences during the period of suspension? Come on. So, we cannot give tax invoice for outward supply and we cannot file return for availment of ITC. So now, whenever you get a question on suspension of registration, you need to write these points because already in Jan 21 they asked this question for 5 marks. So what are the things that you need to write? First, meaning of suspension of registration. Whenever a person is making application for cancellation or proper officer initiates cancellation, the proper officer may suspend the registration of a person. And registration of a person can be suspended without giving any notice. First point. Second point, period for which registration will be suspended. If application is made by registered person, from the date selected by the registered person or the date of application, whichever is later, till the conclusion of cancellation proceedings. If proper officer initiates cancellation, from the date selected by the proper officer till the conclusion of cancellation proceedings. Second point, you will write that. Third point, you will write, during the period of suspension, a registered person cannot collect GST by issuing tax invoice, cannot avail ITC by filing returns. Clear? So these are the informations that you need to write. Then next. Now there is one amendment in this place, that is, whenever the registration is suspended, during that suspended period also, I can file the returns. But for which period? Suspended period, prior period. For example, March, they have suspended my registration. Now, March month, during my registration is suspended, I should not file returns. That's what we learnt. Correct? For which period? March. But up to February, I should have filed some returns. That can I file? Yes. Now, non-filing of returns is one of the reasons for cancellation of registration. Am I right? I did not file returns from previous year previous year August to March. Okay, that is February. Previous year August to February, I did not file returns. August, September, October, November, December, Jan, February, March. So February, 7 months. So more than 6 months, I did not file returns. So what proper officer will do? Continuous 6 months, I did not file returns. What they will do? They will initiate cancellation of my registration. Okay, va? Now, first step, what they will do? Suspend my registration. And when they suspend my registration, in March, still I can file returns. Of which period? August, September, October, those periods, I can file return now. If I file those returns now, actually why they have suspended my registration? Because I did not file returns. If I file those returns, the suspension will be automatically revoked and no need to cancel the registration. Is it clear? This is the amendment. So, show cause notice is issued for cancellation of registration for non-filing of returns and they initiated suspension. From the date they initiated suspension till the conclusion of cancellation proceedings, if you are filing returns during this period. So when the registration is suspended, you cannot file the returns of suspension period. But which returns we are filing? Prior to the date of suspension, then automatic revocation of suspension. And suppose if I am not filing these returns, what will happen at the conclusion of cancellation proceedings? They will pass a cancellation order or they will drop the show cause notice. Suppose if they pass a cancellation order, then what should I do? Still, I can file returns. So after cancellation order also, I can still file the returns. That is known as revocation of cancellation of registration section 30. That is, after they passed a cancellation order, I have to make an application for revocation by filing all the pending returns. You understood? So, submit application for revocation of cancellation within 30 days from the order of cancellation. This 30 days can be extended for a further period of 30 days by additional joint commissioner, further 30 days by commissioner. So, by the time if I make application for revocation and file all the returns, okay, up to the date of cancellation, file all the returns, then my registration will be revoked, which means I can continue in the registration. Is it clear? But I don't have to wait till the time. Even before conclusion of cancellation proceedings also I can file the return. So they will not issue cancellation order. If I miss this, then they will issue cancellation order. After cancellation order, I need to make application for revocation. What is the time limit for application for revocation? 30 days from the cancellation order, which can be extended for a further period of 30 days by additional joint commissioner, further 30 days by commissioner. Now I made application for revocation. Before making application for revocation, what I should have done? All the pending returns should be filed. Now I made application. Thereafter, within 30 days, proper officer satisfied. They will revoke cancellation order. Means what? I will continue with the registration. Suppose if the proper officer is not satisfied, then they will give a notice. After they give a notice, I need to give reply to the notice. So what is the time limit within which I need to give reply to the notice? 7 working days. After that 7 working days when I give reply, so within 30 days from the date of reply, again proper officer satisfied, yes, they will revoke cancellation order. Otherwise they will reject application. So this procedure alone you need to remember. First what will happen? Over, we completed registration. So what will happen first? We will make application for revocation. Within time limit 30 days plus 30 days by additional joint plus 30 days by commissioner. Once we make application for revocation, thereafter proper officer will take 30 days for what? Either to pass an order for revocation or to give a notice. Once he give notice, what is the time limit within which we need to give reply to the notice? 7 working days. After we give reply to the notice, again they will take 30 days for what? Either to revoke the cancellation order or rejection of application. That's it. And whenever we got the revocation of registration, please listen. Before making application for revocation, we file all the pending returns. Now, from the time we make application for revocation till the time we get revocation order, some time will be there na, 30 days and all, correct? Means for that period, we have not filed returns. So that returns we need to file after revocation order within 30 days. But up to date of cancellation, I already filed returns. Now from the date of cancellation till the date of revocation of cancellation, I have to file returns after they revoke my cancellation order within 30 days. That point alone you remember. If cancellation is revoked, all returns pertaining to the period from the date of cancellation to the date of revocation of cancellation should be filed within 30 days from the date of order of revocation. And whenever we make application for cancellation and application for revocation of cancellation, Aadhaar authentication is must, because what these GST practitioners and article students are doing, suppose if they want to harass their principal, so these article students will have username and password of the client. So they will open username password of the client in the portal, they will make application for cancellation. You understood? So if the principal was not giving leave and all, they used to do this way, and they will say to the principal, sorry sir, like that. And principal will scold and it will be over in 10-20 minutes. But that principal will receive the scolding from the client. Okay. So therefore, due to that reason, many article students were doing that. That's the reason why whenever we make application for cancellation or application for revocation of cancellation, Aadhaar authentication must. So means even though portal you are going and doing, OTP will go to the mobile number of the client. Client will see the mobile number, immediately he will call. So what is this here? I did not make application for cancellation. So mainly for that reason only they brought this Aadhaar authentication there. Mandatory or optional apa? Mandatory. Only for registration it is optional. But for cancellation of registration and revocation of cancellation of registration, it is mandatory. So that's it. We completed registration.